I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Floodlights. Wow. 4K, the works. Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, and it's going to be a tough morning. Brace yourself because look at just a couple of things. You just have to look at the implied open. You have to look at the price of Brent, and it's all clear on that screen. 200 points down, Alex, and it's not surprising at all. Brent is back above 100. The Houthis have jumped into this fray.
Yeah.
So it's now not just the Strait of Hormuz. You have
the Red Sea as well.
The Red Sea as well, which is blocked. 2 Saudi tankers have been hit. Neeraj, you've come back after a couple of days, and it's just as bad as you can imagine.
Yeah, I mean, geopolitically, this is worse off than what it was in the past, right? But I wonder if some bit of the corrective move is behind us. The US tends to blink when the 10-year, not when anything else happens, but with the 10-year hits 4.7. We are at those levels and higher now. I wonder if this weekend brings about some downtones, if you will, even if they are not, how do you say, dependable. So let's see.
So we were speaking to a crude expert yesterday on the closing show, and what they were saying was that in the interim, when this the Strait of Hormuz was shut, they were using the Red Sea route to push more through. So normally it would not be as significant as the Strait of Hormuz in terms of
it has 5 to 7% of crude volumes going through.
Whereas Hormuz had 20%, right? So a lot of volume was shifted in the interim, which is why it was more significant. Now with both of those routes choked, which is what is pushing crude to where it is right now. And if it continues to remain choked for the next few weeks, because a lot of countries had increased buffers when things had eased out just a tad bit. So till August, we're okay. If it does not get resolved, then you're seeing crude upwards of 115, 120, 125.
Yeah, hopefully we don't go back to 120, but I tend to agree that they will have to blink. The US will have to blink, because think about it. There have been 12 straight days of attacks, and you know, US actually having all of those strikes on Iran. It's not deterred them yet. So at some point, I think the US is going to think about how much they want to double down on this. Nevertheless, the screens are not looking good this morning. US markets are tumbling in trade. They did tumble in trade as those tensions rise. a lot of results which came in didn't help. So Alphabet was down 7%, Tesla was down 15%, and all of that has dragged the markets further. If you pull up the indices, the Dow was down about 500 odd points, but it was the Nasdaq down 2.5% nearly in trade. Futures, let's look at futures, and might not be too much better. Yeah, pretty much just flat. US Treasury yields have spiked as inflation fears have risen. The 10-year is at 4.7%. This is the highest since the January of 2025, and definitely not a good idea for emerging markets including India. Oil prices have zoomed as Houthis, who are now essentially seen as Iranian allies, have said that they've struck 2 Saudi tankers in the Red Sea. The Brent, as a result, was at $100 mark. Let's just pull up the Brent for you. 100.22 is what I'm seeing right now on the screen. Asian markets have opened weak, and it's expected to stay in that direction. 3% down for the Nikkei. And as far as the India implied is concerned, we already told you, you're going to see maybe a 200-point downtick as we open, on top of an already weak set of trading days that we've seen through this week. It's been a tough week. David Roche, strategist at Quantum Strategy, joins us this morning. David, a very good morning to you from where we are here in Mumbai. But, you know, just trying to get a sense of how much worse this can get before it can get better, because eventually everyone knows that this is unsustainable. There will be some kind of another understanding, etc., etc. But are we expecting things to get much worse before that?
It depends on the timing of when America blinks and what the nature of that blink is. Let me just describe what the problem is. Normally, in happy days, which I'm sure you remember vaguely in the past, we got 20 million barrels a day out of the Middle East. At the moment, we're getting 3. And all of that is passing through the Suez Canal to the north. And if it goes to Asia, then it has to go the whole way around Africa. So it's tremendously disruptive. If you're getting 3 million barrels a day out of the Middle East instead of 20 and even 17, on the 5th of July, we were getting 17 because of the tankers coming out of the Gulf at that point. Okay, so at 3 million barrels a day, you basically have an oil deficit in the world. That's the amount by which supply is short of consumption of 18 million barrels a day. Now, why is that significant? It's significant because then you run out of inventories in the OECD, in many of the emerging markets, and this time in America by, let's say, the middle of September at the very latest. And that is where you get the scenario you've just been talking about of 125 million barrels a day. Okay, so that's where you are. And yes, that can get much worse, because that would be an absolute shortage of oil, which is worse than an increase in the price of oil. It has a much bigger impact on GDP and everything else. But you said, how could it get better? Well, I think it's very difficult. I think if the US makes any sort of a deal, and they've made, I don't know, how many deals are we at now? None of them work. Why? Because the Houthis, not the Houthis, but the Iranians want to control the Gulf, and they're going to go on fighting until they do control the Gulf. If they end up with a deal which allows them to control the Gulf, then it is they who decide which tankers move and which do not. So, you know, that's not good. You might get a bit more oil out of it, but you're going to get a lot more political instability, and the markets are going to continue to price that political instability as a risk premium into markets and into oil.
David, just to the point where this new front has opened up, right, and the Houthis coming through, the reason why the market was sanguine seemingly for some time was that the significance of the Strait of Hormuz was diminishing, because people were trying to find roundabout routes, and there was talk that in several months, maybe 6 or 7 months, there would be a final solution. But now that they've done this in the Red Sea, it's essentially a check move that says, now it's, you know, we're blocking off again. Is that how you look at it? And so therefore, there is no permanent solution that can be found at this point.
Well, look, put it this way. The Houthis have blocked the Red Sea to the south. If you take all the oil which was being pumped through the Yanbu pipeline during the period when the Gulf was totally blocked, you're looking at approximately 4 to 5 million barrels a day. The theoretical capacity is 7, but it doesn't get there. So 4 to 5 million barrels a day. Of those 4 to 5 million barrels a day, 2 went north through the Suez Canal to Europe, presumably, and 3 went south to Asia. And what you are now seeing is the Houthis have blocked the 3. Those 3 are now off the table, except for some exemptions being granted to Chinese tankers, 2 of them left. And we don't understand the principles behind that. But basically, the southern route, 3 million barrels a day, is gone. Now, as nothing's coming out of the Gulf, and only the 2 to 3 million barrels a day heading north through Suez are moving through the Red Sea, you basically are down to 2. Now, as nothing's coming out of the Gulf, and only the 2 to 3 million barrels a day heading north through Suez are moving through the Red Sea, you basically are down to 2 or 3 million barrels a day, plus 1 million barrels a day to 1.5 million barrels a day through 20 million barrels a day. We're now getting, let's call it 3 million barrels a day. And that's the nature of your problem. And it's not going to go away because the Houthis are allied with the Iranians, and the Houthis also have their own problem because the Saudi Arabians started to bomb Houthi airports in order to stop Saudi Arabia transferring arms by airlifting them into Houthi territory. So there's another conflict going on behind the conflict in which the Houthis are showing solidarity with the Iranians. So is this going to be solved anytime soon? No, it's not. And there are no quick solutions or alternative supply routes.
Well, imagine if this was a movie. Would it rival a Christopher Nolan masterpiece, if you will, in terms of complexity?
Okay, in terms of
complexity.
Sorry, I've just come off seeing Odyssey, so which is why I know.
No, but therefore, David, are risk-on bets off the table until this shows a glimmer of easing off? Because we were talking about it that the US 10-year is at 4.7. Usually they blink around these levels.
Look, I think the US is blinking anyway. In fact, it's blinking so fast that the president's eyes seem to be shut most of the time and not in contact with reality. So I would say to you that you and I, we can boil this down to very simple things. We can get up every morning. Are the tankers moving or are the tankers not moving? If the tankers are moving, fine. Then you get, your relief rally. It may not be because of the good solution. It may not be because the solution is permanent, but it will be because, something has unfrozen the shipping lanes. If the tankers are not moving, then this time round, you do not have an inventory flush to actually offset the loss of supply from the Middle East. In the last crisis a couple of weeks ago, you were getting loads of inventory rundown in the United States, in the OECD, in China, and of course from the tankers. Now you don't have that. So you don't have any more offsets. That means that we can only worry about one thing, which will decide where the markets are going. Every morning, check if the tankers are moving. It's as simple as that.
That's a good point. David, it must be said though, our eyes are wide open and so are yours, despite the fact that it's 4:30 where you are. So thanks so much for waking up bright and early for us. Pleasure having you as always. Let's talk about what happened yesterday in trade. And I kind of think that it sets up the blueprint for what will happen today. Of course, you're likely to see, based on what you've seen in the implied open, a gap down today as well. You had Indian equities that declined across the board as crude prices continued to rise. The Brent crude breached that $98 to the barrel mark in trade yesterday. As you saw just a short while back, it is now above that $100 per barrel mark. The Nifty 50 dropping 127 points, ended 62 points off the low point of the day. It found support at that crucial 23,800 mark, which will likely be broken at the start today. Auto majors, Bajaj Auto as well as Eicher Motors were the ones that led gains, and Hero MotoCorp from that pack was the top gainer in the auto index as a whole, 3.7% gains. Banks underperformed, with most Nifty Bank constituents falling. You had IndusInd Bank that dropped as much as 6% on brokerage downgrades, despite the fact that the numbers were actually pretty good. It more so because of the price action in the run-up to the results. Axis Bank, SBI both dropped over 1.2%. The broader markets lost ground and underperformed the benchmark. In fact, the broader market gauges ended near the low point of the day. The mid-cap index losing 1%, small-cap index down as much as 1.2%. Now, the only question is that immediate support in the range that we've been in for so long, I think since the start of June, pretty much 23,800 to 24,200 or 300 thereabouts, is likely going to be broken on the downside today. What happens after?
Yeah, but you know, I think the good part about crude being at 100 or crude being at 70 versus crude being at 80 is that it gives you a clear message. Crude at 100, which means any major long trade is off the table. You don't want to be a clarity. Yeah, it's just clear from a trader's perspective, because you don't need to trade every day. You don't need to make those small bucks every day. Just bide your time. Be on the sidelines. You don't want to really go out and take any major long trades with crude prices being what they are, considering what impact it has, if not otherwise, then sentimentally on the markets, right? You may argue that, oh, India has come a long way from the crude sensitivity. Sure, but for now, crude at 100, which means risk factors are against you. So don't go out and be a brave heart. But the good part also is that the US 10-year E levels, as I said, and PCR post today's fall may actually give support. From where we are right now, if PCR goes down post today's fall to 0.6, a level between 0.5 and 0.6, that's usually a great support level for Indian markets. So bear that in mind if you want to go out and do a large short as well, that some of the technical factors post a corrective move today might be against you from a historical trend perspective. I wonder if tech surprises with limited downside. So we know Infy starts off lower, etc. But well, it's an interesting development out there. We'll talk about it later. Emphasis, the commentary seemed okay, and much like what TCS did. So in some sense, I wonder if a large downtick today on open on tech kind of brings about a bit of a near-term bottom out there, if it is even possible to call a near-term bottom in markets like these.
Yeah. My only worry is that the overall sentiment is going to be so bearish now with everything going on that I don't know if there is going to be the appetite to see the silver lining, things like great valuations, even an emphasis. As terrible as the numbers seem right now, their outlook is quite positive. There is a new guy coming in, but I don't know if people are in the silver lining glass half full mood.
No, for sure not.
So that I think is the only challenge. In terms of the technical setup, it also remains bearish as the Nifty has closed below all key moving averages for the fourth consecutive session, while momentum indicators continue to weaken. Global cues have deteriorated further. Brent is at 100, higher US bond yields and a sharp sell-off in US tech stocks all make for a very, very negative setup. 23,800 is the key level to watch. Holding above it could trigger a short covering bounce. A decisive breakdown would likely extend the correction towards 23,600 to 23,500. Until the Nifty reclaims 24,000 to 24,100, the preferred strategy remains sell on rallies with disciplined risk management. Resistance, any intraday pullbacks will face strong resistance at 23,960 to 24,000, followed by 24,100 to 24,200. For the Bank Nifty, supports, immediate support sits at 56,420 to 56,290, with the 56,000 mark serving as the vital floor, which is near its 200-day EMA. Resistance overhead hurdles are placed at 56,845, 57,000 and 57,200. So, I mean, that's the technical setup, but going across to Puneet to see if any glimmer of hope in the F&O setup.
Well, we'll have to look elsewhere for that for now, because it's a screen which is showing you some pressure right now, and we are at a very, very crucial juncture right now. Last Friday, we got that big boost in terms of the stock prices performances, and hence you could start this week at a respectable level. But with this implied open, you will be back again below that 23,800 mark, which has been a support, a slightly more weaker one, because we breached that. But at 23,600 odd, that is the other important support, and then we go all the way down to 23,200. So a lot of positions have actually been reduced over the last couple of days. We had the Sensex expiry yesterday too, but for the Nifty 50, it's a very, very crucial juncture, because you have had triggers like the earnings season almost go through for the major names. Have been some decent performances, but overall, you see the two main constituents, the bank and the IT pack, both have underperformed in that sense. So the Nifty Bank too at 56,500 doesn't offer too much support at this point of time. 56,200 and then 55,500 are the important levels to watch out for in the near to medium term. But there has been intermittent selling by foreign investors. Yet again, yesterday was one of those days, and the index long, I think, has been consistently under pressure. So now almost 93% positions largely held shorts in terms of foreign investors, and hence what you have also seen is a reduction in overall position. So put call ratio now below 1 signifies from the 1.37 that it was a couple of days ago. So positions have actually been cut across the board, of course on the calls, but also on the shorts and the put side as well. And that can be seen on levels. So 24,000, 24,200 have seen big green candlesticks on your screen. That is showing that we've, from the start of the week where we were talking about 24,800, seeing some positions being built in, we're now back again tracking all those lower end of 24,000 numbers. And stock specific action also isn't showing too much trends. You've seen longs essentially being unwinded, and if you look at the open interest losers, so that shows you a better picture on this, because you have seen let's move across to the next one also very quickly. You have seen all kinds of longs. So Cipla numbers were slightly weaker, so you saw that longs being unwinded, but Trent, Apollo Hospital, Divi's, any kind of move have actually been sold into. Only in the select auto pack to say there have been blockbuster numbers, and hence any kind of shorts being covered, longs being built in. So very, very specific niche stock specific action seen, but the benchmarks definitely under pressure today.
Benchmarks under pressure, and I don't have too many thumbs up on my watch list either. At least the first one is definitely not. It's Infosys I'm starting off with, and if you look at the ADR response, it's just going to give you a bit of an idea of what the view on the stock was. So numbers are in line with estimates, but the upper end of the guidance has been cut, which is something that will disappoint the street. The company has cut its upper end of guidance to 1.5% to 3%. Earlier it was 1.5 to 3.5%. The board has also appointed Ashish Kumar Das as the CEO designate and has reported an AI revenue at 8.2% of the quarter revenue from a 417 million Q-on-Q constant currency growth of 1%. It has 1.1% of inorganic growth and degrowth at a company level. Large deal total contract value is up 12.5% to $3.6 billion versus $3.2 billion. So I don't know if that's going to be seen as a glimmer of hope. Here are the core numbers. Revenues are up 3.89% for the quarter. All of this is in consolidated Q-on-Q numbers I'm talking about. EBIT is up 4.31%. Margins are up 8 basis points, and net profit is down 8.61%. So who's the new person? That's going to be important for the street as well. Ashish Kumar Das. He will take over as CEO and MD on April 1st, 2027. He's been with the company for 31 years and heads street as well. Ashish Kumar Das. He will take over as CEO and MD on April 1st, 2027. He's been with the company for 31 years, and what Morgan Stanley is saying on Infosys, they've maintained an equal weight and cut the target price to 1,075 from 1,112. That's still above the current market price. But look at their commentary. They're saying Q1 is worse than feared. Sharp cut in FY27 outlook could reflect Infosys-specific reasons, but tend to believe that growth has become more challenged for the industry as a whole. FY27 is likely to show erosion in growth outlook along with lower margins, affecting EPS growth, that's earning per share. Deal wins were strong, and the company is progressing well on new AI services. Investors are likely to monitor for a smooth CEO transition phase. Meesho, results are looking decent. I mean, you'll see losses, but the losses have narrowed. They've, in fact, continued to narrow. Solid set of numbers otherwise. Margins are ahead of expectations, and last 12 months, the free cash flow has improved by approximately 15%. All operational metrics suggest strong growth momentum as well. Here are the numbers. Net loss at 132 crores. You wonder why a thumbs up, because it used to be 289 crores. Revenues are up 48.3% at 3,713 crores. EBITDA loss is at 224.7 crores versus 264.4 crores, so again narrowing. They're also going to invest 75 crores in their arm Meesho Groceries, so that'll be interesting to watch. So one more player going into groceries. Here's what Jefferies is saying on Meesho. They've maintained a buy, hiked the target price to 240. They're saying growth momentum stays strong with marketplace losses in line. While balancing value proposition, management decided to pass on cost inflation. Outlook remains positive, but a shift in seasonality implies Q2 will be softer while Q3 should be bumper. So we'll have to wait and watch for this. Sona BLW Precision was also a good set of numbers. Sona is targeting 10 times revenue in 10 years. Margins were impacted by rise in commodity and labor costs. Net profit was up 45% nearly at 180 crores. Revenue was up 54%. EBITDA was up 49%, and margins were a little soft, as we mentioned, at 23.1%. Jefferies has maintained a buy, hiked their target price to 900 rupees, so quite a hike. They're saying it's a world of new opportunities. Traction motor business is growing strong and differentials is recovering. Partnership with Denso and entry into robotics and physical AI opens up big opportunities. Sona is targeting 10 times revenue, and rich multiples should sustain given strong engineering capabilities. So this is something the company has spoken about earlier, and they're finally doing it. I think there's an 800 crore order book in these new segments as well, where it's actual robots that they're now building.
And the fact that for a company to come out and say this confidently, 10-year, 10x growth target. There's also a Goldman report, not necessarily on Sona, which is saying that auto ancillaries and all auto anchs who are actually pivoting away from being pure play auto anchs to various other businesses, and how strong those numbers look because they're so good in precision manufacturing. There's a brilliant move, and no wonder Sona has actually had a bit of a rally ahead of all of this.
So we ended up with two positives, at least on my list. So there
Despite the fact that you said, hey, I don't have too many positives.
Yeah, I think Infosys kind of overshadowed it a little bit, to be honest.
Yeah, I mean, it does in terms of weight as well. Interglobe Aviation on top of my list is not positive. Actually, it's a but look, it was expected to be a weak quarter. Unfortunately, certain parameters have come through that were worse than expected, and that essentially is the fact that fuel cost per unit stood at 2.49 rupees per seat per seat available kilometer, as it's described, and that's the highest ever. The unit fuel cost has jumped as much as 80% year on year. They've also managed the highest revenue growth in the last 9 quarters, and that of course is on account of the higher fares that they were charging. The fares were higher on account of the fuel surcharge that was imposed during the first quarter. A combination of the fuel price escalation and adverse exchange movement, as well as the Middle East conflict, has impacted the overall numbers. This is something that you all knew. The total fleet count has actually decreased by 9 to 432. They also reported a free cash position improvement on a sequential basis by as much as 12% during the quarter. Now, the guidance going forward is something to pay attention to as well. They've said that pricing discipline is held up in the second quarter. They see a yield growth of about 25% on a year-on-year basis. What is a yield for an airline? Essentially, it is the revenue per available kilometer or per kilometer run for the airline. Maintaining FY27 capacity guidance is what they're doing, and that implies a single-digit growth. And post that, they expect that the growth will be in early double digits. So capacity is expected to be flat in Q2 as well. Now, just take a look at some of those numbers. The revenue is up as much as 20%. The EBITDA, which adjusts for a forex loss, is down as much as 34%. And this is where the problem is, right? Those margins have contracted significantly because fuel costs have created a bit of a problem for them, and that's stating it lightly. They have in fact reported an uptick in yields of 21%. Remember that yields is a function of the pricing of the tickets, and so with the tickets going up, you have yields that have gone up, but it doesn't matter because they've actually lost quite a bit with regard to the inputs, and so the margins have contracted and they've faced that on the bottom line. IGI is the second stock on my list. The total certification volumes for this company have risen about 17% in the first quarter, and they've also said that the average realized price or average selling price effectively He's up as much as 5% to 1,010 rupees. They've seen an increase in the testing of natural diamond and loose lab-grown diamond certification, and that, according to them, has improved their average selling price. The margin is improved on a year-on-year basis, but it's contracted sequentially. But the numbers actually look pretty robust. There's a PAT increase of as much as 31%, a revenue increase of 23%, more or less in line with what they've reported in the last few quarters. EBITDA uptick of 29% and margins coming in at 60.3% or thereabouts. Finally, Thyrocare Technology, it's a strong set of numbers. Volume growth was pretty strong, with tests conducted up as much as 28%. They've seen operating leverage play out during the quarter. They've also seen higher pathology contribution and an improved mix from franchise and partnerships. Take a look at those numbers. 34% uptick in PAT, revenue increase of 24%, pretty solid. EBITDA increase of as much as 34% and margins expanding pretty healthy, actually, at 32.2% compared with 29.9% on the basis of that change in the mix that has worked out for them.
Yeah, interesting space as well, by the way.
Yeah.
Yeah.
But they've run up, right?
Yeah, that too. Emphasis is the first one on my list, and much like maybe what a TCS said in terms of growth, actually Emphasis has said that the growth will accelerate in quarter two, and they've given a guidance which is even mentions low double digits, and which is an interesting number out there. I remember banks are doing well, and therefore it showed in their quarter two, US banks that is. So keep an eye out for Emphasis. Pretty strong numbers, pretty strong guidance, more importantly, and therefore that stock might have a bit of a reaction today. Shadowfax is the other one, some bit of equity on the block. The good part about Shadowfax, guys, that I thought is that they've upsized the offering, if you will. Companies in such a scenario of the market don't quite go and upsize the offering if they're not confident of the demand. It would be my guess and would be my assumption, but it's also something that experience teaches you. So watch out, won't be surprised if there is a bit of a bottom formation in Shadowfax if it indeed starts off lower, and if indeed the demand is strong. So keep an eye out for that.
Crazy, right? The stock is up 100% in a year.
It's just, and frankly, you know, we were discussing this yesterday. Think of a B2B business, which is almost as well known as a B2C business, right? They don't have a B2C reach per se individually, but everybody's heard of Shadowfax, or everybody's heard of Razorpay.
But because it is B2B, but there is a consumer outlook as well. I mean, it drops in your phone if your parcel is coming by Shadowfax. And it's a good play on the fact that even if individual delivery-based, tech-based delivery companies delivering whatever they are, however they perform, the guys actually doing the deliveries are going to be fine. So. Because it's such a huge volume.
That's true. That's true. And actually, just that on that, I mean, even names like Razorpay, etc. Right? Just so many businesses out there which are doing so well in the tech space. Last but not the least, like I said, some of the auto components, you want to keep an eye out for them, simply because of what Tamanna mentioned earlier about Sona Comstar, but the Goldman note, which has on pre-call and 3-4 other names, effectively saying that a lot of these guys are going beyond the traditional avatar of being auto anchs in the scheme of things. 3-4 other names, effectively saying that a lot of these guys are going beyond the traditional avatar of being auto anchs in the scheme of things, and it's today. But time for a short break. On the other side, we'll discuss your trading strategy for the day.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26th July. Only on NDTV.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
Heart disease remains one of the world's biggest killers.
Earlier, heart care began only after symptoms or an emergency.
This week on NDTV Lifeline, discover how advanced heart scans, early screening and simple lifestyle changes are helping prevent heart disease without surgery. Because when it comes to your heart, early action can save lives. Only on NDTV.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs.
Welcome back. You're watching India Market Open. The implied open is telling you it's going to be a tough morning. 218 points down. In fact, that red gap down is deepening as we progress towards the opening bell. What should be the strategy today? Parag Thakkar and Khushpur are in the studios, and you know they say when the going gets tough, the tough get going. Is this the time to get going, or just stay away right now till things get clear? Parag Thakkar, yesterday you said you earn about 12% cash right now. Yes. Good idea in hindsight, and will you deepen further?
No, so I would keep it at 12 or try to be around 10, 11, and we'll look to buy something which is in my buy list on dips in this fall, because you know that any day it can change, and so you cannot bet that okay, crude oil is going to 125 and so all bets are off. Of course, that can also happen. That is a risk.
Okay, Kush, what about you? On I don't even know what to talk about on the Nifty, because that slide has been just one way and pretty deep. Where is the support right now for the Nifty?
Yeah, I have a few pointers. First up, a very good morning. And what plans for the long weekend?
We have very exciting. Listen, Business Leadership Awards on Sunday is a bright spark to look forward to. We're very excited here at NDTV Profit. Just thank you, Kush, for the opportunity to plug it again. But yeah, this Sunday, you're going to see the best of corporate India being felicitated on the Business Leadership Award. So that's happening.
Indeed, and we'll be there too, looking forward. But yeah, I mean, for viewers, it could well be a long weekend, right? With the kind of moves that the Nifty's been making.
They can also watch. Please tune in and watch.
No, watching is still part of the long weekend, the fun bit, right? So, 24,000 broken, 23,800 in all probability will be broken. The levels that you mentioned yesterday, by the way, 23,600, very much in play. And that's, by the way, the immediate support. The gap at 23,600, 650, that comes into play right now. Now, FIIs continue to pile on shorts, 92% shorts still there, another 10-11,000 contracts on the short side index, on index futures added yet again. That's a bit surprising. So yes, I mean, there is a very real, very near-term pain that is on the table.
But I know you've said a few things about silver linings this morning. Might not have too many takers, but there are a few silver linings, right? Let me start off with the very first one. The PCR is at 0.8 with this kind of cap down, and the activity that will follow immediately. You could very well hit that 0.7 support zone on PCR. Perhaps some consolidation. I'm not calling for a rebound or a recovery. I'm just saying that the markets could find support at these levels, 24,300, 23,600 thereabouts. Also, importantly, Reliance Industries and HDFC Bank are very close to their long-term support zones, right? 1250 on Reliance and about 725 on HDFC Bank. So these are the levels from where these stocks have rebounded, multiple times in the past. So you could perhaps see some consolidation at these levels. Now, as you can guess, the silver linings are only in the fact that the fall could stem here and consolidation could go on, not a recovery. Of course, any kind of positive news from the global front could trigger a sharp positive, short covering rally. But for now, you don't buy. You just wait for this dust to settle.
Okay, so is there any point asking what's on your individual stocks? Are they short calls or are they again watch list? Wait for things to improve and then come in and buy?
Watch list में तो add कर ही सकते हैं ना, उसमें कोई problem नहीं है.
You said this yesterday also.
In fact, Alex, for the last 2 weeks, I think I remember this very clearly. I've been saying that there is the time started about 2 weeks ago when I said कि stocks छोड़ दो, index पे ध्यान दो. From there on, the mid cap and the small cap indices have consolidated, but the stocks actually have been worse off, right? I don't see that changing immediately. So that's why. Also one point which Neeraj mentioned, very interesting, which is कि जब bond yields 4.7 के आसपास जाता है ना, आप वहाँ से कुछ ना कुछ positive news देखते हो. Just and again, no expert on bond, never have been, don't intend to be, just from a technical standpoint. At 4.771, the bond yields are highest since the war started. The previous high was 4.68. January 2025 is 4.77. तो हमने 4.67 के जोन में जाते हुए देखा है, but then you do see a reversal and it's a sharp one at that, and hence positive for the markets. So that is also one of the silver lining points. इसीलिए यहाँ पे short करना इंडेक्स पे तो बिल्कुल ही नहीं बनता है, buy करना नहीं बनता, because you don't know how swift the recovery will be. So just be cautious, don't go short. You could look for buying, like I said, but wait, don't be in a hurry. Stocks. Going for safety here, M&M has seen a good consolidation, a good move yesterday as well. Auto index did well, so you could consider a long position on M&M. 3330, 3450 are your targets. 3130 is where you keep that stop loss. Crompton is on the short side. 245, 240 are your targets. 255 is where you keep that stop loss. But again, if they open very close to either their targets or stop losses, you don't have to initiate these trades. Continue adding them to your watch list.
Okay, since we're speaking about levels, just quickly going to add in what CLSA is saying, their price action note by Lawrence Polanco. They're saying Nifty continues to consolidate in a narrow range below the 200 DMA and the June-July highs at 24,515 to 24,801 area. This narrow range has formed within the broader trading range that has formed off the October 2024 highs between 23,100 to 23,103 support and 24,500 to 24,515 resistance. Until one of these boundaries is decisively breached, range-bound conditions are likely to persist. There's limited evidence of a sustained directional trend emerging at the large cap index levels. So let's go a little below the surface and beyond the large caps. Parag bhai, we've seen some of the results coming in. What has really stood out for you?
So PVR was superb result in my view. PVR. So people said when they delivered in Dhurandhar quarter, the people say it was Dhurandhar. Okay. Now this time there was no Dhurandhar.
It was Dhurandhar 2, na?
No. That Dhurandhar 2 was not there in this quarter.
Jan Feb March.
No, it was not there in this quarter. This quarter there were no hits which were outstanding.
So Dhurandhar 2 effect was there. Would have lasted
April, May, June.
March 19th it got released.
No. April, May, June didn't have Dhurandhar's big thing. April, May, June, you just hear what they have said also. First of all, I would like to say without Dhurandhar also, the company's net debt, which was 1,430 crores at peak, is now net cash 80 crores. Pre-index EBITDA, if you see, last year was 121 crores. This time it is 228 crores, and this is all because of out-of-home entertainment gaining traction. And so markets still are not accepting that people want entertainment. People are, there is a OTT fatigue, and people want to move out and watch movies. or FIFAs of the world and everything. That is why I'm saying out of home entertainment. So I would say that, and company has done phenomenally in terms of cash flow allocation and all. And in this quarter also, when actually it was regional, it was tier 2, tier 3 town driven.
No, but just taking the point that if Dhurandhar 2 released March 19th, people saw it for a while. So April would have had some impact.
Little bit of impact. But this quarter, if you see the management commentary also, it was all driven by small regional movies, 150 crore, 100 crore movies, and tier 2, tier 3 towns and those kind of things.
Okay. Also, this quarter is going to be pretty good for them, right? If you think about it.
Odyssey ticket prices are insane.
Odyssey, Spider-Man.
Yeah, just look at the numbers, right? So we were talking about it yesterday. In the first 6 days, we're talking about 85 crore overall collections, and if PVR Inox has approximately 60%, then already in the first six days, you're seeing collections of.
Yeah, I have a small theory in why PVR underperformed during the Dhurandhar 1 time as well. December 2025, FI shareholding in PVR was 21.16%. During that period where FIs were selling everything else, PVR shareholding, FI shareholding came in down to 17.86% in the end of March quarter. So there was serious FI selling, never mind what PVR did. Per se, fundamentally, it has gone up to 18.8 June end. So presumably that FI selling part is over. If PVR has to perform, fundamentally and technically, not technically from the chart perspective, but from a selling perspective, I think this is the best time it can.
I think that market is slave of earnings.
Earnings were good in March as well, right? But FI shareholding.
No, I'm saying market is slave of earnings, but there is a narrative issue here. Right, narrative is that is this business out of, it has a terminal value issue, right? And I feel that from Dhurandhar or even Sayyara before that, I think that trend has changed, which market has not noticed. In Bajaj Auto's case also it was like that. I do not like to extend Bajaj Auto thing more, but I would just say that the domestic market, everybody was stuck at that issue, domestic market share. And about 25% of the business is that. What about the money which they are making in exports? People miss that. So that's my point.
So people are going back to the theatres. Maybe it's, I'm not saying that ticket prices are cheap at all, but maybe it costs you less to entertain yourself and your family for 3.5 hours versus other things, because restaurant prices are so high as well. So I don't know. Maybe that's you want to go out, where do you go?
Yeah.
Okay, let's talk about Infosys. Largely inline set of numbers, but trimmed the guidance. That was a problem. The upper end of the guidance was trimmed. There's going to be a new CEO coming in. But before we get on to our conversation where we focus a bit on Infosys, let's hear from CEO and MD Salil Parekh on the company's guidance.
Our clients are able to optimize token costs, which has become very critical now, to make sure it's the appropriate for the type of work they're doing and not out of hand. Overall, we continue to see the macro environment remaining uncertain. With our Q1 results and a view for the rest of the financial year, we are changing our revenue growth guidance to 1.5% to 3% year-on-year growth in constant currency terms.
Okay, so a lot of that and what we spoke about with regard to the revision in the outlook and several other factors of the expectation that going forward there's going to be a challenge on the margins front as well has had a bearing on the ADR. At one point it was down quite considerably. It's ended off the low point of the day, but still there was a crack of as much as 2.4%. You can anticipate a gap down at this stage. But to understand how the Q1 was with regard to consensus estimates and what the path ahead looks, not just from the perspective of Infosys, but what that means for the rest of the industries, but with keen focus on Infosys, we've got Kunal Bajaj, Equity Research Analyst at Choice Institutional Equities. Kunal, thanks so much for taking the time and good morning to you. Infi, obviously the last of the pack to report, but then very closely watched and for good reason. Is the revision in the outlook the biggest negative that you take away from this?
Yeah, good morning. Thanks for having me on the show. Yes, we were expecting a cut in the upper end of the guidance, but if we see the inorganic contribution to that guidance is around 1.7%. So the organic part would be around 1%. So yeah, this is weaker than what we expected. and this implies a weaker demand environment than what we previously anticipated. And obviously, the company's management has also said that there is softer volumes as well as pricing pressure, and a one-off client termination also contributed to that.
Call on Infi, Kunal, because you're expecting that nothing is going to change really in this financial year. You're expecting that margin pressure will continue going forward, and of course there's a bit of a buffer on the currency side, but the demand environment is weak. Then we're talking about a situation where they might have to revise downwards yet again.
We have to wait and watch for that. But generally, H1 is strong for Infosys. H2 is comparatively weaker, and in fact, what we see, there has been continuing weakness from the manufacturing vertical, and there are a couple of ramp downs as well expected in H2 FY27. So it won't help either for the company going forward. So overall, what we see FY27 to be a muted year for Infosys going forward.
Okay, Kunal, what are the expectations around the incoming CEO? How important a factor do you think that is?
Yeah, it is an important factor. Ashish Dash, who is now in place, so he has been associated with the company for a very long time, and there's also a very 1 year of transition period unless he sits. So we see that going forward, his experience in sales as well as execution will also help in the execution going forward for the company.
Okay, Kunal, thank you so much for coming in and giving us your view. I think it's Ashish Das, if I'm not mistaken.
Yeah.
I think the H is silent on the last name. But Parag, I'm keen to know your views on Infosys, because you know some of the commentary from the brokerages which stuck out was that this is worse than expected. It was a problem. We're saying the numbers were in line, but the guidance cut, the outlook. Question is this an Infosys problem or an industry problem?
I think it was more of an Infosys problem.
Yeah.
Because European client scaling down was there. Just like in Tech Mahindra, we saw that European automotive client increased business significantly in this quarter. In this case, it is Infosys issue. But I would say that Infosys FY27 is very muted. And luckily, I don't own Infosys. I own TCS and Tech Mahindras of the world. And
but
Emphasis.
Not lucky, no. But
everybody doesn't have God's grace.
Because there are people who, even if they're looking at the Nifty and you know they have the benchmark related investments, you're in mutual funds, wherever you are, it's very tough to escape Infosys.
No, definitely, absolutely. But I think market was aware of this. You have seen the price movement also, right? And Infosys trading at 13 PE, and in spite of TCS jump after the results, in spite of Tech Mahindra's good results, all those through Infosys never performed. So market was like yes.
So parallelly in that, what did you make of Emphasis numbers and the guidance?
Yeah. So basically, unfortunately, our show started at 8:30 and Emphasis call started at 8:30.
Yeah, but they give some release.
Yeah. So, but I think Q2 they said that it will be the strongest quarter.
All of the updates at the bottom of your screen.
Okay.
For you and all of our viewers. So when you're watching this show, you're not going to miss anything. That we will ensure.
Yeah.
So those updates are there.
Yeah. So Q2 they have said that it will be the strongest quarter, which means 2.4% CC growth there or more. So I feel that Emphasis. So you know when we discussed Tech Mahindra result, I said that I would wait for Infosys result to come out and then buy any IT stock. If you remember. So now Emphasis is a stock. One should buy on dips. If this commentary is right, and if there is no structural issue, it trades at 22 times trailing and great management. And we all know that US banks are doing well, and Emphasis major client base is US banks. Yeah, so I would say that Emphasis is, if the call has sounded positive.
By the way, let me just give you a few of the lines from the call so that you can take a call yourself. Q2 to deliver best CC growth in 3 years. They're maintaining FY27 guidance. The EBIT margins are targeted at a range of 14.75 to 15.75%. The operating cash flow is set to remain at 80% of the net income. The pipeline of deals is at an all-time high. AI deals, and I do not know how they're tagging it because it's a little loose, but AI deals up from 12% of pipeline to 70% of pipeline. The BFS pipeline has grown over 2x, and they say that the EBIT margins in Q1 were impacted by ramp up of deal wins and acquisitions. FY27 guidance is at high single digit or lower double digit.
So that's a very good guidance, high single. If they achieve it, and they are saying Q2 will be strongest. So I think, yeah, so Emphasis is a stock to go within IT pack. If somebody wants to play a contra thing that Infosys results are bad, I want to buy some other IT stock on weakness.
How does Cyient stack up there? Because numbers were decent. I mean, Morgan Stanley is saying they're better than feared, but would wait for a sustained growth recovery.
Yeah, so there my stance will be also same. I'll wait for sustained recovery. Emphasis is much known name for me.
But Cyient has also gone through a rough patch, right? They've not yet gotten out of it.
That is why. So Tech Mahindra, for example, they reported excellent numbers every quarter. Mr. Mohit Joshi, he continues to deliver. Margins are increasing. So I think Tech Mahindra, Emphasis kind of names, or my old favorite TCS kind of names should be bought on those dips, on the dips due to Infosys results.
Okay, but today's dips might be more than just Infosys results, so we'll have to wait and watch. What is the dealing room chatter this morning? Somit Sarkar joining in for more. Somit, it's a somber morning in terms of all of the setup.
The setup is a bit mixed, volatile, and could be on the negative side given the fact that GIFT Nifty is at least down 200 points is what I had seen last. So that is what it is, but a lot of stock specific action. Firstly, it's JSW Cement. There are some sell flows coming in on the HNI desk. Dealers are expecting a block deal very soon here, and for Vishal Mega Mart as well, there are some sell flows on the PMS desk. Dealers are expecting a block deal to come in very soon from the promoter side going forward, given the fact that now earnings are also over. For Crompton Consumer, there are buy flows on the at lower levels on the institutional desk. Dealers believe that fundamentally it's a good buy at the current valuations. For Bosch, Medanta and Piramal Pharma, there are buy flows on the large HNI and the PMS desk. Dealers are expecting a strong set of Q1 numbers. And on the flip side, there is Force Motor, where dealers are expecting a weaker number that could come in from the company in the first quarter of FY27. And Infosys was part of our segment on July 20th, where we did indicate that the numbers are expected to be much weaker on a relative basis and compared to what the street was expecting. And yes, that has come in. In fact, the company has gone ahead and cut their guidance as well.
Somit, while you're with us, you track Indigo very, very closely, and I think to a certain extent there is a little disappointment at the impact of the higher fuel prices. So what stood out to you? And you also listened to that conference call. What was discussed that you caught?
Well, when it comes to the Indigo numbers, yes, the numbers were a mess compared to what the street was anticipating, and street anticipations were already muted, and this was largely because of the jump in the fuel cost that we had seen. In fact, unit fuel cost increased by nearly 80% on a YY basis and nearly 60% on a sequential basis, and this was much ahead compared to what the street was anticipating, and that was the only negative that had come in for Indigo in the first quarter of FY27. Now going forward, the key positive point that I heard on the call was the fact that they are saying that yields, which measure average fare per passenger per kilometer, that has continued to hold up. For second quarter, they're expecting the yields to be higher by nearly 25%. In the first quarter, it was already up by 20% on the back of fuel surcharge, but in the second quarter, they're expecting that to be higher by 25%. The only thing now that could work for Indigo is fall in crude oil prices and settle if the Middle East issue settles. So that could be the only positive. Apart from that, on the revenue front, they seem to be quite good. It's the cost that has been impacting the company, and for Q2 also, given the fact that it's a seasonally weak quarter, they are not expecting much of a growth in their capacity as well. They kept their capacity guidance flat on a YY basis, but that is also because of seasonality. The only thing now that needs to work for Indigo is a fall in crude oil prices.
You know, since you're speaking about Interglobe Aviation, one of the interesting things that popped up in that conference call was a question that Rahul Bhatia himself addressed, which was on the basis of news reports earlier that airport operators could be getting into airlines as well. And he came out and said that if these reports are true, it would be very difficult to see how it would play out. Let's listen into what he said.
If the news has any merit, one, it has no global precedence because it typically would reflect a massive conflict of interest. and over a period of time, it would actually be against the interests of consumers. This said, we should just watch this space and how it develops. The second part of your question is a moot point right now. Like I said, let's see how this whole thing develops, and then we can take a considered view on how to approach things into the future.
Okay, so important to understand this entire sequence of events. What Rahul Bhatia was reacting to was a question that was asked to him in the conference call basis a Bloomberg report, and then there were other media reports which were alluding to Adani Enterprises going ahead and buying or starting an airline. There's a clarification which has come in this morning. So Amit, put it all in context.
Yes, big positive news coming in for both Adani Enterprises and Indigo, given the fact that the overhang of Adani Enterprises starting its own airline goes away, because they have come out with a very clear clarification which says that they are not launching any airline services, and these news reports are factually incorrect and entirely baseless. They are not evaluating any proposal of entering into an airline business, is the clear statement that has come in from Adani Enterprises. And as you were mentioning, Rahul Bhatia yesterday also on the call said that if there is any merit in these reports, then there could be a conflict of interest, and there is no global precedent of such model. So even globally, none of the airport operators start their own airline, and that is not even expected in India to happen now, given the fact that Adani Enterprises has come out with this clarification. So a major overhang goes away from Adani Enterprises and Indigo as well. Now, this is because Bloomberg had reported on July 22nd that India has initiated talks on a policy change that would allow airport operators to own and run their own airlines. And as per them, this would have allowed or cleared the path for Adani Group and GMR airports to have their own carriers. Now, current rules did not allow that, but if this would have been passed, then Adani Group and GMR airport could have launched their own airline as per the Bloomberg report. But right now, Adani Group has clearly denied any of such news report, and they have actually said that they are not entering into the airline business.
Okay. Yeah, but this is important clarifications and positive for Indigo in that ways as well. The only thing is, I think they've guided to so moving back to Indigo, and therefore, because there is a benefit to Indigo as a result of this, that not a very large house coming in as competition, if you will, and a great executor coming in as a competition. But Parag bhai, for Interglobe Aviation, you get that quality franchise at a good price only when crude prices are higher.
Yes.
But they have guided that Q2 will have a 25% higher fuel cost, and with oil at 100.
Yeah, again this war starting and all.
Is it safe to avoid it for the time being?
Yeah, it is safe to avoid for the time being.
At 4,200 it is a great buy.
Yeah.
5,000
correct,
not.
Absolutely.
Right?
Stock has rallied and the worry is back.
Right, exactly.
So you don't need to buy.
Don't need
no,
to
but
buy.
what is the worry that is back for an airline with, I'm just playing devil's advocate, with this large a market share? What is the primary worry?
Is oil is going up. Now this quarter also, if you see, the fuel cost has outpaced their yields, right? So that worry will again come back because oil is again at 100, rupees again at 96.
And you think they cannot really pass it on beyond a point?
See, it's a great franchise, as Neeraj said. It's a great stock to own. If you are holding it, I'm not telling you to sell. And as he rightly said, 4,200, I feel that the worry was priced in. At 5,000, there's no hurry.
So would you put it on your watch list? And what levels would it be attractive
below 4,500, 600.
Okay.
Yeah, I think that's the answer really.
It is.
That you want to buy it, but maybe there are better opportunities to buy as opposed to 5,000 considering crude is at 100.
Do you think sentimental positive today because of this clarification that a large player is not going into the aviation business?
Maybe. Some people might have thought that if such a large, as Neeraj said, such a big, I would say, strong executor coming into that business is not coming. For a long-term shareholder, it is an important thing.
Kush Bora, as a trader, if Indigo starts off lower today, 3-4%, whatever it is, what would you initiate a fresh trade? I happened to peep into your screen, excuse me for that, but there was a very large candle there.
No, you're more than welcome, and that was actually the pre-market open rates setting in. 4,700, that's the level that I am looking for. There is a gap, multiple times the stock has rebounded from those levels in the past. So about 4,700 or thereabouts, that's the support zone. If that is broken, then 4,400. For me, I think, the summary for the discussion, rather it was well summarized. Definitely on the buy list, at lower levels, look for an entry from a positional standpoint on Indigo.
Okay, pre-open rates have settled, and or rather pre-open rates have started. Excuse me for that. Good morning and welcome to everybody who's joining it at 9 a.m. Let's pull up Infosys. Let's pull up Interglobe Aviation. Let's pull up Emphasis. Let's pull up Shadowfax. I think there are a clutch of those names which will be in focus today. Infi starting off much like what the ADR was suggesting. Indigo 10%. Well, I don't know if it's a 10% downtick or no, but certainly we'll start off lower. In fact, I doubt that it will be a 500-point downtick on Indigo, but let's wait and watch. Never say never. Shadowfax, because of that large offering, 3 or 4% lower right now. So interesting there. A couple of positives include one of them that I'll mark, and then Alex and Tamanna would have more stocks to mark. But one of them is Emphasis. Should pull up that one on your screen because the numbers and the commentary both seem pretty solid. Wow, no, I don't think there'll be a 10% down if these rates will change.
Yeah.
Oh, wow.
Definitely.
Let's see what's happening with Sona. Let's see what's happening with Meesho. Because I think the entire IT pack may be in a bit of pain. Sona BLW also 10% down. This is a bad mood in this market right now, no matter what you do. In fact, Sona BLW is your top loser. Interglobe Aviation follows suit. This is on the Nifty 500. Infosys about 3.5% down. I can see out of 500 stocks, only 89 advances right now. So it's just the first 2 minutes of trade. Let's see if this settles. What's working? Motilal Oswal Financial Services actually had a good set of numbers.
They moved from loss to profit as well. Yeah?
So that was good, 4.5% up. IGI was on Alex's watch list. That's doing okay. SRF, positive brokerage note today on SRF as well as pre-call. Let's take a look at what both of those are doing. They are looking okay, but you'll have to hunt far and few in between for stocks that are really doing well. Let's look at PVR since we spent some time talking about it and what's happening with PVR. Is it doing fine this morning? At least it's 0.5% up in a market like this. That's quite a big positive. I want to just focus on Cipla as well. Cipla reported a weak first quarter performance. Earnings missed the street estimates on profit, while the US market remained the key drag. Varsha joining in with what brokerages are saying this morning.
Well, yes, the numbers were pretty weak on the back of, lower Revlimid and no Revlimid and lenalidomide impact. But let's see what JP Morgan is saying. Well, they have maintained overweight, they've hiked target price. According to them, revenue was in line, miss on margins, and sequential uptick in US will be supported by key launches, and the India outlook is expected to remain healthy, which will be led by branded prescriptions. US pipeline plus India momentum underpin upside, key catalyst ahead according to JP Morgan. You have Citi, which has maintained by the target price of 1700. What they're saying is that strong India execution, US launch and margin miss are temporary. India is expected to sustain that double-digit growth momentum, and the US launch momentum has been building up. A temporary blip in margins is what we have seen, and guidance maintained for FY27. Well, Jefferies has maintained underperformed, though they have hiked their target price. According to them, higher cost drive a miss in June quarter, which is a downside risk to US guidance persists. North America exit rate at $250 million in Q4 is a tall task, especially with a gradual ramp up of recently launched product. They see downside risk to EBITDA margin guidance of around 18.5 to 20% if the key US launches are delayed, and they've raised FY27 EPS estimates by 2% on higher forex. Lastly, let's see what MS is saying. Well, they've maintained underweight. EBITDA fell due to Revlimid loss is what they're saying, and also US revenue run rate to improve from H2, and this is a one key factor that investors should watch.
Okay, all right, thanks so much for that. The question though, Parag Bhai, is a couple of these pharma majors have reported they've disappointed. In fact, it was a weak expectation heading into the numbers, but they've disappointed on that as well. So therefore, how do you react to this?
No, my reaction, Alex, is very simple. Anything which is related to US generic, okay, that has to be taken with a pinch of salt. We discussed about Dr. Reddy, how Revlimid going away will impact them. Stock has corrected from 1300 to 1170. So I would say that in spite of not performing for 5-6 years, so I am very skeptical about that theme. I would play the domestic branded formulation theme and mainly tilted towards chronic. That is how I am going to play the pharma sector.
List them out again.
So, Mankind is one, MCure is one. And of course, the big daddy Sun Pharma if it comes down, or Torrent Pharma if it comes down. But both of them are very strong. Torrent Pharma, in fact, is now very expensive. But if both of these stocks come down, and fifth one will be which will be IPCA, I think.
IPCA Labs.
Yeah.
Okay, so keep those on your watch list and watch out for if there are corrections, and then you can add them to your portfolio. Pre-call is in focus, and this is the big brokerage call of the day. Goldman Sachs betting big on the company while initiating a buy call on the stock. What is the target price and what are the key triggers for that re-rating? We've got Hiral joining in to tell you more. Hiral?
Thank you so much for that, Alex. It's an initiation coverage, and they have a target price of 780, which is substantial increase from the current market price as well. Now what they are saying is that the key tailwinds are premiumization as well as digitization, and there is more digitization ahead for the two-wheeler space, that is electrification as well as premiumizing. Now 26% of India's two-wheeler market is likely to shift from analog to digital instrument clusters, is what Goldman Sachs is indicating. And what they are saying is that excluding the two-wheeler volume growth, cluster premiumization is still approximately a 30% medium-term growth opportunity for the company. In fact, they're strengthening their OEM partnerships as well. So if you talk about the Honda ecosystem, the business contribution from Honda are on track for expansion in the two-wheeler space. Secondly, they're looking at value unlocking through the demerger, and this is of the driver information and connected vehicle solutions business, and this will be demerged into a new listed entity, which is Pricol Autotech. That is pending regulatory approvals, but once that happens, there is absolute value unlocking for the shareholders as well, and they are forecasting a 15% EPS growth in FY27, 31% in FY28 and 24% in FY29. So across parameters, they're only talking about expansion, premiumization and digitization that is going to aid a Pricol.
Thanks. So keep an eye out for pre-call and keep an eye out for everything else that Goldman has said. I think the basic theory that they laid out was that auto anchs will no longer remain just auto anchs. Dharmesh Khan, head equity research at Chola Securities, joins in for his thoughts on the fundamentals. And Dharmesh, good morning. Great talking to you. It's been a while. So good having you. I'm not asking you to comment necessarily on another brokerage note, but the theory of auto anchs, which are great precision manufacturers, now expanding their wings and doing multiple other things. Some are doing defense, some are doing something else, some are doing something else. Is that a value driver? I mean, Sona Comstar saying that their revenues will go 10x in 10 years. That's quite something, right? What do you think of the auto ancillary space and pre-call or a Sona in particular?
Yeah, very good morning to you, Neeraj, to all our panelists and viewers. Yeah, definitely. I mean, they are shifting their business proposition at the right time because just sticking to one segment may not work. And we have seen, I mean, a couple of years back, they were struggling to have the value growth in place because of one was a transition from ICE to EV modules, so many were not prepared for that. So I think things are falling into place, and whomsoever even we have been interacting, they are suggesting the same. And aerospace and defense is becoming a new talk of the point, and they have been doing well. I mean, like Sansera Engineering and all they delivered more on the PCB front. So, but that was a big surprise. Our initial thought did suggest that they would be delving into that in a great detail, but they did so. And most of their machines, manufacturing facilities, which they put in place are fungible in nature. So they can shift their fungibility of machines and manufacturing of components quite easily. The newest technology is helping them do so. So, to my mind, this is a good value proposition. Auto, anyways, is doing very strong. So ancillaries have to do well, and Sona also came out with a very strong set of numbers and followed by pre-call. So good, interesting bets to look at as of now. So we as a house are particularly bullish on the entire automobile space and with auto ancillaries in place. And going forward, I think Q2 and Q3 will surprise you on the margins as well, because price hikes have already been taken by OEM manufacturers. Whereas input prices are not so high as was expected. The cool-off has been there. Few spikes have been there in the commodity prices, but I don't think that's going to dent a little to a margin dilution. Rather than because of the price hikes being taken, it will be margin attractive. So we are setting in for a bigger surprise in the latter half of the year.
Okay. just want to look at a few more stocks before we get into the opening. Look at SJS Ent. Goldman Sachs has initiated a buy with a target price of 2,850. They're saying decorative aesthetics are picking up faster in premiumization-led categories. Car digital display market to reach $25 billion at a 91% attach rate, growing market share supported by acquisitions and export optionality. Just also want to quickly talk about SRF and then we'll get views on both because SRF is one of the stocks which is performing okay this morning. They've been upgraded to a hold from an underperform, and the target price though remains pretty much the same, which Jefferies has given. They're saying it's a strong beat led by technical, textiles and packaging films. Specialty chemical segment recovery is elusive. Stock has corrected 14% in 2026 so far, heading into a seasonal weakness, trades at a long-term average and leaves limited room for downside. They've raised the EBITDA outlook also to 3% for FY27 and 2% for FY28. Parag bhai, any of the two that you have looked at, SJS or SRF?
So SJS I have looked at, I have met and I have missed. Okay. So SJS is a big miss for me.
So you've looked and passed, or you have looked and missed and you're regretting? This is a FOMO statement?
Yeah, so missed it. So,
okay.
So I admit that it was a great company. I liked it. I just passed it because of the valuation discomfort, and then now it just keeps going up. Because but many other auto components luckily have made money for me, but like Midla Corps of the world. And I just strongly believe in this note, that auto components are no longer simply auto components. Their content per vehicle is increasing, their opportunity size, total addressable market is going up with defense, aerospace. Sambandhana Motherson, for example, is now investing big in aerospace and electronics, both. So if somebody like Sambandhana Motherson comes into that space, that becomes very interesting for people like me who want to buy, known names.
Yeah, and the quantum of revenue uptick can be quite substantial with some of these aviation orders as well, right? The question though is on the technicals, and Kush specifically on SJS. What is the view?
Goldman Sachs perhaps would have spoiled my weekly pick candidate. It's that strong. The movement on this one, so strong. Of course, we start preparations a day or two.
Why would it have spoiled your weekly pick?
Because if it actually moves higher, if it opens higher, then the trade, the initial trade and the risk reward ratio is lost from that perspective. But very strong. Supports at about 2150, 2200. If it declines, continue to accumulate. Very strong on the charts as well.
Of how some of the market caps of some of the manufacturing players have moved. You look at a Sansera, you look at a KRN Heat, you look at SJS. I think there is a fabulous story out there, and we'll try and capture it as well. We'll ask Dharmesh Kant about something that he may like in that cohort or two while we've spoken about auto anchs. But Kush Bora, if you had to nail it down to that one top idea for the day today, which one would that be based on the pre-open rates, of course?
Despite the trend, I will still go with the long call on M&M. Just to reiterate the targets, 3330, 3450, stop loss 3130.
Okay, 30 seconds left for the markets to kickstart trade. So just keep an eye out on what happens to the PCR once the market falls. Does that give a bit of a support? Some of the obvious candidates which should have gotten hammered. Indigo, for example, is having not necessarily a very sharp downtick. Downtick, yes, but nothing dramatic. So keep that in mind. Brent though is now above $101 per barrel, and that should set the cat amongst the pigeons. Not that there aren't too many already running around there, so keep that in mind. But here come the first rates. We'll have red on the screen. Question is, how bad can it be? It is tough. 180 or 190 odd points, so in line with what was anticipated. The market breadth looks wobbly, 403 to 1359. No surprise there. Banks 0.7% lower. IT's clearly fallen a bit more, courtesy Infosys, I would presume. No, IT is actually not done that badly. Not bad really. Mid caps 0.63%. So there are other factors which are hitting the index. I'd love to see the heat map and see what is really cracking and pulling the index lower, because it's not IT. First we are sea of red, by the way. Indigo 2%, Eternal, Airtel. Okay, Airtel is putting a little bit of that pressure. Infosys is putting that little bit of pressure. But yeah, I reckon Airtel's corrective move is the one which is also having that bit of an impact on the Nifty, on the points contributor. We'll get that up in a moment. Dr. Reddy's continues to be sluggish. Infosys is putting that little bit of pressure. But yeah, I reckon Airtel's corrective move is the one which is also having that bit of an impact on the Nifty, on the bonds. Just a 1% downtake on those numbers. Just a 1% downtick. I think the market is coming to terms with the fact that if the crude situation were to reverse very quickly, they won't get a chance to latch on to Interglobe Aviation. Quality franchise, available lower, maybe not cracking too much because of that. What's doing well? Cipla 2.8%. Maybe I missed the news, maybe Tamanna can enumerate. HCL Tech, ONGC, Coal India, Adani Enterprises are amongst the others. But there are only 4 or 5 winners, a lot of losers. Just want to pull up that point contributor once and see what Airtel is doing in terms of damage. Yep, 20 odd points for Airtel, 20 odd points for HDFC Bank. So non-bank, non-IT, it is this boy which is putting that pressure, a little bit of that extra pressure on the index right now. But Infosys too, cracking under pressure. Not too many in terms of winners, unfortunately, Tamanna.
Yeah, I would say watch out for HDFC. That's a big story really. And let's pull up the intraday if we can, because 3 US law firms have started accepting petitions for HDFC. That's a big story really. And let's pull up the intraday if we can, because 3 US law firms have started last evening to say that if you want to join this suit for us, basically there is that legal action that has started in the US. So we'll get you details of that story as well. But watch out for HDFC Bank, and this is why maybe it's going to be a bit of a drag. But let's pull up the broader markets if we can and take a look at what's happening there. Is it as dismal? Actually, it is not as bad than what the Nifty is looking. Thereabouts the same, of 0.6% on the mid cap 150, the small cap also 0.5% down. Advanced decline ratio is not a pretty sight this morning. The bears are firmly in grip. Up. I mean, think about it. It's like crude flow is getting choked from all ends. You have the Strait of Hormuz first in trouble, and then you have the Red Sea route also in trouble. This is definitely going to happen. Need to watch through the day. 101 has been breached. It's a psychological mark, but the climb has been steady and painful. 100.97 now. So watch out for this number as well. Pull up the sector map and look. No, there are none this morning, unfortunately. Nifty Realty worst hit and typically tends to dwindle and have a bad time when crude prices are high. There's a correlation there which has been forming. Auto stocks also obviously in that. So obviously IT now popping up in the green, and I wonder which of the IT stocks are really giving that kind of and its internals. I want to quickly see that and what really is giving some relief. Emphasis spot, perhaps you'll hear from the management on NDTV Profit in a short while from now. Do stay tuned for that interview. HCL Tech management on NDTV Profit in a short while from now. Do stay tuned for that interview. HCL individual stocks, right? Because a lot of companies have posted results. So let us see how they are faring and how the street is looking at set of numbers, and it's showing 3.5% up. So it's turnaround, right? A lot of analysts saying that let's wait and see if this sustains, but the fact is it's better than feared. So it's a beat on estimates. IGI seemed like a good set of numbers. The stock is down. Motilal Oswal also seemed like a good set of numbers, but the fact is it's better than feared. So it's a beat on estimates. IGI seemed like a good set of numbers. The stock is down. Motilal Oswal also seemed like a back to Infosys and Emphasis, because they also did report. Emphasis now. You will hear from the management this morning on NDTV Profit. Stay tuned for that. I want to look at what Fractal is doing, what Sona BLW is doing. Both good set. Positive brokerage views coming in on pre-call, SJS, SRF. Pre-call really no as well, since we're looking at positive brokerages. Fractal actually not in the positive brokerage category at all. I think that's a graphical error. But let's look at SRF if we can, and then I want to pull back on and look at coming in for SRF from Jefferies, if I'm not mistaken. Just want to look at Interglobe, 1.5% down now in the red. And both of these I'm highlighting because there has been a clarification from Adani end saying that no, we're not starting an airline. That is a positive reaction there, and that's actually positive for Interglobe as well. Standard disclaimers here, you're watching this program on NDTV Profit, which is part of AMG and part of the Adani group. So those are some of the big movers this morning. I would say big more on the negative side than the positive side, Alex.
Yeah, but there are a couple, Tamanna, that you also pointed out that are building a little bit once the initial ticks are in, right? And one of them is Emphasis. I think based on the guidance and the commentary that came through from the management in the conference call earlier today as well, has gained quite considerably. It's up about and the commentary that came through from the management in the conference call earlier today as well has gained quite considerably. It's up about 4%. Cyient is also building right now, and Cipla is up as much as 3.5%. I do want to talk about Cipla and why. Of course, the earnings, and there was pressure on margins, but a couple of brokerage notes are coming through that are positive. One of them is JP Morgan on Cipla. It's maintained an overweight and hiked its target price to 1,600 rupees from 1,550, and it says that the revenue was in line, and there was a miss on margins as well. Sequential uptick in US is set to be supported by key launches. India outlook remains healthy, led by branded prescriptions. One Africa, which is a scenario that they have, the private market outperformance remains in focus, and in the EMEU, that is the region, top line growth is set to be prioritized. Now, the US launch pipeline and the India momentum underpin the upside, and the key catalysts ahead are what I just mentioned. So that's perhaps the reason why the stocks are up and about. Now, on that note, I'd like to thank both Kush Bora as well as Parag Bhai for joining us in studio. Always a pleasure having you. Now, UBS is turning bullish on India and upgrading it to an attractive, pointing to firm capex momentum and early growth in the loans, as well as pay hikes fueling consumption. Their read is that India's structural story is outweighing the volatility. Hartmut Issel, who is the head of equity and credit APAC, as well as chief investment officer at UBS Wealth Management, joining us right now. Hartmut, thanks so much for taking the time. And we're speaking on a day when the external factors are weighing on sentiment for risk assets here in India. So while that domestic story, as you've pointed out, has been resilient, it keeps getting challenged from the external front. Crude oil is a big concern. So how do you juxtapose the two?
Yes, no, you're absolutely right, and I would agree that this is certainly there's some vulnerabilities there. But then again, I look at the market, right? Also year to date, or even 2 years, the last couple of quarters, basically, we're seeing sort of a flat trajectory, and recently is not least because of higher oil prices, also a bit of downward trajectory. But then we think, okay, 6 months out, 12 months out, end of this year, maybe middle of next year. Right? These, especially on the oil side, especially Strait of Hormuz issues, right? Things are settled. Then why wouldn't you invest there now when you can invest at these relatively low level?
Hartmut, good morning. I would presume when I was reading your note, and the note said, good morning, this is Neeraj here, of course, that you see catalysts for a turnaround emerging and a compelling entry point for India. Did that bake in a possibility of crude prices again moving higher, which they have? And pending that, or let's put it this way, if that were to reverse, then great, the belief stays. But if they were not to reverse, would the theory around the compelling entry point get delayed a bit?
Yes, on the oil side, or the oil price side, comes, as we all know, from Strait of Hormuz tensions, etc. So you need to have a base case, which is also our base case, right? That, let's say, as I mentioned, right, say end of the year, these issues are settled. I mean, among other things, you have a midterm election coming up in the US, when, of course, the Iranian side also has an interest in actually shipping out the oil and selling it to the world. So you have a bit of ultimate alignment there on both sides. And yeah, how they negotiate, yeah, of course, it's never a straight and easy answer. But the end game, I think we can define as this in our base case. And when that is the case, so we're not talking about maybe next month, maybe on both sides. And yeah, how they negotiate, yeah, of course, it's never a straight and easy answer, but the end game, I think we can define as this in our base case, and when the oil price is a bit higher as possible. But towards, fourth quarter, end of the year, the situation is soft, and of course the market takes a different view on things, especially here on the oil prices, and I think we can preempt that.
Okay, morning, Hartmut. Tamanna here. I'm just wondering how, when you look at what the situation is, how do you account for a sudden and swift reversal? Because we've seen that playing out a couple of times now, where it seems like the two sides are coming to a brink and then there's a quick reversal. Does that on end balance things out when you look at India from the time span of a year, where we've had these highs and lows coming in?
Yeah, look, Strait of Hormuz is one reason, right? So we are looking at a market here, let's say a Nifty, right? Is actually outright a bit down year to date, right? So a lot of concerns are in, and yeah, Strait of Hormuz is one. I hope I was able to convince also our viewers that yeah, right, we look a little bit out. There is a solution most likely inside here. The other part is also what we, of course, see also from our location, Singapore, right, with many global investors. What we, of course, also notice is that also here for our region, a bit broader, say Asia. Right? The first half was basically, the rule was that many, especially global investors, they wanted to go to AI-related markets. And of course, we have two in the north here, which is Taiwan and Korea. Right? My playbook, or our playbook also here for the second half is, right, so you have a big differential between Taiwan, Korea earnings growth and, let's say, in India, Nifty earnings growth this year. But next year, nobody goes down, but the difference will also be a bit smaller. And I would argue we have also in the March quarter for India, we have seen that, compared to the last 2 years, which were unusually low, mid-single digits for Nifty earnings growth, and in our numbers, you don't get that very often, right? They're already starting to pick up. So next year, when the differential between the North Asia and, let's say, also Nifty, right, these markets reduce it a little bit, every investor will put on a different lens and say, yeah, I cannot be out of the India market. We think that is a good timing right now.
So the good timing right now is not despite India not having an AI play, but because of it. Am I understanding that correctly? Because in relative terms, it's looking like a safer haven while we see all of this upheaval in markets like Korea.
Yeah. Basically, what I'm suggesting is, so we had these two North Asian markets that I mentioned, right? You look at how they have performed, you look at how a non-AI market, more or less, right, like India has also performed. So people have priced investors have priced something in, right? There's a big difference. However, in terms of earnings growth next year, and we're only half a year away from next year, right? The differential will narrow, right? So naturally, for the second half, I think every also global investor will ask themselves, right, what is the playbook from here on? And it cannot be that I have only AI exposure. I'm not saying we shouldn't have any, but only AI exposure and nothing else, where we also have a growth market. Right? India, I think earnings-wise, that comes also back very clearly as a growth market, just for a different reason, maybe not so much AI. I need both. This is a bit the thinking here behind.
Hartmut, so then essentially the point comes back to saying that FY28, you're anticipating that the earnings growth trajectory and picture will be dramatically different from what you saw in FY26 and also FY27 for the large Indian companies, to a certain extent also from the perspective of the base, and I guess what happens to the artificial intelligence related companies as well, right? I take that point entirely. But if you're looking at the fabric of the offerings available in the large cap cohort, which I'm guessing is what you look at, what looks the most attractive? Because even within that, there could be different themes that emerge, some growing significantly faster than the others.
Yes, I would say where we focus a bit in particular is the banks, and yeah, I mean we're all aware. If I look 12 months back, 18 months back, if I look at where just the system loan growth where it is now, I mean it's almost doubled. Right, so why shouldn't bank stocks respond a little bit more than they have already? I'm also trying to dissect a little bit, anything that is in close, maybe not fully AI, but at least data centers, right? So industrial stocks, for example, those where we have a little bit of a leeway into that is interesting. And we heard also on the program here, and this is perhaps a bit contentious, right, or anti-contentious, I should say right now, who were perceived as, at least previously, as perhaps losers from the AI trend, right? So we had IT service companies, right? They were pulled down. Maybe even on the travel side, some of those, right? But I also think everybody, investors in particular, can take a different lens again. It seems to start happening actually, right? So if I sort of pronounce something other than banks and also maybe some of the industrial companies, I would say why not giving a fresh new look at IT services. I think the market has punished them overly. That's my view. And then maybe also other ones, for example, on the travel side, which is maybe more straight or foremost, partially AI, could also come back more once things are a bit calmer there.
But and interesting you say that, because 3 or 4 of the well-pronounced IT names have actually said that AI is no longer the disruptor but an enabler of future businesses, if you will. I think we had TCS sounding very confident about that outcome, as was HCL Technologies, and as was a company called Emphasis that we spoke to today. So very interesting that you say that about IT services. The follow-up question that I have, Hartmut, for you is what within the for India, traditionally, pharma was known as the beacon of manufacturing, if you will, right, for exporting globally, etc. Now we're seeing a bunch of other sectors come to the fore. What within that manufacturing landscape do you like? Because there's a lot of emphasis from the government as well on manufacturing in India.
Since you mentioned the pharma side, I mean, if we have a focus on certain sectors, we also need to defocus a little bit on others. So right now we don't have in our selections a lot of pharma names in here. So yeah, therefore I would also say maybe it's not directly manufacturing, but you raised a very interesting point here on the IT services side. I wouldn't actually go as far. Yeah, therefore I would also say maybe it's not directly manufacturing, but you raised a very interesting point here on the IT services side. I wouldn't actually go as far as saying nothing can be or will be displaced. There are, but we have seen that in previous tech cycles too, right? There are areas that or at least parts of the revenue breakup, basically of the IT services companies. Yes, there is some pressure. There's deflation. You need to reprice things, etc., etc. But as you also rightly mentioned, and I think the market also didn't focus enough on it, right? We have also a part of the revenue chain of the IT services companies. Yeah? We've seen triple-digit growth, right? So they're just starting. And the market is often, in every tech cycle, by the way, the market is often a bit slow. Right? They first see the downside and say, oh yeah, there will be, I don't know, fewer headcounts and all these things. And then they say, but wait a minute, there's new areas coming up. Who's going to integrate it for me? Is it going to be model providers? Is it going to be hyperscalers? We know who it will be, right? And therefore, again, as an investor, I think one can be early saying, hey, let's take a different view here, also on the IT services.
Okay, Hartmut, the other thing is, you reckon foreign investors, which have largely been absent from the action or have been present but on the selling side in India and a few other markets for a really long time now, when is the tipping point? Is it when there's a conclusive end to this Middle Eastern conflict, or could there be other factors at play?
Yeah, Middle East is one, so we already talked about it, but you're absolutely right. Potentially also another factor, right? Which one is that? Right, so the markets that I mentioned, right, semiconductor related, especially here in our region in the north of the region. So what is happening? What also many, of course, the global investors also ask themselves, right? Because technology functions typically in cycles, right? And this cycle AI is no different. It's also to some extent a cycle. So what happens here, right? So right now we have, and let me go maybe a bit outside India for a moment, whether it's China, whether it's US is actually fairly similar, right? So you have these so-called hyperscalers, so anybody who runs a cloud, they're seeing that demand, and that's positive, right? The demand is there. There's no question. Nobody questions the AI demand. But how does it get distributed in the chain? So the hyperscaler first, because they, before they can actually sell something, they need to build the factory. Before they build the factory, the data center, they need servers, and before they have the servers, they need the components, i.e. the chips, right? But at some stage, right, and given how much the hyperscalers are already up with their capex, right, whether it's next year, the year after, but there will come also a time where, of course, you cannot double your capex every year. Right, so that means then also, now, how does it look on the semiconductor side? And of course, everybody's thinking about how do I time these things. Right? So from that point of view, right, you also the point that I made earlier, right? For next year, for both our North Asian markets, you will still have earnings growth, but not nearly as high as this year. Base effects, right? And then you will have a Nifty that, in my calculation, comes back to a double-digit earnings growth. You will take a different look at your portfolio.
That's a good point. Hartmut, then from outside of all that we've spoken about so far, let me ask you about two more aspects that would weigh in, I think, from the perspective of the foreign investor, which is the risk-free rate, with bond yields in the US going up to as much as they have, and the possibility that they could stay elevated, could even go up if the monetary policy stance changes. And the other aspect is currency from India's perspective. You already have seen over the course of the last year and a half to 2 years a dramatic fall in the Indian rupee. How would you view these two things that you may not be able to entirely predict when you think about deploying at this juncture?
Yeah, maybe I'll start with the currency first, but that's something we always had. This is not actually a new phenomenon. Okay? So what are we looking at here? If you go over 2.5 decades, basically, right? So let's say you start in 2000, and then you look at the Nifty, for example, right? So one of the best by far, top-notch performance year by year. Even if you put it into US dollars, naturally we all know, right? So typically 2%, 3%. If your home currency is dollars, like many of our investors have that, right? Yes, you deduct a little bit, but still, even if you do that, at least in the last 2.5 decades, you got a low but still double-digit return on your investments. Right? So I wouldn't overemphasize too much that rupee. Right? You make that bit of a deduction, but it's still, even in US dollars, it looks very, very strong. Then when we come to the, let's say, Fed side, maybe also bond side, we're also a bit surprised because really what had brought up the inflation side recently, for the most part, oil prices, to some extent, maybe also the tariffs. But I mean, this anniversaries, right, is already in the base for more than a year now. So we're seeing these kind of elements at least stabilizing, in some cases even slightly coming off. So the question is, do bond yields have to rise a lot also globally, or does the Fed really, are we ahead here of a 4-6 times rate hike cycle? Looks very, very unlikely. And as a matter of fact, we think more likely than not the Fed might not even do much at all for the rest of this year.
Hartmut, you are, I think, one of the very clear voices that are seeing merit in Indian markets when a lot of others haven't. Is it restricted to the large cap stocks that you see in the Nifty, or have you gone deeper down? Because that's where most investors are finding more value.
Yes. I would say on the stocks we directly cover, it's more the large caps. But then again, as we often emphasize, and yes, we have, as I mentioned before, and we have a lot of global clients, and then buying stocks in Mumbai. For many that's out of reach anyway. Now you can buy maybe a handful somewhere in the US or maybe UK. That is probably not the approach, especially when some of our investors, right, they're not even so familiar that they think, oh, I need to think about India, one of the largest economy, maybe by end of this decade, third largest economy. I cannot completely be out of it. How do I look at it? Then probably a more sort of diversified solutions, whether it's, I don't know, some certain funds or maybe a ETF, something like that. This is probably better. And then in those, you will typically also find some of the smaller ones before you go out and say, okay, again, if you sit in, I don't know, Europe, if you sit close to China, if you sit in the US, oh, I want to pick this small cap, we say, look, you diversified, you have part of it in your portfolio, then I think that's the right approach for our global investors.
Hartmut, pleasure speaking with you. Vielen Dank and Auf Wiedersehen. All right, let's head across and take a check on what's happening with HDFC Bank, because news keeps flowing and it's really not the best kind of news. The latest update here is that multiple US-based law firms have initiated investigations into HDFC Bank to assess potential violations of federal securities laws. What does this pertain to? It's an older case, but then Nimit is here to explain the context and what this means from a legal perspective as well. Nimit, first the context. What are we talking about here? What is the probe into, and what happens from this point?
Yeah, Alex. So 3 law firms have basically cited the same Indian Express report that came out in May, which alleged that HDFC Bank made payments to the Maharashtra State Road Development Corporation to attract deposits and then disguised these payments as marketing expenses. Now, what these law firms say, and remember, there's no regulator or no legal authority saying this yet, only the law firms. What the law firms say that this could amount to an investor misleading case where you've not made adequate disclosures about these payments that have been made and how you have accounted for them. So what these law firms do, and this is typical in United States legal business jurisprudence, where law firms will seek out class action or investor lawsuits so that because they get a percentage on that in class action as per US law and how that functions. So this is a business opportunity for them, and a lot of them don't play out. But what they're seeking right now is information from investors in the US as well as in India about any investor loss that they've suffered or any misleading statements that HDFC may have made tied to this Indian Express report. Now, these allegations, remember, important to point out, these are just allegations both in India and in the US. No securities regulator has come out and said that there's an action here against HDFC Bank. It's only the law firms that are investigating this, and they're investigating whether this could lead to a potential securities class action in the US.
Thank you for that, Nimit. We'll continue to track this story. We've had no response from HDFC Bank yet on this story. Let's talk about Fractal. So a sequentially weak quarter, but year on year the numbers look good. The healthcare segment has helped the company grow strong for the year. We're going to be speaking with Srikanth Velamakani, the co-founder, group chief executive and executive vice chairman of Fractal Analytics, on what the company is doing going ahead. But Srikanth, hold on, we're just getting Puneet, our colleague who tracks your sector, to do a quick setup of what the numbers were like.
Well, thank you for that. As you rightly mentioned, the quarter-on-quarter performance was slightly more weaker because revenue grew 3%, while the EBIT, was down in this particular quarter by almost 28%, and margins hence are affected by almost 440 basis points. Now, while the biggest sector, the consumer packaging sector, has done well for the company in this quarter, healthcare has now taken in the second biggest vertical, and that is a key positive. But there is some pressure seen on the TMT sector. Now, we have seen that within the industry, players like HCL Tech have also called out some pressure visible in that space. So that will be one of the questions as to what they are seeing right now in this particular vertical. Will the growth be visibly back? And for BFSI as well, for the company, it's a slightly more smaller vertical compared to the larger industry players. How does that growth go through there? And if healthcare will continue to have this dominant growth, while of course a lot of questions on AI continue to be one, and the company's journey on the same.
Okay, let me go across to Srikanth. Srikanth, first of all, thank you so much for speaking with us. Always a pleasure to have you on with us on NDTV Profit. Let's start by understanding the quarter. On a quarter-on-quarter basis is a bit of a slide. Was this a tough quarter?
See, overall, there are seasonalities in this business. Therefore, the best way to look at this business is year over year. And we have 20% growth in rupee terms year over year, overall revenue. And the profits, every single gross margin or EBITDA margin or EBIT margin, every single margin number has trended in the right direction. So Fractal overall, profitability-wise, doing really well vis-a-vis last year. One of the things that we were asked when we were going public was that our margins going to be consistent. Can you deliver consistent margins? Yes, our gross margins have always been very consistent, high 40s, almost close to 50. But EBITDA margins were up and down a little bit. But now we have made sure that our profitability numbers look really good and they continue to improve every quarter. So that's the good news. Overall revenues at 20% is sort of okay, but we would like to have had that number at a much higher number. And if you look at our growth excluding TMT, it's 35%. So TMT is a negative 22% quarter vis-a-vis last year. So that's really what has pulled down the overall growth from 35 to 20 overall. And we expect that the TMT vertical will start to bottom out in terms of its degrowth and start to next quarter we'll see sequentially better quarter than this quarter. And so therefore some of the problems that we're seeing right now will start to get resolved in the coming quarters.
I take your point, Shrikant, but a lot of the same industry is looked at in a quarter-on-quarter basis. I understand your point that look at it year-on-year. There might be some seasonality. Would the good performance of healthcare, which has in a sense mitigated some of those TMT losses, also be subject to that seasonality, or you expect that to sustain?
TMT is doing really well as a vertical for Fractal, and we expect it to continue to do really well for
healthcare. I'm asking about healthcare. Are you referring to healthcare?
Sorry, yes, I'm talking of healthcare. Sorry. Our healthcare life sciences vertical is the second largest vertical now. It has done really well over the last couple of years, and we expect it to continue to do well. TMT, I think, has had the problem. It is bottoming out overall. So which means that the next quarter, it will have a sequential growth. Overall, AI opportunity is so huge across so many sectors that really it is our execution which is far more important than just the sector per se. Wherever we're executing well, we are seeing tremendous growth ahead of us. And as we improve our execution in TMT, we should see TMT also starting to grow.
Shrikant, morning, Alex here. So you say that a 20% growth is what you achieved, and you say that you would have wanted it to be higher. So I'm just trying to understand from your perspective, where does that number lie? What are you comfortable with? What is that aspirational figure? And do you anticipate that you will be able to play catch up? You say that TMT is going to get back into the right track in the second quarter, but will you be able to catch up with what you had anticipated for FY27?
Overall, we don't provide guidance, so there is no number to catch up to in that sense. Having said that, do we expect or do we want our growth to be higher? Absolutely. What growth would I be happy with? We should be happy with growth that exceeds 30% overall. That would be the happy growth number. We're not there right now. And what we're doing is to construct the company in the right way so that we can deliver a 30% growth year over year consistently for the next many years. So that foundation work is happening right now. We've organized the company into 3 vectors. Number 1, AI-led transformation. As companies start to reimagine their workflows with AI-led transformation of every business function, process, service is going to be very important. And that could be a multi-trillion-dollar opportunity. Number 1. Second is in order to do this AI-led transformation, you need to build AI foundations, build the knowledge layer, the context layer, the ontology layer of your organization so that you can do transformation. So that's an AI foundation layer. And 3 is you have to reimagine your work and workforce with AI. So we're helping companies do that as well. So these are the big 3 opportunities in front of us. And we expect that as we execute better on all of these, our growth rate will start to pick up quite well.
Okay, I do want to ask you about AI-led deals, and of course the answer that a lot of people have given us to questions on AI is that every deal has AI embedded. So let me ask you this, right? When you talk about the offerings that you have, I'm trying to understand the margin contribution for each of the sub-levels of AI. So if you're talking about agentic, or you're talking about generative, or you're talking about classical, what is the kind of breakup that you have, and where are you most prevalent?
See, first of all, when people say that AI is part of every deal, you're talking of a generally tech services, answers to that question. And because most of the tech services companies are actually building the engineering backbone of the organization, now they can use AI to build that engineering backbone. And to that extent, AI is part of that. From a Fractal vantage point, Fractal's business is empowering decisions of the companies, helping companies improve their growth rate, understand customers better, understand their profitability levers better, improve operational effectiveness, improve new product introduction. We solve these kinds of business problems and power decisions inside organizations. And here we are an AI first company. We just do AI. We do nothing else. From our vantage point, like you rightly said, we do classical AI, which is using AI to improve decision making using structured data. Now that has been a large part of Fractal's business. It continues to be very important. But now you have agentic AI in everything, right? You have to add agentic AI in the way you solve problems. To give you an example, we built a data science agent called PyEvolve, which is now called Cogentic Data Science. Now, this is a agent that does data science work. So it's an agent, but it does solve data science problems. So you will see the blurring of these boundaries between classical AI, Gen AI, and agentic AI. From our vantage point, it's all AI. And you use all of the levers to solve business problems and power decisions inside companies.
Well, that's a good answer. Shrikant, thanks so much for taking the time. Wish you all the best in FY27. We'll speak soon enough.
Thank you. See you soon.
It was a good answer to say, to draw a distinction between how the traditional tech companies are looking at AI and building it into their products.
Yeah, and well, it's working for some others as well. More so, Mphasis is a beneficiary of that, because while they've reported a mixed set of first quarter numbers, the guide actually pretty decent quarter. The second quarter guidance is very strong. Let's get in the management. Nitin Rakesh, CEO, and Arvind Vishwanathan, CFO at Mphasis. Nitin, start with you first. Sequential growth, acceleration. You guided for further acceleration in sequential growth in quarter 2 FY27 as well. What underpins this confidence?
I think, firstly, we are also operating in the same environment that everybody else is operating in, right? Whether it's macro, AI disruption, AI deflation, productivity issues, deal making being, difficult because decision cycles are longer, right? So, despite having the same environment, what's really working for us is a combination of 2 or 3 things. Firstly, we took a fairly forward-leaning approach in saying, every time you see an opportunity that the client's looking for efficiency, go find a way to apply transformation and play at the intersection of tech, transformation, and outcomes versus just cost. Now, to deliver that proposition, you need capability, you need potentially certain assets that otherwise you're not going to be able to deploy it in the time frame that the client's looking for. And you obviously need to have an operating model and a business model that supports that transition. And that's the culmination of the few years of work that we announced as Mphasis Tria. And that's definitely changed the conversation with a number of our customers. And that's why we are saying we are able to create not only wallet share gains, but we're also able to attack markets that were so far kind of not traditionally tech services markets. Everyone gets so focused on the tech budget. And we're like, it doesn't really matter what the tech budget is, because in the end, if you're going to drive a business outcome, and the business outcome could be a 1% lift in revenue realization, it could be better underwriting decision that is measurable, the business will fund any program that drives that outcome. So I think we've kind of, in a way, broken the mold a little bit away from just trying to focus on where the tech spend is and what we need to do. And I think the tailwind that is helping us is that we just entered the second innings of the baseball game called AI. First innings was all about which is the best tool to adopt. Should I do Copilot? Should I do Claude? Should I do Cowork? Should I do, Codex? Should I do Gemini? And that creates a lot of inaction because there is a hesitancy in pulling the trigger this year, because we've seen what happened to a number of these decisions. They suddenly started looking like they were legacy decisions, because the pace of change is so fast and so rapid. So clients are moving away from chasing the next best tool or the next best frontier model to really taking a step back and saying, okay, how do I build the AI infrastructure that gives me the ability to drive a business outcome, irrespective of what I can plug and play or what I can replace? And taking that thought leadership and helping customers think through that model shift is really opening a lot of doors and deals and pipeline. And then obviously you have to follow through with deployment. You have to have the right people available. You have to have the right platform assets available. But most importantly, I think breaking the mold away from just trying to play in the tech spend has been hugely transformational for our thinking.
Interesting. Nitin, on TCV and AI contribution, what's the quality, the average deal size, and the expect revenue conversion timeline of some of the wins compared to the prior quarters? I presume you are in innings 2. You will probably go all the way to innings 9 in this baseball game that you are in.
A very interesting question, Neeraj, because absolutely there are 3 large deals. The biggest one is a 3-figure deal over 100 million. But also we are also starting to see a fair number of short burst, short duration deals, because let's go back to the conversation we were just having. Do I have the right foundation? You can't go to the client and say, oh, you give me a $10 million 1-year program, I'll build the foundation. Well, then you're not really doing an AI program. If you can't get the foundation up and running in 8 weeks, 12 weeks, then you're doing something wrong. Right? So there is a fair amount of, and I think we called this out in our earnings deck and as well as in our commentary. There is a fair amount of deals that are short duration, short burst, but they're foundational for the next wave of the spend. So we are not seeing them as one-off projects. We are saying, okay, if I set the foundation, I have another 7 or 8 waves of AI adoption that I can play in. And hence, this is a great way for us to get embedded into the AI adoption at scale story that everyone is grappling with right now. There are 9 innings. We are in the second innings. We intend to play all the way to the 9th inning when every enterprise really truly becomes an enterprise that is powered by enterprise agency.
Okay. Now, I have to come to you on Arvind on margin compression because operating margins did dip. What is the reason for the same? Do you expect an uptick coming ahead, or will it be range bound?
So we've kind of always called out our margin range, right? Our margin range is between 14.75 to 15.75, and we are within that range. We're probably at the lower end of that range. Couple of reasons for that, and I would say both are good reasons, right? Some would say there are no good reasons to drop margins, but possibly this is one where I would say it's probably setting us up for a stronger future. One was a very strategic acquisition that we did that kind of impacted margins by about 35 basis points. And the second is we've kind of seen a pickup in demand. That's how you started the interview in terms of how do you see acceleration. We've talked about Q2 being probably our strongest quarter over the last 3 years. So that has kind of led to certain amount of investments for, deal ramp ups. So our utilization dropped a bit. And these two broadly caused the margin softness in the quarter. One should also note that given our hedging policy, which has been consistent, our hedge losses were quite high. We're close to $9 million of hedge losses. And therefore, we didn't really see the benefit of the rupee depreciation in our margins yet. So that's really where we stand. I think as we go through the year, I think there will be a reversal in terms of this trend, and we will see a more normalized margins for the full year, right? And I will be within the range that we've talked about.
Nitin, I'm coming to you now. The BFSI space, it's a large contributor for you. If the banking earning has to be believed, you looking at a very strong show up ahead as well?
So, Neeraj, if you look at the last 4 quarters, our banking BFS, not even including insurance, and insurance also grew almost like 20+% last year, FY26, and even this quarter, the YOY number is fairly strong. But if I look at our CQGR growth of our BFS business, which is the constant currency quarterly growth rate, is 3.5%. It's the highest in the industry. It's not that we are now going to tap into it because banks are doing well. We've actually already shown tremendous growth in that business over the last 4 quarters or 5 quarters. It is a flagship segment for us. We have a very strong right to win. Banks are obviously on a strong footing when it comes to their own earnings, but they're also not immune from the interest rate cycle reversal that is likely to happen in the US over the next 6 months. So it's not that, they're gangbusters happy to spend. They're obviously cautious in spending, but they're also very happy to fund strategic AI transformation programs. So it's a bit of I would say, double-edged sword with macro overhang, but at the same time, for the right proposition, budgets are available. We expected more M&A activity in the banking space than has happened, but I still think in the next 2 years, before we see a regime change in the US, we are likely to see a little bit more activity, and that also drives, spends. But overall, I think that segment has been fairly robust. Cautious, but fairly optimistic that will continue to be a growth driver through the year, purely based on the strength of our propositions.
Name for disruptor in that.
A double-edged sword, because every opportunity, there is also a threat. I think the threat continues to be the deflationary threat, the productivity pass-back trend. And if you accept productivity pass-back, and then you might as well roll over and think about doing something else. The opportunity really lies in going away from delivering IT services using AI to truly taking a leap and becoming partners for your customers in doing scaled AI deployment. 2 different things. Similar skill set, different skill set as well, because now deployment requires a very different elite engineering mindset. And it also requires an understanding of what are you deploying? What is the platform? What is the foundation? So I think if you stand still, you will only get rolled over by the deflation. If you have the ability to take the leap, attack the new addressable spend that is coming out of non-IT budgets, and build propositions that really truly drive business economic measurable outcomes, sky's the limit of how much we can do as an industry.
All right, gentlemen, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. All the best for the quarters ahead. And confident emphasis, Alex. Let's see. The stock is off the highs of the day, though.
Certainly it's and come off quite substantially, because at one point it was up as much as 4%. Right now it's just treading water and just about flat. But possibly actually even slipping into the red, just 0.1% or so. But let's focus on what is soon to be a new entrant on the Lal Street. In fact, the sparklers are on and the bell is already being run. Caliber Mining. Let's take a look at the live visuals that are coming through. The stock is, oh, okay, so it's 19% higher. Remember, it was a 450 crore odd IPO and was expected to list at a premium. It has indeed done that. So it is in the mining space. It's up about 17% or thereabouts. And this really is an interesting update coming through. My colleague Ridhima Bhatnagar is in fact at the NSE headquarters. Let's find out what the mood is there. Of course, it's going to be a little noisy. Ridhima, what can you pick up?
Caliber Mining and Logistics lists at the NSE and the BSE, and it has indeed listed at a premium, which was the expectation, about 17%. And the management has, will be using these proceeds for the debt repayment. About 1,000 crores debt is there, and they will be repaying around 280 crores of debt, the management told us. And they've also said that they will be working on new mining sites, about 7 mining sites, 5 in Maharashtra and 2 in Madhya Pradesh. It has got a thunderous response from the investors, over 300 times subscribed by QIBs, and the NII's overall subscription of 146 times, and even the retail participation was about 40 times for this IPO. And the financial performance has been robust for the company. PAT growing about 20%, EBITDA margins healthy, and also the revenue growing by 17% in FY27. Now the company's main client is Coal India and its subsidiaries, and also it has other clients as well, and of the subsidiaries of Coal India and others. And it will be diversifying this client base, and also looking at new opportunities in the EV space, especially because with clean energy transition, the company believes that they will benefit, as EV will be requiring the thermal power, and which will give the push to the coal as well.
Thanks so much for that. Really appreciate. We'll take a quick break on that note. On the note that the markets are still sluggish, if you will, even if they're off the lows of the day. And I wonder if they've kind of succumbed to some more selling pressure as well. But corporate conversations are on. And on the other side, we'll speak with the founder, MD and CEO of MedPlus. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100%
confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26 July, only on NDTV.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। अभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
All right, markets are feeling the pain of Brent at above $100 a barrel. But let's talk about individual stocks, and that's what we're tracking today, even as the Nifty is desperately going to try and hold out on 23,600, 23,622 now. This has been a tough week. It's a tough morning. Let's talk a bit about MedPlus. MedPlus delivered a strong quarter. Saw good revenue growth driven by aggressive store expansion. Margins did come under pressure from higher costs and lower private label contributions. We're going to be speaking to the management on their quarter, the way forward, and also what really hit the headlines is that they have decided to recalibrate their capex plans. But before we speak with Mr. Reddy, Varsha joining in to set up that conversation.
Well, let me set up this conversation into two parts. One is, of course, the Q1 numbers, wherein the strong store expansion led to good in sales, but the mature stores, if you see, continued generating healthy profits. But onto the margin pressure, lower private label contribution hurt margins for the company, and higher inventory provisioning also impacted profits. If you see, the private label currently contributes to around 20%, and the management intentionally reduced aggressive selling. Onto the capex plan, which is the second thing, the non-core projects have been paused, but the core business investment continues, and over here pharmacy expansion plans, if you see, remain unchanged, and the store rollout will continue as planned. So yes, capex has been put on hold, but for the non-core, I would say, expansion that the company has put on hold.
In fact, I'm going to ask GM Reddy that question. He's the founder, MD and CEO of MedPlus Health Services. Mr. Reddy, thank you so much for speaking with us here at NDTV Profit. And before we come to your quarter, which looked fairly robust, can you clarify for us and explain what is this change in decision on CAPEX?
We were actually planning to enter the health care kind of area, adjacent to diagnostics, which we are already there in. The plan was to go into concierge medicine and all. I thought that would be a pretty good, extension for MedPlus. And given the fact that we have no debt, we have more than 600 crores in cash, and we are throwing up cash, which is, and our expansion itself comes in through whatever money is accrued every year. So we thought it would be a good idea, but we received a very strong feedback from the market. They don't want us to obviously go away from the path of just opening stores. So for now, we have kept it in abeyance. Well, I think it's a great idea. There's two sides to everything. Perhaps, it is best that we put it on hold. So the board rethought the decision and then decided to just hold off on that plan for now.
I really appreciate the candor, Mr. Reddy, and you're saying that you took on feedback, even though you still think it's a great idea, you took on feedback and changed it. When you say that's what we heard from the market, are you talking about how the stock reacted, analysts? Just if you can explain a little more on that, because it's a big decision to go and review What is the kind of specific feedback you heard, and is that enough for you to put this on hold for the foreseeable future? What changes next? Because clearly there's an underlying conviction to go into this space as well.
See, if you look at it, while the Walgreens of the world and CVSs of the world do almost everything under the sun in healthcare, they have a pharmacy benefit manager, they have insurance, they have different types of clinics and everything else. And the reason they have done it is, sometimes it is not just enough to just be a pharmacy. You kind of get boxed into one thing. As healthcare goes into the prevention area, and people want to also consolidate their overall, let's say, spend into one or two things, we thought it would be a good horizontal expansion for us. But the flip side of the thing is, we are still at a very early stage as far as the pharmacy itself is concerned. While we are I would say, the number 2 guys in the country, the portion of sales which we have is pretty small, and there's I would say, a really big headroom for us to grow. We are a country with more than 900,000 pharmacies, out of which we have around 6,000. So while numbers-wise it is a very small number, the fact of the matter is, in the areas in which we are there, we hold anywhere between 10 to 15% of the market share. But that said, there's still wide swaths of the country in which we are not present at all. So, one could take the argument, and that's what we basically decided to listen to, that, that the room for growth in our own thing is fairly significant, and we can always come back to this at a later date. So, that's
Yeah, that's a long and short of it. I want to get into the numbers, Mr. Reddy, and good morning. This is Alex here. Specifically on the private label contribution, which, based on my research, stands at 20%, and it is being viewed as a reason that the margins were under a tad bit of pressure, and the fact that the lower contribution from private label has hurt the margins, and you also had high inventory provisioning that impacted the profits. So can you give us a sense of whether or not you will see a higher contribution in this year itself, and what that will do to the margin trajectory in the remainder of FY27?
Yeah, see, couple of reasons. If you actually look at our private label, it is, medicines and non-medicines both. On the non-medicine side, because of the war and because of some price fluctuations in all the packing materials and everything else, in fact, fluctuation across all chemicals and everything else, we had a little bit of a challenge in getting the products on time. And that is what basically resulted in a slightly lower than expected sale on the non-pharma side. On the pharma side, we have been pushing back a little bit ourselves. Most of these products are sold by the suggestion of our employees, and when they're incentivized, sometimes they tend to go a little overboard. So we wanted to make sure that the customers had a good experience, and they continue to, that our stores continue to offer whatever the customers really wanted and not push any private label. So by, sort of, I would say, putting a little bit of guardrails on the overall thing, that led to a slight, I would say, decrease in the pharma private label. But I think that is now pretty much under control. We'll probably start seeing a flat and then start seeing the growth of that private label in the pharma private label. But I think that is now pretty much under control. We'll probably side too. On the non-pharma side, absolutely. The supply chain constraints are over, and I think we should be able to start growing fairly soon. In fact, this quarter. So what that means is, our margins will start going back to normal fairly quickly.
Okay, so that's good to hear. So am I right, and quick answer here, sir, am I right in assuming it'll go back to 8.5 plus or around that level?
I don't want to commit to any number right now. Obviously, we have fallen a little bit. So this is, I would say, a one-off thing. We'll start climbing very well.
Okay, so let me close out by asking you about the expansion strategy, because you've said that it's funded through internal accruals and you have a plan in place. Where do you end the year at? And if you were to expand dramatically, because one would assume that you have the opportunities, as you pointed out, to enter into several other geographies. Can you accelerate that, and are you considering it?
No, absolutely. So we have traditionally grown, in the past at least, grown through contiguous states. We started in Andhra Pradesh, went to Karnataka, Tamil Nadu, and so on, Maharashtra and all. Now from Maharashtra and all, we have actually gone a little bit more westward and northward. We're there in Chhattisgarh and Madhya Pradesh. And in south, we had one state which is missing, Kerala, so we have entered those states. Once we get to a certain number out there, then we'll again go northward. So for us, and I've mentioned this in other, in our investor calls and all, the goal, we can easily grow at 800 to 1,000 stores. That's not a problem. But to grow much beyond that, I think we probably will require to start, looking at the franchisee model. We have been kind of experimenting with that for a while. It's still in a pilot stage. There are some small kinks which have to be ironed out. Once that is done, then our ability to grow at a much faster pace than 800 to 1,000 stores will actually happen. And that's when we see, that's when you'll actually see some more explosive growth, I would say.
All right. And we look forward to speaking to you over the course of that journey. Wish you all the best for the rest of FY27, Mr. Reddy.
Thank you. Thank you for having me.
Interesting story. Of course, the results came in yesterday. There was a reaction, and particularly when they called off that allied expansion, Capex.
Yeah, but no such problems for ThyroCare, frankly. Strong set of numbers, and there is a core message change, I believe, that has come in from Rahul Goa, who's the MD and CEO of ThyroCare and API Holdings E. Johnson right now. Talk about the quarter gone by, but more importantly, what is lined up ahead. Rahul, good having you. Thanks so much for taking the time out, being with us. This is Neeraj here. Good morning. And I wonder if talk about the quarter gone by, but more importantly, what is lined up ahead. Rahul, good having you. Thanks so much for taking the time out, being with us. This is Neeraj here. Good morning. And I wonder if the big thing in Q1 FY27, aside of course a very strong quarter as well, is the change in messaging, right? Because you are scaling, as I read, the affordable, high quality, on-time reports diagnostic platform, but extending the same execution model into specialty diagnostics. Is this so? Why is that the case?
Thanks, Neeraj. It comes back to our mission statement, right, which is to make good quality diagnostics affordable to all, right? We've largely democratized the routine and semi-specialized testing. It's no longer very expensive. Our highest selling packages are about 1,000 rupees. So it's very easy for any Indian in the country to get tested and prevent, more serious illness. For example, just a lipid profile is about 500, 600 rupees. That can prevent a heart attack 10 years down the line, which will cost you lakhs of rupees. And I think that people have understood, and that's, the preventive testing model and, value proposition seems to be getting more and more well understood by patients. And that's what you see driving the growth numbers in the ThyroCare side, especially over the, I would say, last 8 quarters or so. But in India, specialized testing remains unaffordable, right? If you have to do a complex test like non-invasive prenatal testing, which we launched at a never-seen rate in India just this quarter, it's actually quite unaffordable. But if you go to a developed market, almost every newborn that needs to be tested for any fetal chromosomal abnormalities, NIPT is the default. But in India, nobody does it because it costs 20,000 to 30,000 rupees to do that test. And we feel with our model, which is volume driven, scale driven, right, we can really democratize this specialty space. And so I think it's a huge deal, not only from the economics of the company, but also in line with our mission of making good quality diagnostics affordable to all.
Amazing. But so the mission statement well understood, and I'm sure we're going to talk about the numbers as well, but I just wanted to know, purely from a numbers perspective, when you say that the next leg moves from routine to remarkable specialty diagnostics, does it become remarkable numbers as well, Rahul? That's what our viewers would love to know over the course of the next 5 years.
That would be the hope, Neeraj. It all rests on our execution. The opportunity is definitely there for the taking. And I'm very, very confident that we should be able to capitalize on it. But I'll be able to really tell you if it's truly remarkable, probably 3-4 quarters down the line, when I have a good grip on how's it going, what traction we are seeing. But definitely the opportunity is there for the take.
Hi Rahul, this is Alex here, and just speaking about the opportunity and how it will likely play out initially, right? So this specialty diagnostics, I think the big question is, at least initially as you roll this out and you achieve scale, will it be margin neutral, or will it even at the start be margin accretive?
It will be margin accretive from the start itself. All the capex investments actually were done in FY26. So whatever investments we had to put were put into the ground in FY26. From a capex point of view, I don't see much there. On an opex point of view, yes, we will invest, but given these are factor 10 versus our current realization per test, I don't see this being margin dilutive as we scale this.
So from that perspective, let me ask you, the 32% and definitely plus 30%, but in fact 32% on EBITDA margins, is that the new normal, or can you do better than that this year? And obviously as that business achieves scale and you have a larger contribution to your revenue, one would assume that it can potentially climb higher, Rahul.
Yeah, but as I've guided in the beginning, right, all operating leverage that I get, I'm put back into growth, right? We are not a static company, right? We are looking at a 5-year horizon, 7-year horizon. And for that, we need to invest now. So I've basically said, if you take FY26 margins at roughly about 31.5, 32, that's the margin you should expect going forward. And this quarter also tracks to that. Because we're using that operating leverage to fund all the growth initiatives that we're driving, and we're driving quite a few at this point in time.
Rahul, hi, good morning. This is Tamanna here. Very interesting commentary on specialty diagnostics, and you've said that it's going to be margin accretive. You've also said that you're going to make these very specialized tests more affordable than they currently are. Are both possible right now with the competitive landscape you are in?
Yes, it really comes down to volumes, right? If you are able to get the volumes at the prices that we have launched at, it definitely works out. So it's really about a volume play at the end of the day. And frankly speaking, if you look at ThyroCare, our realization per test is 1/4 of any of our competition. Yet our EBITDA margins are best in class because of the volumes, right? We processed almost 6 crore tests last quarter. And I think that same thesis applies on the specialty side.
Okay. And those volumes can stay up. Those volumes are because of what? Customer loyalty coming in, your processes, which are much faster than others. What do you think those volumes are attributed to?
It's actually just linked to franchise expansion, right? Okay. Over the last 4 years, we've maintained a franchise expansion CAGR of 27%, right? And as new and new franchisees come into the system, customer touch points increase. We've gone from a low of 2,700 franchisees when I first took over about 4 years ago to 11,700 franchisees today, right? A 4-fold increase. And that's what is driving the growth, frankly speaking.
That same pace increasing or continuing for franchisee growth?
I think we'll keep it at the same pace, right? Right now, I've said roughly about 1,700 additions in this financial year. Let's see how Q2 goes, and then we can come back to this topic.
I'll ask you about the radiology business. Why do you want to sell it?
See, the radiology business is a very different capex profile and return on capital profile from the pathology business, right? And so therefore, we haven't really been investing in that business. And frankly speaking, running PET CT, which is a very advanced radiology test in a standalone center, right? The economics are not great. So I think the model as it is today will be very difficult to scale. And also when you compare it relative to our pathology business, the return on capital is very, very different. So we felt, someone who sees value in this business and is ready to scale it and has all the complementary technologies of MRI, ultrasound, so that they are able to really monetize a center, would be best placed to, take over that business, because we are not investing. if I had 100 rupees, I would much rather put it in pathology than radiology, because the return on capital is very different across these two segments for us.
And I'm just curious, and you mentioned that the franchisee growth has been phenomenal, right? 27%. But I'm just wondering about the vintage of some of your outlets, right? And if you can share the metric of same-store sales and what trajectory that is had and what is expected to have. If some of these now cross a certain threshold of vintage, will they aid your growth going forward? How much of the growth is coming from existing facilities?
So actually, if you go through our disclosures of the full financial year, it's actually quite surprising. No? So if a franchisee does X in year 1, they do 2X in year 2, 3X in year 3, 4X in year 4, and 5X in year 5. And we've shown the data over the last 5 years. So even a 5-year-old franchisee is roughly growing overall from a same-store sales growth point of view. So, it's quite remarkable how our franchisee network has been scaling.
Own franchisees, considering they're growing 100% CAGR?
Sorry?
I'm saying, get you tempted to have your own franchises considering they're growing at 100% CAGR?
Well, my wife is a franchisee owner. I forced her about 3 years ago to open a center just so I could understand franchisee economics.
No, don't blame her. It's a smart investment. Anyways, all the best, Rahul. Out of time, but completely lovely talking to you today. Thanks so much. All the best for the quarters ahead.
Thank you.
Well, quite a statistic, guys. 100% CAGR every year for the first 4 years. Quite something.
Yeah. No, but I think it's in terms of specialty diagnostics as a space, that's the next level,
frontier,
right? And the next frontier that you're going to have to do. Just quickly updates on the other big national news stories as well. Climate activist Sonam Wangchuk has ended his 26-day hunger strike early Friday after the centre assured him of action on key demands related to student protests. While Prime Minister Modi also announced that the government would bring in a new bill with stringent provisions against examination paper leaks. There's a cabinet meeting at 1 p.m. in which some of these stringent measures are expected to be discussed. Listen in.
मैंने आज फास्ट ट्रैक कोर्ट के लिए विभागों को निर्देश दिए थे। आज विभागों ने लगातार मेहनत करके देर रात मुझे मुसद्दा भी दे दिया। फास्ट ट्रैक कोर्ट और कठोर सजा के प्रावधान के साथ का ये मुसद्दा कल कैबिनेट में चर्चा होगी। कैबिनेट के साथियों के सुझाव के बाद उसका अंतिम रूप दिया जाएगा और सोमवार से संसद का दूसरा सप्ताह शुरू हो रहा है, तब जल्द से जल्द उस बिल को सदन में पारित करा। सोमवार से संसद का दूसरा सप्ताह शुरू हो रहा है, तब जल्द से जल्द
Okay, important clarification coming in from the Prime Minister, and hopefully there will be some end to these protests, or at least some kind of solution soon, because that's all that has dominated our social media timelines, isn't it? The students protesting, then what's been happening with them, and it's become such a big issue.
Out of time, but very quickly, is this, since you track this so closely, I don't, is this different than the previous ones, previous episodes
protests?
like this? Yeah.
Oh, definitely. The biggest standout for me is the fact that the Prime Minister chose to address on a vertical video. Seemed like it was shot on his phone. It wasn't an address to the nation in the typical style. He's speaking to the Gen Z protesters in the form and fashion that they understand. It's just, I think, the first social media driven protest that we're seeing. Of course, there are people on the road as well.
And some of those images that have come through, and the participation and the people that have participated this time, it's very different from what you've seen in the past.
Yeah. Well, we'll be tracking this story and of course what's happening with markets. But the big one for us at NDTV Profit is the Business Leadership Award. We're looking forward to that Sunday. Don't forget to tune in. So much excitement about what you can expect in the Business Leadership Award. So all of that and more. We'll take a very quick break, but so much coming up on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise, and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
Heart disease remains one of the world's biggest killers.
Earlier, heart care began only after symptoms or an emergency.
This week on NDTV Lifeline, discover how advanced heart scans, early screening and simple lifestyle changes are helping prevent heart disease without surgery. Because when it comes to your heart, early action can save lives. Only on NDTV.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow business.
Good morning, you're watching Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Shreyanshi Singh. First up, let's take a look at the top headlines. Bitcoin below 65,000 on macro-driven sell-off. Senate Republicans unveil 616-page Clarity Act. Maharashtra proposes Delta Act. Tesla holds 11,509 BTC after 4 years. And before we take a deeper look, let's talk about Bitcoin as well. Below 65,000 on macro-driven sell-off. That's something that you've seen as well. This follows sharp declines in US stocks and rising tensions in the Middle East. On the other hand, you do have Bitcoin ETFs that have added almost $1 billion of inflows in the last 7 days itself, and trend is showing accumulation among institutions. Let's also move on and talk about the Senate Republicans that have released the full 616-page Digital Asset Market Clarity Act, a comprehensive market structure bill. The street is bullish on passing of this legislation before the August recess. So you're looking at the first week of August here. Goldman Sachs CEO David Solomon also extended his support for the Clarity Act. Let's move on and talk about Maharashtra as well. Maharashtra Chief Minister Devendra Fadnavis stated that the Maharashtra government has begun work on the proposed Maharashtra Digitization and Exchange of Land Token Act, or the Delta Act actually. This legislation is intended to create a legal framework for digitizing and exchanging tokenized interests linked to immovable property through blockchain technology. And lastly, Tesla holding 11,509 BTC after 4 years without moving its Bitcoin position as per its investor release. This means Bitcoin as treasury investment remains strong and shows continuity rather than showing churning or trading as well. And right before we wrap, here's a quick check on changes to crypto prices over the last 24 hours as well. It's quite the interesting setup that you've got. So across the board, there's a little bit of weakness that you've seen coming in for Bitcoin, 63,000 to 66,000. It's the kind of support and resistance level that you're looking at. And time now to take a look at the crypto strategy for the day. Here's what to keep in mind today as well. In terms of the market outlook, you're looking at a cautiously bearish outlook. When you talk about the support range, it's anywhere between $62,000 to $64,000 as well. And risk-off sentiment globally is something that you're also taking stock of as well when it comes to crypto. Progress on Clarity Act, that's the big technical trigger really to watch out for. And as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry as a whole as well. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Hello and welcome back to NDTV Profit. You're watching Ask Profit right here on the show. We are going to be solving all your stock related queries, so do start sending them in on numbers that will very shortly start flashing on the top of your screen. But before we do that, it's important to address the markets as well, because we are at a very crucial juncture right now, close to that 23,600 mark, and hence that pressure right now very visible. Now, we spoke in the morning in the FNO setup that 23,800 would well be broken today given the implied open. That has happened. The second level of support is now where we are at right now. 23,200 is the other one. But post that, that's when the pressure starts to really build up. It already has. We've seen a very sideways momentum over the last 2 to 3 weeks since this Iran conflict restarted in that sense. But right now, when you look at the heat map as well, you have the IT name like Infosys continuing to be under pressure. That was on the back of guidance being cut. There's a new CEO that will come in the next 3 quarters. But that has just continued in terms of dampening the momentum in the broader large cap IT space. You've seen Shriram Finance also down, Eternal after earnings down 3% as well. And Bajaj Finance is the top loser for the Nifty 50 today. So seeing some money being taken off the table there. Mahindra as well as L&T, Tata Motors PV as some of the other losers, while Cipla, which was down actually yesterday post earnings and post the results during market hours, is now the top Nifty gainer for now, and we'll continue to monitor those moves as well. In terms of the sectoral heat map as well, that is the other key factor. You have seen broadly the banking index being in focus this week, but apart from that, the realty as well is the other key factor. You've seen the Nifty realty down 1.8%, Nifty auto also now down under pressure, but the advanced decline ratio is the other key factor. Largely a week which has been favoring the declines, and today as well, if you can pull those up, it's more stark than it has ever been. 5:1 in favor of the declines. Mid cap, small cap reflect those fears and that pain too. While we are looking at in terms of the BSE 500 as well, that is the other one, because and the small cap 250 down 1.4%, but Gujarat Alkalis is one where you're seeing some good spirits come in. So is on United Spirits as well, and PVR Ionox is the other couple of one as well. But let's pull up Caliber Mining as well. That was the stock in focus today after this D Street debut. Stocks up almost 14.8, 15% odd right now. And let's go across and listen to the management in just a bit, because this was an IPO that continued to, of course, be in focus on his vision and the guidance that will come through. And my colleague Ridhima had a good conversation with the management. He spoke about what could be the expectations for the time frame going forward. But largely at a time where we've seen some disappointments come through in terms of IPO listing, like SBI funds amongst others. This one's at least a decent listing at the start for now, and hence continuing to be in focus as well. But let's go across and listen in to the conversation. Mohit Chadha, Chairman and Managing Director, speaking, as well as the CEO Nikhil Karwa speaking of the company. Let's listen in.
Caliber Mining and Logistics is an integrated coal mining and logistics company which gives end-to-end mining solutions. As the company gets listed, joining me to talk all about it is Mohit Chadha, CMD, and Nikhil Karwa, CFO of the company. Thank you for joining us on NDTV Profit. I want to start by asking you that the IPO proceeds will be going towards debt repayment. What is the current debt for the company, and how much will it be repaid after the IPO? And what is the ideal debt to equity ratio you're looking at?
So, thank you, Ridhima. Our debt right now in the balance sheet is about 1,000 crores. We are raising capital, and about 208 crores will go to debt rundown. And post listing, we are expecting a debt equity of 0.75.
All right. And what is the capital allocation plans for the company for the next 12 months, and where are the current locations, and what is the expansion plan for that?
Yeah, so the expansion plan is that we have got 3 new orders. Out of that, 2 are the existing ones only. So the Jayant one will become Jayant 2, Duptala one will become Duptala 2, and there is one third one which is Dudichua 2. So we'll be buying the assets for that particular project, and we will make it happen.
Which are the current states?
Currently, we are in Maharashtra and Madhya Pradesh, and bit of Uttar Pradesh also, because one of our site is at the border of Maharashtra and Madhya Pradesh and Uttar Pradesh. That's Dudhichua.
All right, all right. Now the company has shown a healthy financial performance with EBITDA margins also growing. What will be the levers used to continue this performance for the company going forward?
See, the main thing is that our EBITDA has always ranged between 23 to 25%. So to maintain this EBITDA, we have got world-class maintenance hubs within our organization. Number 2, we have got a full-stretch HOD team taking care of the working from day to day and time to time. Since this is a 24-hour running business, we get an output of 21 to 22 hours daily, for which 8 hours shift is there. So three shifts of 8 hours each makes this volume possible.
Alright, so that was Caliber Mining Management, of course. They have a very strong order book of around 9,600 odd crore, which they plan to implement in the next 2 years. So significant, revenue growth in the next 2 years is expected, because FY26 ended around 1,600 odd crore. So 3x jump in the next 2 years is what is expected. But, I know that you guys are waiting for getting all your stock-related queries answered. So let's start digging in. To answer them, we're now joined by Ajit Mishra, SVP Research, Area Broking, and Avinash Gorakshaka, Founder and Head of Research at Avinash Mentors Research Services, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll take up the first question, which is coming in from Suman, who's writing us from Kolkata. Wants to know if this is the right time to buy Havells from a long-term perspective, and she says that she's not made an entry yet, but she wants to make an entry at the current levels. Avinash, a very good morning to you. Would you recommend that?
Yeah, I think, Mahima, good morning. I think, numbers which came out for the Q1 was slightly disappointing, but I think whatever damage had to be done has already got completed in the stock price. And I think performance going forward, especially in the second half of this financial year, should definitely be much better. So I think, if the investor has a 12 to 18 month call, I think one could definitely look at buying the stock in a staggered manner. The way the markets are, I think it could give you an opportunity to possibly buy it at lower levels also. So maybe a staggered kind of buying approach would, help you accumulate the quantity here, but take a time frame of at least 12 to 18 months for a reasonably good risk reward.
Got that view, Avinash, and welcome to the show. But the next question is from Kishore, who's from Bengaluru. He has Ujjivan Small Finance Bank on his radar. He wants to know if it's a good time to enter, asking if it has given a multi-year breakout. Ajit, maybe you'll be able to help us with that. Welcome to the show. Would you recommend him to enter for a slightly more longer term, and do the charts suggest that breakout?
Yeah, good morning, Puneet. Good morning, Mahima. So, yes, the observation is right. Means after almost 5, 6 years, if I'm not wrong. Yeah, 2019 was the listing period. And after that, decisively for the first time, we are seeing the stock is sustaining above those marks. Volumes are good, price action, the supporting indicators, everything is aligned. But since the market tone is slightly wobbly, means close below 23,600 might result in further profit taking because mid cap, small cap, they have done exceptionally well. So in case if participant might start facing pressure in their large cap position, they might consider liquidating their small cap, mid cap profitable position to hold those loss making position, which is usually done in most of the cases. So considering that, gradual accumulation is something that is recommended. Despite being a positive setup. So 60, 65, that's the broader range where one should consider this stock for accumulation with 50, 54 as a strong base area.
So, Ajit, you're right, because when it got listed, it did touch a high of around 62, and today it's almost touched a high of 72 and has come back to those 68 levels. So, definitely, interesting one to watch out for. But the next one is EPAC Durable. Bindu from Hyderabad is holding 300 odd shares, bought at the levels of 253. From a long-term perspective, she wants to know whether this is a good hold or not. Avinash, what would you recommend her?
Yeah, I think from the near term, I think maybe there could be some challenges on the margin side, but taking a medium to long term view, I think the investor can stay invested. In fact, I would say that the current year should be definitely better, considering that it's a very well established component supplier to the AC sector. So definitely growth will come in, but I think you need to take a time frame of at least 12 to 15 months.
Last year was, the PLI income didn't come through because of there's targets not getting met for revenues and hence a washout year last year. But as Avinash mentioned, a longer time frame needed for EPAC Durable and its investors. But the next one, and this is on IRCTC, unfortunately, Venkatraman bought it at 700 odd rupees and has been holding on since 2022 when the company listed. So he is right now in losses of almost 53,000 rupees. Avinash, he wants to know, if it's still good enough to hold, if he should average, what would you recommend as well? Because we've seen also a management change recently there. What's your view?
No, I think Puneet, the bigger problem for IRCTC is that the internet booking, opportunity is more or less scaled up and achieved already by the company. And earlier, what was supposed to be a moat is now no longer a moat. So I think clearly the markets are not showing any visible signs of growth. In fact, if you see the fourth quarter numbers also, numbers were not great. And I think the management commentary was also extremely cautious. Of course, they're now moving into budget hotels and other allied services. But, the earnings to actually accelerate from these other services will take some time. So unless the investor has got a couple of years in mind, he can stay invested. Otherwise, it's better that he switches over to some other growing sector like, say, capital goods or banks or autos, where I think the momentum is much stronger than, IRCTC.
Okay, the next one that we have is, one more question on a small finance bank. Ramya from Chennai is asking about Suryodaya Small Finance Bank. She's holding around 135 odd shares at the levels of 198. She wants to know whether she can continue to hold this one, wait for some more time to see more profits. On the charts, Ajit, because, all of these small finance bank, even ESOF Small Finance Bank has been doing very well in trade despite the way markets are moving, right? Would you recommend her to continue to hold this one?
So, Mahima, yes, considering that this move is not only restricted to one or two stocks. In fact, majority of the counter from the small finance bank space is, witnessing noticeable traction. Suryodaya has made a new 52-week high. Volumes are very strong, though at the higher end, we are seeing profit taking emerging. So she can continue to hold, but now with the trailing stop, means 190 is where we have the immediate base. So with that as a stop loss, she can continue to hold. Gradually, the stock has potential to inch toward 220 to 40 levels again.
Got that view, Ajit. But let's go across, take our first caller for today. This one's from Pune. Parag is now dialing in for a stock-related query. Parag, very good morning. What's your query? Hi, Parag. Am I audible to you?
It's audible to me.
Yes, sir. We can hear you now. Go ahead, Parag.
My question is to Mr. Avinash, fundamental analyst. Whether this quick commerce company, especially the Eternal, is really worth to invest, because at the end of the day, at times they are negative cash flow companies, cash burning companies, no entry barriers. Today also there's a statement from the Flipkart CEO that they don't mind even if the 5-6 competitors are there. So is this really worth companies to invest for a longer horizon of 3 to 5 years? Or these are only a narrative to give the exit to the strong hands like FIR and DDI?
Well, Parag, the question is very interesting, most certainly, and Avinash, comment on this, because both Eternal, I think Swiggy is down to almost 7%, but the moat, is it enough to have a structural earnings-led growth in the next few years? Because currently, of course, the valuations seem very wonky, but what's your long-term opinion on these counters, and do people have to get selective? You have the Zepto listing also on the anvil, so we'll see what those earnings are. But on Eternal, do you think that people need to be selective within choosing what horse to bet on?
Yeah, definitely. See, I think the Indian QSR market is a very large opportunity, and I think what is important in the last 5 or 10 years, lifestyles have changed considerably. Like today, you want a pizza in the night at 12 o'clock. It's very much possible. I think it was not possible about a decade back. So I think the opportunity is very large. If you see the Q1 numbers for Eternal, in Q1 itself, they have generated a top line of 21,000 crores. So you could imagine what is the size of the market and the kind of growth opportunity. So despite a lot of competition, it's going to be the survival of the fittest. And as you rightly pointed out, there are many players who have come in and who have also marginally got outpaced in the market. So despite the fact that Zepto is approaching the market, if you have a 3 to 5 year view and you can have that kind of patience to hang on, because these kind of companies earlier used to burn a lot of cash. Now Zepto is making an operational EBITDA. So definitely things are looking good, but I think when you invest in a company like Zomato or Eternal, you need to take at least a 3-4 year view, because markets have discounted numbers much ahead in advance. So better is, I think, you follow a staggered approach in buying the stock and stay invested for the longer term. You cannot expect a short term risk reward in these kind of stocks, because a large part of the upside is already built into the price.
Okay, all right. I think, of course, today Swiggy is down on the back of the outflows that will happen because of the MSCI and FTSE reject. But yes, the statement from Flipkart is kind of important and probably weighing down on the stocks that they might enter the food delivery space. But, of course, that's the whole roundup of both for Eternal as well as Swiggy. But let's start taking your stock related queries now even faster, because it's time for a rapid fire round. Ajit and Avinash, try to keep your answers as short as possible. The first one is on GNA Axles. Ajit, a 3 to 6 months view on this one. Our viewer has bought it at the levels of 533. 850 shares is what he's holding. What's the outlook on the charts?
So maintain with stop at 470 and use recovery to reduce.
Nangopal wants to know, between HDFC, Infosys and Asian Paints, all three have seen major corrections. Avinash, is either of them a good pick for the long term?
So I think Infosys could basically be a good bet at the current level, but I think avoidable is HDFC. I think HDFC will take a little more time to scale up and deliver better than expected numbers.
Okay, the next one is on MCX. Whether a 1 year investment into this one makes sense and an entry right now makes sense or not. Avinash, what would you recommend?
Yeah, I think I would say more than 12 to 15 months or 18 months, one could definitely buy it in a staggered manner.
Avinash, you mentioned on Infosys, but the CEO changed, the guidance cut, that's not unwavering to you right now, or do you think it's already beaten so much that it's good enough to hold?
I think, Puneet, it's already built into the price. I think at these levels, looking at the cash position in the company, the existing order book, I don't think you're going to see any panic sell off here. Yes, definitely it's a little disappointing to get these kind of numbers from the company's management commentary. But I think at this level, nothing to lose. I think better to accumulate, when everybody is negative.
Okay, all right. The next one is on Jubilant Foodworks. Satyan is holding at an average price of 440 is what he's saying. And he wants to know whether he can continue to hold, and if yes, what should be the stop loss for this one and targets as well. Ajit, on the charts?
So my trend is negative, so maintain strict stop at 400 and use recovery to reduce around 425, 430 levels.
The next one, Ajit, it's on Maharashtra Seamless. Again, not a counter we discussed too often.
Maintain strict stop at 400 and use recovery to reduce around 425, 430 levels.
The next one, Ajit, it's on Maharashtra Seamless. Again, not a counter we discussed too often, but Anil Matthew is holding shares at 269. What's your opinion? Should he continue to hold or book out?
So prolonged consolidation, no sign of recovery, he can book profits.
Okay, the next one's on E2E Networks. Balwant Modi wants to know the entry point for this one and what are the chances.
After this, strong move, momentum is likely to continue. So maintain longs, 450 stop, and 570, 580 position targets.
Next one was Punjab and Sindh Bank. Our viewer, Sumedh has bought these shares at 25.4 rupees. He's holding 5,000 shares. Wanted to know, Avinash, if he can continue to hold, or should he start booking out a little bit and probably changes stock specific in the PSU banking space?
I think my sense is, Puneet, within the PSU banking space, a bank like Bank of Maharashtra looks better positioned. Very strong CASA of almost 50%, profit growth of almost 40%. So I think instead of Punjab and Sindh Bank, he can switch over and look at buying Bank of Maharashtra.
Okay, the next one is on ICICI Lombard. Rajesh Maheshwari is holding 230 shares at the level of 661. A short-term view on this one. Considering, Ajit, after the earnings, it saw significant downtake. What would you recommend? Do you think it's found its bottom?
So consolidation is more likely. 1700, 1800 zone is going to be the major resistance area. So hold for now.
India Mart Intermesh, is it a good time to make an entry?
Is more likely. 1700, 1800 zone is going to be the major resistance area. So hold for now.
India Mart Intermesh, is it a good time to make an entry? Avinash, it's been an underperformer. Is now a good time, or should you avoid?
So I think one could look at accumulating this in a staggered manner. I think they have a very strong business model, a very strong cash position. So definitely accumulate at lower levels and maybe buy in a staggered way.
Okay, the next one is on Exide Industries. Our viewer has bought 62 shares at the levels of 399 and wants to know if 470 is a possible target on this one. Ajit, on the charts, it's already reached 440.
Yeah, better book partial profit at current levels and maintain a trading stop at 420 for remaining position.
Our viewer Chikke Gowda is holding shares of Kryzac at 195. We've seen a major correction here, Avinash, since listing. Should he exit or still continue to hold for the next few months?
No, I think he should continue to hold. I would not suggest a sell at these levels.
Alright, the next one is on Jubilant Pharmova. Our viewer Subrata Mukherjee is bought at the levels of 980. From a long-term perspective, is this a good hold or sell this one, Avinash?
No, I think continue to hold. There could be little bit volatility in the short term, but longer term, I think prospects are good.
Next one's from Abhiraj from Palakkad. He wants to know if it's a good time to enter Force Motors. Avinash, this one as well. I think the exuberance from 25,000 down now. Is right now a good time, or should he wait for more correction?
So I think at these levels, Puneet, he could definitely look at accumulating the stock slowly. I think the stock has corrected meaningfully, and I think you could expect decent kind of performance in FY27. So I think definitely one could expect.
Tejas Networks bought at the levels of 538. A short-term outlook on this one, Ajit?
So my bias has again turned negative. Better to exit. Look for a buying opportunity around 450 levels.
Alright, okay, that brings us to the end of this rapid fire round. Avinash and Ajit, thank you so much for taking out the time and helping us answer all those, stock related questions. But viewers, the next leg of Ask Profit is going to be an interesting one. We are going to have Atul Suri who's going to join us for the town hall. So you can keep all your stock related questions ready and we'll be more than happy to take them across with him. But with that, time to slip into a very, very short break. Don't go anywhere. We'll be right back.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े vandeBharatam.org पर रजिस्टर करें।
Heart disease remains one of the world's biggest killers.
Earlier, heart care began only after symptoms or an emergency.
This week on NDTV Lifeline, discover how advanced heart scans, early screening and simple lifestyle changes are helping prevent heart disease without surgery. Because when it comes to your heart, early action can save lives. Only on NDTV.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV.
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up. Different KPIs were adopted for different categories. These are of course discussed, internally. We challenged ourselves, etc., and we made sure that the data sources were all very robust, so that the trust could be built in. So I think that's what defined, and of course, we eventually went through the jury process, and I'm glad the KPIs, if I may call it so, for the winners were ratified by the jury. In some ways, that's a ratification of the choice that we made.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush.
All right, welcome to the town hall with Atul Suri, and this is going to be a fabulous next 1 hour or thereabouts, simply because we'll try to weave in all of the experience that Atul Suri has around 2 years, which have done practically nothing. So what happens in a scenario like this? And Atul, good morning firstly. Thank you so much for being here.
Wonderful, wonderful. Beautiful office, Neeraj. Compliments. I've seen you work hard, being in the trenches for many years, and I think it's just pure justice for you that you've got a lovely setup here, and great to see your progress.
Thank you so much. But touchwood, the channel benefits from having experts like you, right? Because it's lovely to do long format conversations with people who think from a lens of a wider lens, as opposed to just aaj kya hona, kal kya hona, right? Just wondering though, you could have asked this question 2 years ago, ke aaj kya hoga, and you can ask this question today, aaj kya hoga, and the answer might have well be the same, right?
Yeah.
Because there is precious little happening, even though there is so much happening around the world, right?
Yeah.
So can you tell us, Atul, how do you see the current landscape, both India and global, from top down? Is it geopolitics which is ruling the roost right now, or are there other factors?
So when you look at global markets, really, and you look at top 40, 50 markets, there are a lot of fringes, etc. not, but top 40 which are traded, you'll realize that if we take it on a 1 year trailing, even if you take it 2 years also, but let's take 1 year calendar, trailing 1 year, you'll realize that India is the second worst performing market. Okay, the worst performing is Indonesia. Now, if you know a little about Indonesia, you realize that Indonesia runs the risk of almost becoming a basket case, politically, economically. That's a separate story.
Sure.
So India, unfortunately, finds ourselves in terms of equity market performance clubbed with Indonesia. So we are the two worst performing markets in the world. So that is shocking, and you realize that, well, what's happening in Indonesia is very different from what's happening in India. India, we don't have that kind of political issues. Economically, macros are not such a struggle. So kind of it is unnerving. And on the other extreme, if you look at markets with 100% kind of returns. Of course, Korea everybody knows of, but Neeraj, there are many other markets. It's not just Korea and Taiwan. You can look at Thailand for that matter, that's doing great. You look at Peru, that's doing great. Greece is doing great. And where is the AI trade there? There isn't much happening there. So what you realize is that one is that obviously we have done nothing. On a 1 year trailing basis, our Nifty is down minus 5%. But the bigger pain is that compared to the rest of the world, and if you factor in currency, it's really painful. So now what we did was that we were saying, okay, this is something we know, let's quantify it. So we decided to come out with a number that India's relative underperformance to the world is how much. Okay, it's just some our own kind of mental things, like if you look at only Korea, it looks horrible. US, different story. There are a lot of countries. So there's something called the All Country World Index. It's always my starting point. All Country World Index is an index of 49 global markets. So it has everything. It has even India as a subset of it. So this is the biggest equity market in the world. It has around, I think, 4,000 stocks plus. So that's how broad-based it is. So we did a ratio chart of, now as you said, 2 years. The relative performance of the All Country World Index, because it also has Korea, it also has Indonesia, it also has India, it also has Taiwan. So it's a beautiful broad play. It's not one country. So when we did a ratio chart, which is like simple as A divided by B, India's outperformance relative to the world was 36% in 2 years. And this is not dollar terms.
Okay.
So what you really realize is that you need to quantify it. You quantify it, that you'll find that India's relative underperformance to the rest of the world was 36%. If you go back before 2 years, you'll find that India was one of the best performing markets.
Sure.
And that I'm talking for a decade.
Right.
For a decade compared to EMs, any area, in anything where we were subset of, India was the rank outperformer.
Sure, sure.
What has happened in the 2 years is that relatively we've come back to mean. That means all the outperformance we had for a decade, whether it's in the EM basket or whether it's in the world markets, you'll find that we have given back. So the interesting number for me, or that sticks with me, is that one single number, that relative to the world, we have underperformed by 36%. And that is the level of underperformance. And if you live in India, you realize that, there are issues, but there's no crisis happening here. Yeah? There is absolutely no crisis. So it is kind of, one is that the absolute terms, yes, there is pain that you haven't made money for 2 years. In relative terms, it's even more painful, because the rest of the world, has made so much more money. So that really gives you the kind of quantum of underperformance or relative underperformance that there is.
So sometimes that is a good starting point, simply because abhi isse bura kya hoga, something like that, right?
Absolutely.
But my question is, isse bura ho sakta hai kya, if indeed this geopolitical cliffhanger continues to be what it is and crude stays elevated? Can this 2 years become 2.5 or 3 years or longer as well?
So I'll answer it in two ways. First you said was कि इससे बुरा क्या हो सकता है? So I do this, 40 global markets ETF, because I invest globally.
Right.
So I look at this and I invest, etc., etc. But obviously, as a percentage of net worth, it's a fraction. So when I do this, I remember 2 years ago, September, when we were at the top, when our markets were the best performing in the world, in this 40 ranking, India was right on the top. And which market was the worst performing 2 years ago?
Which is?
Korea.
Okay.
So if you go and look at the Korean markets, today everyone's talking about Kospi and Korea. If you go back and see that Korea was a rank laggard 2 years ago. So over the years, I've also seen this flip happen.
Right.
So the silver lining is that, we are right there. Now the only way for us is up. Now the question is that how much in terms of time?
Exactly.
Because what will happen is that, as I said, that if it's a sharp V-shaped correction, it's fantastic. Like it happened in COVID. In 6 months, all was forgotten. But now it's 2 years and people are feeling the pain. When I manage money for investors, etc., people are coming to you and saying, yaar, कि तुम्हारे मार्केट में तो कुछ रिटर्न नहीं है, and if he's a NRI, तो boss, you have no leg to stand on because of the currency depreciation. But they come and tell you, यार तुम्हारे मार्केट में 5% negative return है. Just a number. The index is 10% down. S&P 5, Nifty 500 is 5% down. आपके मार्केट में तो 5% negative return है. You have no leg to stand on because of the currency depreciation. But they come and tell you, यार, if I'd put an FD, I would have got 12% return. So 5 plus 2, 17. So people have started, thinking in those terms. And when this narrative comes up, this is nothing but pain speaking.
Agreed.
There's a lot of pain. I think the time is the problem. And as I said, it's very difficult to time it. But I suspect, Neeraj, that, what I see is that globally, money is moving to one theme. The AI trade. It's very, very thematic. It's very, very clear. It's very, very thematic. When that trade cools off, I'm not saying it should crash. If it crashes also, we will also still get hit. We will get hit. We learned that in 2008. It comes later, but it comes. Because when money goes out, it goes out of the system per se.
Agree.
So I feel that if that market or that trade corrects or cools down, I feel that the narrative will change. And then the broad-based nature of India's market will come out. Like, you're talking about narrow markets. The narrowest market in the world is Korea. Where is this whole question of market breadth, etc., etc.?
Exactly.
It's just two stocks. So the narrative can change very fast. When those two stocks correct, suddenly the world money, the narrative can change. And they say, hey, you know what? India is great because it's a broad-based market. Because you've got multiple sectors. It's not so dependent on X, Y, Z factors. So I have seen this thing flip. The worst performers become best performers and vice versa. So fingers crossed. Of course, there's a vested interest because I'm in India, manage Indian money, etc., etc. I may have. But time is the only thing that is now pain. Now there's no big price damage.
Interesting. Okay. And, I want to get in my colleagues into this conversation as well. But I have one question follow-up there.
Sure.
Are you therefore saying that we've looked at the worst of the price correction? मतलब मोटा मोटी किसको पता है? But 4-5%, 10% here and there is fine. But इससे ज़्यादा price damage नहीं है. If at all we correct, there will be a time correction, not a price correction.
See, we've hit this 22,000, 26,000 range. Right? September 2024, 26,400 odd. Then we came to 22,000. Then we again pulled back. This was the tariffs, Trump, etc. We again pulled back. Then we had Operation Sindoor. Then again special tariffs on India. Again we 22,000. Then we again pulled back. This was the tariffs, Trump, etc. We again pulled back. Then we had Operation Sindoor. Then again special tariffs on India. Again we took a hit. Again we went to 20. Then again you had the Iran thing, commodity spike. Again we came back. So what happens is we've struck this range of 22 to 26,000. So I find that the worst case scenario, I mean, like, you know, things can unravel globally. Crude can go to 120 again. Who knows? I mean, it was just 70, bro. I mean, we thought this was done. In fact, it was like the biggest positive trigger for India was that crude at 70.
True.
And suddenly the narrative has changed. It's just changed. It's what, a week, 10 days? So that, unfortunately, we are in a situation in Trump's times where narrative changes every week. It's crazy. It's very volatile. But at the end of the day, you know, that at some point value does emerge. At some point, this much you can do. And as I said, we are at the bottom. We are near the base, somewhere there, 1,000 points here, there. But I think the worst is done. The only pain is time. But those who can withstand time, Neeraj, will be rewarded handsomely. Because my understanding is, sorry, I'm just going ahead and you know, trying to, since you're talking about Nifty, and I love talking about Nifty, and I love giving targets on Nifty. So I personally think that, you know, this range that we've stuck between 22 on the downside, 26 on the upside, at some stage, yes, we will pull out of this. I personally think that we can, and I've been very public about it. Disclaimers all included. I have vested interest in the Indian markets going up. But I personally see the Nifty at around 30,800. In a year and a half from now. Which is the 30% upside. Now, the thing is that this can be very fast, very swift. But the pain, whether it's going to, this is the bottom, next month is the bottom, I don't know. But whenever we have seen the markets tend to have one to two good years, then it gets ranged, goes sideways, consolidates, corrects, and then it again makes a fresh breakout. So I think that we are after the beautiful rally from 2023-24, about a year and a half kind of rally. Now we've spent 2 years. So we've had a price-wise correction and a time-wise correction. What the triggers come, what the narratives come, we will only come to know then. At the moment, you can't see anything good. But narrative changes, Neeraj. As I said, Korea was there 2 years ago, the worst performing market. And today, nothing seems to go wrong there. So narratives will change.
Narratives will change.
Prices move, reasons follow.
Okay, prices move, reasons follow. And viewers, just keep in mind, I mean, Atul has this, at least I remember it so vividly, and that's why I think that that's one way in which he analyzes where to invest. There's a 4-quadrant theory, and his punchline is that you need to know which quadrant you have to be in order to make money. So, Atul, as you explain that, I'll ask my colleagues to ask you questions as well. But do you want to just weave in this 4-quadrant theory right now, or should we do it later?
No, so essentially, money moves, you know, it's an allocation game. When you look at global investors, or even now investors in India, because more products have come, ultimately there are 4 quadrants. I'm not taking real estate because it's not listed, but it's a very big asset class. But, you know, we don't moves, you know, it's an allocation game. When you look at global investors, or even now investors in India, we don't have a screen and a price, we don't trade it. So ultimately there is equity, where we are all present. Second is debt, which is bonds, which is again another asset class that's important. Third is commodities. Commodities are very, very important. And fourth are currencies. So ultimately money moves into each of these. You know, it's an allocation game. However, the important part is that each is also got an effect on the others. Like when bond yields go up, equity tends to go down. When currency goes up, goes down. Like right now, the biggest and the most interesting asset class in the world is commodities. So as I told you about the All-Country World Index, which is a composite of global equity markets, there's something called the CRB Index. The CRB Index is nothing but a composite of commodities. So the best performing asset class in the world today is not equities, it is commodities. Commodities have outperformed equities if you take year to date.
Right.
Because you will find that commodities have come out of a very, very secular sideways kind of move. First it was gold, silver, which led the breakout. Then it was crude. And now if you look at some of the industrial metals, we can get into that specifics. But you look at copper, zinc, aluminium, you'll find that there are very, very interesting moves happening all over the ways. So ultimately, there are these 4 quadrants. It's a question of allocation. And the interesting part is that each is also correlated with the others. Once you're able to get that kind of mix or understanding, you understand that where money is flowing internally.
Interesting. And we'll try and get to the bottom of that. Guys, I'm sure a lot of you have questions. Hiral, you want to kickstart?
Hi Atul, this is Hiral here.
Hi.
So my question to you is, taking your Nifty target into consideration, if an investor has to start investing now,
right,
would it be safe to say buy the momentum, even if the stocks are at an all-time high, or buy beaten down companies where valuations are cheap?
Yeah.
That's part one. And part two is, if you have to look at a structural theme to surround this,
right,
what IT did, say, back then in 2000, what banking did in 2010, what would that space be in the next 5 to 10 years?
I think there are two very fantastic questions and very relevant to how I manage money. So the first thing is that you asked the question that if I have to invest, should I invest in momentum or should I invest in value? Correct? So if you, this is factor investing, and ultimately every fund manager has a style. I am a momentum investor. So a momentum investor is somebody who chases, I chase earning momentum more than price. People think it's price, momentum is only price, but I actually chase earning momentum. Because ultimately, trending earnings lead to trending prices, right? So I look at that. So at the moment, momentum is going through a difficult time because obviously the market's in a range. The market's in a range, and you can see that no stocks or no sector is kind of up 50%, or 100%. That is momentum, which we saw between 2023 and 24. That is momentum, like defense stocks, multiple baggers. So we have nothing of that kind of playing out. Even what is doing well is up 20%, 30%, and that seems like a lot right now. So momentum as a style is not in favor right now. However, and we've done studies for that when you look at the performance of the last 10 years. See, because every year you can't change from momentum to value to momentum to alpha. Yes, sir, this looks good on paper, but as an investor, I allocate minimum, tax efficient 3 years, 5 years point of view. In India, the factor that has given the best return over the last 10 years is momentum. It's given an 18% CAGR versus an index of 11 to 12%. So alpha, clear alpha has been created by momentum, in spite of the last 2 years being underperforming. So I am a momentum investor because I also think the way the Indian economy is evolving, the opportunities that India throws up, this is going to be a place where you are going to have growth, where you are going to have many multi-baggers, and the strategy that captures it best is momentum. So I, for one, am a momentum investor. So that is probably the answer why I'm giving you. The second question that you come up is, what is the themes? So in spite of the market being flat, Nifty trailing 1 year is down 5%. Aapka Nifty 500 is 1.5%, 2%, etc. So net nothing has happened. But when you do an analysis, you will find that yet lot of stocks have done decent. There have been themes, okay, we'll get to pockets. So I was actually looking at, year to date. So it was 6 months, 30th June tha. So we did that kind of thing, 6-month performance. And we found that there were at least 40, 50 stocks that have given 50% return in the last 6 months. Huh. And I'm talking about I'm not talking about small caps, I'm talking about the larger Nifty 500. So we're trying to string that. What is the theme? Is it IT stocks? No. Are they banks? No. So we're trying to, throw a sectorial theme. And we found that actually none of the traditional sector classification is actually moving, barring metals. But metals also is very, very dispersed kind of play. We realized that the most interesting theme that was playing out, and which I wrote a thematic report also on that, was that companies that are suppliers to data centers was the common thread.
Interesting.
Yeah. So we are talking about an AI trade globally, but to some extent there's a subtle AI trade playing in India also.
Correct.
And that is happening. So we don't have any LLM plays and all. We don't have Microsofts and Metas, nothing of that kind of play. Otherwise Infosys and TCS would have been a different story. But we have companies that are providers to large investments that are going in the process of data centers in India.
For example, I mean, if not the company name, then the theme or whatever, the product or whatever.
You find a lot of electronics, electricals, cables, because ultimately that gets this thing. Some of the power plays. So you really look at that every 100 rupees spent on a data center, there's power, there is cooling, there is, electrical equipment, switches, racks, etc., etc. So there were a lot of companies that did very well. So as I said, we don't have a sector, we don't have a theme. We may classify something as IT, something as industrials, something as electronics. So they were all over the so-called traditional industries as the exchange has classified sectors. But there is a theme of companies that are suppliers to data centers. And then you look at it, it makes sense because the kind of capex that is coming, private sector capex, the largest private sector capex for the next 2 years in India is data centers.
And there is a tax holiday.
Absolutely. So the fact is that, that standard, people went to look for gold, but who supplied the shovels made more money. So that kind of play is happening out here. So answering both your questions together, that yes, I'm a momentum investor. Yes, I would look for momentum, and I would look for those themes where there is momentum in earnings and also showing in markets, which is providers to data centers. If I was a pure value player, if I look for beaten down, I would probably look at IT stocks. But I am not. And every investor has a style. Respect to that, respect to this.
Absolutely.
I'm a momentum investor because I feel the way India is, or in my lifetime, the way this country is going to be. I'm a strong believer in the Amritkal kind of theory. Right now, maybe the way the markets are, people think it's all humbug. But I do think that every year is not going to be linear. This is that one down phase and we will have good phases. So I do think that I would still play momentum in India. It will be the best performing, has been the best performing. And the theme that is emerging for me are companies that are suppliers to data centers.
Interesting. Thank you for that. Yes, absolutely. Thank you.
But so very interesting. And thanks for that question, Hiral. But Atul, so the whole portfolio, let's say, or large proportion of your portfolio can't be data center themes because those are not large caps in nature, right, per se. Yeah. So you would have maybe 5, 10, 15% of your portfolio. Or kya hai momentum?
20%.
20% of your portfolio. Wow, that's nice. Yeah. Okay, or kya hai momentum mein?
So you will find that, again, interestingly, sectorially. So let's take the sectors as they are traditionally positioned and let's take the sectors as I position them. So there are two very distinct. So if you look at the last 1 year, the best performing sector classified is actually metals. The best performing sector is metals. Metals are up about, index is up about 30%.
Wow, okay.
Yeah. The second best performing sector is pharma.
No surprise.
That's about 13% or so. And this is, mind you, the index is -5.
Yeah.
The worst performing is IT. Correct? 20% odd, it's off, minus. The second worst performing is FMCG. So now you look at the composition of the index, which is the Nifty 50. That these guys are there in terms of weightage. And those guys which have done well have no
not
weightage.
There. So Nifty bhul jao.
So we, I mean, वो भी मैंने बहुत काम किया. Sorry, I can go on and on, because I keep looking at a lot of data. So Nifty is underperforming. Clearly, its Nifty is underperforming the Nifty 500, which clearly tells you that Nifty 500 is down, say 2%. I mean, things are changing, so pardon my numbers, they'll change. But mota Nifty is down, Nifty 500 is down 2%, Nifty 500 is down -5. But the interesting part is the Nifty next 50 is up 5%. It's the best performing. So to say they are both large caps.
True.
But in the large caps also, the 50 top players are actually the lag. And the next 50 is actually doing very well. Then we said, okay, let us see the Nifty 50, that what are the culprits? So the culprits are 5. And unfortunately, they're all the top heavyweights. HDFC Bank, Reliance, TCS, Infosys, and now after results, even Axis Bank. If I add these 5, the weightage is around 35 to 40%. You get it?
Yeah.
So unfortunately, the way our Nifty is constructed, or the weightages that they are. So what this market is doing in its very, very smart way, you'll find that over time, the weightages in these companies will reduce, and a lot of other companies, the weightage is going up. That is why the mid-cap index is outperforming the large. It's at lifetime high.
Yeah.
Right? The Nifty is 10%, 11% away. That is at lifetime high. Small cap is at lifetime high. So there is a lot of subtle question where I answered a question that there are still stocks that have done well. But they are not the big players of the Nifty 50. And these 5 call the weights. Your second largest sector, IT, is the biggest underperformer. Your third or fourth largest sector, FMCG, is the biggest underperformer. So that is...
So don't look at the Nifty per se and try and look at
the internals of kind of the maths or the calculation of the indexes are a little not in the favor.
Well, tough luck for Nifty traders. Okay, questions. Puneet.
Hi sir, thank you for the perspective. I think just continuing from the previous, because you look at momentum and you looked at momentum in earnings.
Right.
How do you differentiate a smaller term momentum in earnings versus a larger trajectory? Because like for metals, a lot of first quarter, second quarter, you would have seen the earnings, but nobody, I don't know, I didn't expect the momentum to last. So how do you differentiate that? And what do you do in the dull years? So for example, the last 2 years, if you are a momentum investor, how do you keep hold at that time? What would be your advice in that sense to someone who's getting in and wants to focus on that momentum in earnings play?
Right. So speaking about momentum of earnings, right? So when you say momentum in earnings, you think I'm looking at a quarter only. But maybe not. Maybe I'm looking at a little more longer time frame. So the historical, the further back you go, the longer is the trend. So to understand that momentum in earnings is only 1 quarter YOY is not what I look at. I look at longer term trends. As the theme goes that my company is called Marathon Trends. It's like running a marathon and not a sprint. If I was looking at only 1 quarter, I was a sprinter. But I look at multiple years. I look at 3 years. So I look at a trend that is playing out over 3 years in earnings, which translates to prices. So I'll tell you about metals. Very interesting that, you know, a lot of people swear not to do metals because of the volatility and underlying commodity. So here you really start looking at trends in metals. You look at the longer term charts. You know, things like copper and all are breaking out to lifetime highs after 10, 15 years of consolidation. So these asset classes that come out of 10 years, 15 years of like how it happened with gold and silver. Like this is not one-off.
Yeah.
These break out from massive bases. And when that happens, a 10-year consolidation doesn't end in 10 weeks. This will last. Yes, there is volatility in metals. That's why you'll find gold, silver corrected. That's why copper corrected. But I'm very bullish industrial metals. And that is why you'll find that I am not surprised that the best performing sector is metals today. Because we do have a few metal plays out there. And the interesting part is that they're very connected with industrial metals. So just go and look at the price movements of copper, zinc, aluminium. I find it's very exciting. And that is why in the asset class model, in my dashboard, the best performing global sector index is the CRB commodity index. So there is a very interesting play. So you correlate all this. As I said, you see historical earnings, which is not a question of just 1 quarter, multiple quarters. Then you look at what is moving and what is the probability of longevity of move. So this time, as I understand, commodities is not what people think 1 quarter or 2 quarters. This seems to be a very big game. It's a super cycle in commodities, especially industrial metals. So gold, silver does well, sometimes energy does well, sometimes industrial metals do well, yet we haven't seen it in agro, but at some stage you'll find even agro do well. So when a super cycle plays out through rotation, you'll find that something offsets, but the bigger story is up.
But you don't think, and sorry for the follow-up.
We have to take a break, Puneet.
Yeah, okay. So
you want to hold your question for the break? I also want to ask him, sona kitna sona hai? So that comes in after the break. We also have a question from a viewer, Kalyani from Hyderabad. Kalyani, I know your question is pending. We need to slip into a break though. We come back, take Puneet's question, then ask him about sona kitna sona hai, take in Kalyani's question, and then go on to Mahima. Stay tuned, viewers. We'll be right back.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT
that are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
Heart disease remains one of the world's biggest killers.
Earlier, heart care began only after symptoms or an emergency.
This week on NDTV Lifeline, discover how advanced heart scans, early screening and simple lifestyle changes are helping prevent heart disease without surgery. Because when it comes to your heart, early action can save lives. Only on NDTV.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV. India Inc.'s most respected names.
All right, back with the town hall with Atul Suri in conversation with the Maverick himself, and we were talking about some things around trends and metals and how to identify, how to stay with them, how to figure out. We hadn't asked him that, but how to figure out when the trend is changing as well. And I interrupted Puneet, who had his second question. So Puneet, I'm going to go with you quickly, and then a couple of questions from the viewers which are on the same theme. So Puneet, over to you first.
So just in terms of historical evidence, as you mentioned, when that's not visible in newer themes like EMS or data center, as you mentioned, then how quickly do you jump into those themes, and do you feel that what are you looking at? Do you look at management commentary, or what are some of those triggers in that?
Yeah, so that's a very good question. That, as I said, I'm a trend follower. Okay, now moving beyond the earlier question of momentum investing, I am a trend follower. So as a trend follower, I look for trends clearly. I look for larger trends, and I'm a follower, not a predictor. So very often the following bit makes you not buy at the bottom. But I have also realized over the years that bottom is something you only know afterwards. You never come to know the bottom then. We always think it's the bottom, but that bottom can go down multiple times and can keep you waiting for 10 years also. So over the years, I've learned to respect that when the bottom's made, that's not for me. But when the stock is in an uptrend, and that, as I said, is that earnings drive prices. So I strongly believe that the ultimate test is that are the earnings showing momentum. Once the earnings showing momentum, you'll find that with a lag or little earliness, the price also shows it. Once you get that, then it's a question of longevity. That is it just 6 months, is it 1 year, or is it 3 years, is it 5 years, is it 10 years? So over the years, that is how I do. I look at trending stocks, trending earnings with trending prices. So that's how it is. And as a follower, I'm never the first to enter. I don't know the bottom. However, I am late to enter, I'm late to exit. But the important part is that the money is made in the midsection. As I said, tops and bottoms are for fools and liars. Because practically speaking, what was the bottom, what was the top, you will only know in the future. It's very simple to look at the chart and say, "Okay, boss, September 2024 mein top hona chahiye tha." Valuations were expensive, our PE price earnings at least 24. But let me tell you, the maximum money that came into the markets was actually in July, August, September of 24. If you go back, because I manage, I interact with people, that the maximum flows that happened, chunky investments, actually happens near the top. And the maximum outflows actually happen at the bottom. And that's what actually makes bull and bear markets. Because in it is linked the story of bulls and bears, which is a story of greed and fear. So that's how it all plays out.
And sometimes following is so much sense, because these days you see so many people saying that the numbers of this company in India is a market which is porous in some sense, right? कि ये company के numbers बहुत अच्छे आने वाले हैं, and people are losing so much of money preempting good results instead of waiting for the company to give the results and then analyzing it well, and then taking a call that, hey, the company results and commentary are so good, it's worth buying slightly higher. पहले 5% miss हो गया तो क्या हुआ?
And see, and say, Neeraj, I don't play for even 5, 10, 15, 20%. I am playing for 100%, 200%, 300% kind of move.
नहीं बड़ा होता है ना
कि
नीचे का भाव देखा है तो शायद 5% ऊपर लेना पाओ. मैं बोलूँ क्या फर्क पड़ता है?
Same thing. I can even buy a stock 50% higher.
Nice. Even if you've seen it about a month and or 2 months ago, 50%.
You know, because I have seen Rakesh ji buy Titan in 2001 and even buy in 2005 and 2010. That 2010 buying also, which must be 100x of that, is still making him 100x. Amazing. So ultimately the important part is the trend, Neeraj. If you catch the larger trend, then whether you got in at the bottom, got in 5-10%, the important part is, are you in it? And are you sufficiently exposed? So that is trend following or trend investing. Ultimately to realize directional moves. And then you'll find that your obsession with bottoms and tops is less. The journey
is beautiful.
The journey is more important.
And what is more important in this trend, Atul? This is a very key point you've hit, right? Is it because you look at charts and you look at fundamentals? When you're buying something which is very 30, 40, 50 times higher or 50% higher, is it the chart trend which gives you the confidence to do that, or is it the fundamental trend which gives you the confidence?
It's the earnings. Yeah, like I'll tell you one of the most trending stock, okay, in Indian history, which is like, you know, again I have a vested interest, I own the stock, was Bajaj Finance. If you look at that stock, it was one of the most wealth creating trending stocks in a decade.
Yeah.
And you'll realize that quarter on quarter, Bajaj Finance just came out with numbers which were beats. And every time people say, "Ye to bahut बढ़ गया, ये तो बहुत बढ़ गया, ये तो बढ़ते, I think it was one of the biggest and fastest wealth creators that we must have had in the last decade." So these are characteristics that play. And you know, for all investors, ultimately there are these few stocks which ultimately move the needle. All others, you win some, you lose some. You win some, you lose some. But it is ultimately one such stock in your lifetime which will re-rate. And that is why when you go and look at the best investors in the world, whether it's Rakesh ji, Warren Buffett, or whatever you have, you'll find that it is this one such play.
That's true.
That one such stock which really re-rates and moves the needle. And the quality in that is that every quarter, or most quarters, not every quarter, you'll find that earnings don't disappoint and price goes up. It is in tandem. The biggest problem in that is that everybody can see it.
Yeah.
But nobody buys it. क्यों? क्योंकि बहुत बढ़ गया है. People may have bought every stock Rakesh ji bought, but very few held on to it. So and that was the ultimate wealth creator. So these are things that I have learned being with the great man that he was, that ultimately, you know, you don't get fixated on the bottoms.
Fabulous answer, Atul. Thank you. So for him, it was Titan. For you, what would have been the biggest wealth creator and the statistics thereof?
Again,
what I mean by statistics is that what made you think that, nee, let's write this?
So I think for me, one stock, again, it's a little backed in history. I mean, it's more than 5-7 years ago, was Eicher Motors.
Okay.
Eicher was one such play that, you know, I kind of enjoyed. Again, the numbers, the shocking things. And for me, what became a very interesting parameter of judging it, again, there was no numerical thing, was the waiting period. That, you know, there's a waiting period for those bikes. So if any vehicle has a waiting and it doesn't come off, it's going quarter on quarter, year on year, it was waiting for years, the manufacturer has pricing power. If अगर वो 2% price बढ़ा दे, which is straight going to his bottom line, it's not that the waiting is not going down. It was a premium, luxury product at that stage. So what for me was that ultimately I kept watching the waiting period. And at a certain point in time, the waiting also evaporated because a lot of other players also came in. And then it was not about earnings and price. You knew that at some stage, this would bring about the correction. So I, for one, actually, for me, one of the beautiful journey of earnings and price correlation was Eicher Motors. And more than just those two factors, which again were very delayed, was actually the waiting. So I used to actually almost, I mean, I don't ride a bike, so I didn't own a bike, but I would always go to a dealer and find out कि waiting कितना है.
Interesting.
Yeah. And then when that waiting vanished, I also knew that now that parabolic movement in earnings and price would plateau out because now the pricing power is gone. जो भी बनाओ, it was selling at any price. जब तक वो है, the profitability will be high. When there's competition, or you lose pricing power, your margins will plateau and sooner or later start coming off.
Interesting. Okay, just before we get to Mahima's question, the questions from our guests. So, ties in with what I wanted to ask you, Atul. Akash from Bangalore is asking, can gold and silver deliver 30% returns in the next 12 to 18 months? What do you think?
They can deliver, but the only thing is that, most people do not realize that the journey is not linear. If the question is that should I buy today and it will be 30% higher in 1 year, I don't think so.
No. Next 12 to 18 months.
Yes. The question is that the journey is not linear. What if it falls 10% from here?
Okay.
15% from here. So what happens is that such questions cannot have a binary answer. In our markets, answers are not binary.
Sure.
The fact is that I'll tell you the more difficult part is not whether it's 30%. The question is that can you stand the journey?
The journey, if it goes down.
Yeah. Right.
But क्या 18 महीने में नीचे जाके भी ऊपर बाद में ये पॉइंट से 30% रिटर्न दे सकता है?
It is possible. Because I'll tell you the world is going through uncertainty on various fronts. And there are some asset classes which become areas of refuge where people hide. A few years ago, people thought that would be replaced by cryptos.
Bitcoin, yeah.
Crypto emerged as an alternative to gold. This crisis is one of the reasons that gold went up so much, is that people realized that cryptos have halved and gold hit a lifetime high. True. So that itself was a very big reset. And mind you, crypto in India, we don't do much of it, but globally it's a very, very big trade. There is a very, very big trade. So in my understanding that gold and silver will continue to be relevant. That kind of parabolic move that we saw earlier this year, I don't think you'll see that. But it's a great allocation play. The journey will not be as lovely or as dreamy as the gentleman thinks in his question. Minimum 30% in 1 year. Wow. If anybody is looking for that kind of returns, you'd put all your money.
That's true.
But the journey is not going to be so smooth.
Okay, and what about metals at large? Because Padmanabhan from Chennai is asking that is it time to enter the metal stocks or wait for better valuations?
Again, valuations I don't know. But the fact is that if you look at the industrial metal stocks and you look at one step lower, you go and look at the metals itself, whether it's copper, zinc, aluminum, I mentioned that earlier, I'm extremely bullish. Because what is happening is that these metals are moving out of decades of consolidation. And when decades of consolidation breaks out, it doesn't end in a week, a month, a year. It gets to be very long. In between there'll be sharp corrections. That is the nature of metals. But I think there's a super cycle going to be playing out in metals.
Amazing. So Atul Suri साहब जो कह रहे हैं viewers that वो कभी वो decadal breakouts होते हैं और आप सोचते हो कि नीचे से इतना ऊपर चढ़ गया तो अभी नहीं लेना है. That may not be true all the time. Bear that in mind. Okay, Mahima, over to you.
Yeah. Hi, Atul. I think I love your insights. Just the fact that you also consider relative strength into along with fundamentals, it makes it very interesting. But just digging deeper into that earnings momentum part, right? When you say that you look at earnings momentum, is there a particular metric in place that you have the itna percentage revenue growth, itna percentage PAT growth? And secondly, you just mentioned the fact that you still consider metals are in a super cycle. You said it's still in the top quadrant. Do you think that your targets on the Nifty, when that gets hit, that thing in the quadrant will change, or do you think that upcycle will still continue?
Yeah, so things will change. I'll tell you, this is very, very dynamic. Okay, today metals are doing well because obviously IT is not doing well. It's an offsetting. And every year it changes. And to be honest, we try to predict what will happen next year, but it's very, very difficult. Okay, it's almost near to impossible. As a trend follower, as I said, I don't know. I may not be buying IT now, but next year maybe IT may be the maximum overweight in my portfolio. Ultimately, the question is how is the trend playing out? Are the earnings, is that showing out? Are the prices showing out? So these things will keep changing. They are very, very dynamic, and that is why you have to be on the ball. As far as earnings go, it is quarterly. Once in 3 months, you get a chance to review. But prices move every day. Narrative moves every day. Okay. Just as I said, the whole narrative was AI. The whole narrative can change to anti-AI. And suddenly the broad-based nature of Indian markets may be the biggest upside for us. Who knows? So as I said, prices move, reasons follow. If the world, your job, my job, his job, we are in the narrative world. Correct? For anything in the market, I can look at the screen and give you a reason. But that is after seeing narrative. Prices will move, reasons can follow. We can find a reason for anything. And especially in the world of AI, you can go to Claude and wow, give it a prompt and it can give you the most beautiful reasons. So the important part is that in this environment, that's why I don't predict. I follow. And let the earnings play out, let the prices play out. And if the trend is long, I think there's money to be made.
Thank you.
You know, the other interesting aspect that has come up, guys, I don't know if you guys have noticed, and Parth, of course, looks at AI so closely. Almost everybody's vocabulary, if it was that you can ask Chat GPT and it'll give you an answer, that vocab has changed to you can ask Claude and the answer will come in. Somehow, Claude has become the de facto.
But Neeraj, it is far, far superior. I mean, I love it. I'm like a, I'm a fanboy, total fanboy. And I've used all. I used Claude. We all started with Chat GPT. Then I used Grok, thanks to Musk's phenomena that he is. I looked at Google also, Gemini. But I'll tell you, Claude is at a different level. Altogether different level. In fact, Claude is something, and we used all these freer models. And Claude is something where you are ready to pay any amount for superior models. I mean, there's $100 a month. People in my office are using, it's like an open checkbook. And that is the quality of work and output. So I'm a total fanboy.
But all I'm saying is not just you. Parth, do you concur very quickly? Is it Claude or is it something else?
Absolutely. The thing with Claude is that the reasoning capability it's far more superior when we compare to ChatGPT or even other open source models. So I agree with sir that Claude is absolutely superior.
Claude, over a period of time, you keep interacting, it's figured you out pretty well, and it exactly knows what you want. So it flatters you hell of a lot also.
Does it give you diving lessons as well?
No,
not anymore.
For that you have to physically be
underwater. Okay, so Atul, what are the top draws now? Let's try and get to that. So you mentioned that metal stays in the top quadrant. You mentioned the IT is a valuation game, but because it's not momentum, you will not do. Data centers has come out and you believe it's a multi-year play, if I'm not wrong? Yeah. What else?
So there are themes. Again, this may not be in the standard, but I'll tell you another interesting area is healthcare. Right? I'm not talking about pharma. Pharma was doing very well, but now I think due to the generic thing, it may be a little wobble. But you look at the diagnostic stocks. They're doing very, very well. And the kind of earnings that they are being played out. Another area which is a very small niche area is textiles. Right? The earnings are improving, but I think there's a feeling also with these free trade agreements India is doing. A lot of the textile sector could play out very well. So what happens is that these are kind of niche plays. Very niche. Acha, banks, okay. Now we're talking about private sector banks. Of course, the HDFCs and the Kotaks and the Axis are having their problem. But you go and look at some of the lower down banks. There are many at lifetime highs. Right? So there are these kind of niches that are happening. It's not fitting into the standard bigger, chunkier ones, but there are kind of thematic plays that are happening. Cables and wires. Again, then the number of stocks may be 5 or 6 good ones, I'm saying, in the Nifty 500. But you'll find the kind of moves that are happening there. So that's what when I earlier told you that how we strung it, and we realized that the theme that tends to kind of play out at the moment is suppliers to data centers. So that, of course, is a larger theme. And then you kind of break it down. There are a lot of stocks that are there. Small themes, micro themes. And at the end of the day, you must realize that, we are in a market where not much is happening.
True.
We are not where the index is up 30-40%, that you can go and pick things. 2003, 2004 nahi hai. Now kya hai, 5% up, 5% and there also we are trying to create alpha. So we know that that's the reality. But as they say, if winter's here, spring is not far behind. And maybe India is going through a winter, a spring will come, and I think hopefully the next time we speak, it may be a different theme. But the
I don't have to take that long.
But the important thing is that whatever it is, the trend will play out. And the important part is to rotate into that.
Nice. One follow-up to there. The lot of global large institutions have taken stakes and becoming almost promoter entities into Indian smaller banks. Right? We've seen 6 or 7 or 8 transactions, banks and NBFCs.
Very true.
And therefore, an institution which needed a balance sheet now has a balance sheet.
Right.
Can some of those actually become multi-baggers over the next 5-10 years?
The screen is showing it, Neeraj.
It is showing
it. The earnings are showing it. And what I was in fact just talking, there's so many of them are these regional small banks. Very region-oriented, in fact very state-driven. very community-driven banks. Actually, the names were there. Of course, you can see the rebranding. They have all this thing. And with these larger balance sheets coming, suddenly from that region, they have moved to national brands. So this itself could be a big play, because in the private sector, just as when the private sector banks came, they gave the PSUs a run for their money. But I think even in the private sector play, you are seeing this play where there is large 4, top 2 or 3, due to various reasons, are not giving you that kind of growth, but the growth is coming from here. So it may be that same private sector PSU movement also happening among private banks, where the smaller banks may be playing out. I think financials are very interesting also. Another space that I find very, very interesting are financials. And also the amount of tech that there is going into it, the kind of models that are going in. So there's a lot happening. As I said, it's no large theme, but there are these smaller plays that are playing out here.
Quick follow-up, I'm sure maybe people have one more question. I haven't seen Jasmeet ask on anybody else. Sure, but can I just ask one quick question before that? Is the FTA signing an EMS moment for the textile sector? Great manufacturing expertise. Now there are FTAs.
Absolutely.
Maybe supplies go up.
Absolutely. And the market is showing it. The price is showing it. People are preempting that.
So can it be like 2-3 year play?
Yes.
Great manufacturing expertise. Now there are FTAs.
Absolutely.
Maybe supplies go up.
Absolutely. And the market is showing it. The price is showing it. People are preempting that.
So can it be like 2-3 year play?
Yes, possible.
Possible.
Because I'll tell you, first and foremost is that there are just a handful of stocks.
True.
They're all small caps. There's hardly even a mid cap in that play. And it's an ignored sector, uncovered sector, unowned sector. And if something like this comes up as a trigger, we don't know how it will play out, etc. There's a lot more involved. It is showing it. And that is why you'll find that those stocks are performing differently.
Okay. We have 2 more minutes. So quick question from you, please.
Sir, hi. You said that your target for the Nifty in the next 12 to 18 months is over 30,000, right? But you also mentioned that the heavyweights have been the laggards on the index. From here on, what do you do to support your target going ahead? Will the heavyweights contribute, or do you think the leadership will shift from here on?
Nice.
And one more question quickly, if you can also answer, what is the bear case target for Nifty that you have in the 12 to 18 months?
The bear case target, as I said, is 22,000. I think that's a very, for 22,000 to break something, a disaster has to happen in this country, or anything that happens which will affect this country. So that obviously nobody knows. These are black swan events, and in its definition, black swans are unpredictable. So even I can't predict them. So unless and until you have a black swan, I think 22,000 is a base. I know globally things are chopping around a lot. That everyone's more convinced about that. At 30,800, I know everyone's going to laugh at me and think I'm stupid. But then so be it. I'm an optimistic person. I'm a trend follower and I'm a momentum investor. So I may have that kind of thing. Sorry, what was your earlier question?
So I asked that, will the heavyweights start to participate, or will the...
Yeah, so what I feel is that, that when you see the index composition, there is a weightage, right?
True.
You will notice that these, as I said, 5 stocks make almost 35% of the Nifty weightage. Yeah. Due to even if they don't fall, even if they go sideways, if rest of the stocks start performing, you'll find that internally the way the indexes are constructed, the weightages will change. And as I said, a very interesting case in point is that the Nifty Next 50 is outperforming the Nifty 50.
Right.
Though they are both large cap. So when I tell you large cap, it should have both.
Yeah.
But the Nifty Next 50 is outperforming the Nifty 50 by a big margin, almost 10%, which clearly tells you that that segment is actually coming up. Mid cap index is at lifetime high. Small cap index is at near lifetime highs. So what will happen is that unless or until these companies do something superlative or get their act together, they may do market performance, because ultimately they are the market to some extent, but the rest will actually outperform. And that, I think, is where the positioning should be.
Thank you, sir.
Well, an hour of conversation without a sip of water. Atul Suri, kudos to you.
Thank you.
But more importantly, thank you so much for being here today.
Thanks. Thank you.
And I hope that we get to talk to you sooner, and which also means that the change in the trends that we've seen for the last 2 years may also hopefully come in sooner.
Yeah, we need to break out from the range.
Yeah, we seriously need to.
Yeah, we need to.
But thank you so much, Atul. Really appreciate your time.
Thanks, guys. I think you were very intelligent questions, and great job there.
Great. And viewers, thanks for tuning in to yet another episode of The Town Hall, this time around with Atul Suri.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
Heart disease remains one of the world's biggest killers.
Earlier, heart care began only after symptoms or an emergency.
This week on NDTV Lifeline, discover how advanced heart scans, early screening and simple lifestyle changes are helping prevent heart disease without surgery. Because when it comes to your heart, early action can save lives. Only on NDTV.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit.
Benchmarks recover slightly from the day's low, with oil keeping the pressure on Nifty that trades below 24,000 level. Sensex sheds 500 points today. Infosys names company veteran Ashish Kumar Das as its next CEO, trims its fiscal 2027 revenue growth forecast, citing cautious client spending amid AI-driven disruption. Cipla shares climbed after reporting an in-line June quarter with sequential improvement in the revenue margins and profitability. Despite year-on-year pressure, investors welcome the signs of an operational recovery for Cipla. Brent crude climbed above $101 a barrel as Red Sea tanker attacks and escalating US-Iran tensions deepen the supply fears. Markets are now bracing for the risk of even bigger energy shock. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take you through the market at this particular point of time. And yes, the crude-led pressure and with the escalation of war between US and Iran, that is what is really putting pressure on our overall market. And remember, crude oil above $100 a barrel, when we got a little bit of sanity in the middle for a few weeks, that's when the markets had really recovered. But now 23,695 levels is where Nifty 50 is at. Remember that some of the experts are penciling in 23,000 levels, and the movement of crude is going to be very, very critical in this. Let's take a quick check on the internals and what's really working in the market and what's not. Well, pretty much all the sectors in the red at the current moment. Auto sector is taking the largest amount of beating, along with consumption, IT, metals as well. But if you really take a look at the broader market, that is in line with the key indices also. It's a 0.6% drag on mid-cap 100 as well. And when we take a look at some of the sectors, FMCG is just showing a tinge of green, but nothing much to talk about there. RIL is one of those few gainers, along with Cipla and ITC, hardly adding 3-4 points to Nifty 50. But the biggest drag is really coming in from Bharti Airtel, heavyweights like HDFC Bank, even Mahindra and Mahindra, Infi, Bajaj Finance, so broad-based participation when we talk about the pressure mounting on the market. Shibani Kurian, who's the senior fund manager and also head of equity research at Kotak AMC, joins in now. Shibani, always a pleasure to welcome you on NDTV Profit. Looking at the huge, pressure that is really quickly mounting on our Indian markets after we had tested 24,500 above levels just a few days back. It's all owing to crude. How is the market momentum looking from here on?
Hi and good afternoon. Always a pleasure to be on your show as well. So clearly markets have seen the volatility in line with what's happening as far as the Middle East conflict and crude oil prices are concerned. In fact, as you rightly mentioned, it did appear for some time that the risks from the conflict were abating and therefore the markets had seen some recovery. But now with the recent events, volatility clearly is back on track. However, when you look at our markets and especially from a macro perspective, this time around, because of the measures that have been taken by RBI as well as the center, from an overall perspective, especially the external sector appears to be well cushioned. Some of the data measures that have been taken by RBI as well as the center from a that has come out has shown that the initial trends as far as the FCNR mobilization overall perspective, especially the external sector, appears to be well cushioned. Some of the data have been fairly robust, and if that continues, at least on the external front, there is a cushion which is available, which was not the case the last time around. So that's number one. Near term, of course, the volatility is going to be something that we will have to navigate. But from a market perspective, our belief is that earnings are going to play a key factor. And now we are in the Q1 earnings season. So far, earnings have been largely in line with estimates, slightly above if you look at the mid cap and the small cap space. But for the year as a whole, I think from a market perspective, one, of course, what's happening globally and the geopolitical tension, and second will be earnings. That is going to be the key driver for our markets going forward.
So Shivani, very good summation of all the aspects put together. Now let me break it down. When we talk about earnings, you're saying that, okay, pretty much on the expected lines. But the guidance that was given of war really going down and the margin pressure really easing, all those guidance and the pre-numbers being penciled in are now out of the window. So now how are you penciling in the future trajectory, and Q2 earnings will be something to watch out for?
So absolutely. So as you rightly pointed out, near term, in some segments where input costs have again moved up, margins are likely to see some degree of pressure. But if you look at the earnings that have come so far, in fact, companies have navigated the margin headwinds fairly well. Now, if you look at the full year, which is FY27 and 28, consensus today is penciling in mid-teens earnings growth for Nifty and slightly higher earnings growth when it comes to the broader market. Now, even if you do assume that there is some impact because of the higher input costs as well as commodity costs, and if you look at the Nifty earnings for FY27 and assume that there is some downgrade, we will still be in a better position in terms of earnings with maybe low double-digit earnings growth for FY27 and that improving to mid-teens. So in that context, if you look at the last couple of years where earnings has been flat to low single digit, there is an uptick as far as earnings are concerned. However, from a valuation perspective, when you look at Nifty today, Nifty is slightly below its long-term average multiple on a one-year forward price to earnings basis. Mid caps and small caps are slightly ahead of their long-term average multiples. But within the mid cap segment, and as I was alluding, from a broader market perspective, the earnings delivery has been far better than what the headline Nifty number is showing. So, therefore, from an overall perspective, as we navigate this volatility, from positioning and across market capitalization, we are slightly overweight on mid caps, neutralish as far as large caps are concerned, and small caps is slightly underweight primarily because that valuations are still significantly ahead of their long term estimates and averages. But there are stock specific positions. Overall, the way we have tried to navigate is this market is focus on domestic facing sectors where earnings trajectory appears to be fairly strong and solid, but where valuations are in your favor. So sectors that we have been positive on include the BFSI space, healthcare, and parts of industrials, capital goods, where we have overweight position.
All right. So you've summed it up, Shibani, when we talk about the overall market and how your outlook is really there. But are we penciling in the delayed monsoon impact on agri and therefore consumption, and added with higher fuel cost, and if food inflation also kicks in? Could inflation be a worry? Of course, futuristic thinking, but penciling in right now. Is that even in the talking points right now?
No, of course, it's in a talking points, and it's a valid, argument that you're putting forth, because obviously the monsoons and its impact on food inflation is something that we will have to watch out for. Monsoon have been deficit, but there has been some pickup in terms of monsoon activity. If you look at the overall projection for inflation for the year as a whole from RBI, inflation projections are ahead of 5% for the year as a whole, and in terms of average. So there is a definite uptick as far as trajectory goes. And then there is also this base impact which leads to higher inflation. So that is something that we will definitely keep track of and watch out for. As I was mentioning, if you were looking at consensus earnings estimates for FY27, building in mid-teens earnings growth, assuming that all these headwinds continue and they do impact earnings, there could be some earnings cuts, but we will still be in low double digits, which is better than last year. So near-term volatility possibly continues, and of course, with oil staying above $100 a barrel, all these risk factors are back in play. The risks which had seemingly abated maybe a couple of weeks ago. So it's still a market where we believe that from a overall equity position, one has to be fairly bottom up in terms of construct of portfolio. Look at companies where you have seen corrections, where valuations have become far more reasonable, but where the slightly medium term earnings trajectory is more or less intact.
Right. And my final question to you, Shibani, when we look at the banking space, and they have been also quasi-investment platform, when we talk about the economy, there are jitters, then the banks are sold, and when there is some bit of confidence, banks are the ones which are being bought. So what will be your view on the banking stocks at the current moment? Is this a buy or wait and watch for more downward trajectory?
So, in this entire market segment, if you ask me, one sector where valuations are attractive, banks are clearly that segment, because today most of the banks, especially some of the larger names, are trading below their long-term average price to book multiples. The reason for that, of course, has been that there has been disappointment as far as the margin trajectory for banks have been concerned, and margins have come off because of higher cost of funds, even while loan growth has moved up. Now, incrementally, there are a couple of things to watch out for. Our belief is that the pressure in terms of margin should be close to bottoming out. The money coming in from the FCNRB deposit mobilization should help in terms of improving overall liquidity in the system, as well as deposit growth for the banking sector, which means then margins start to kind of bottom out. And assuming that there is no rate change, then our belief is that overall earnings trajectory for the sector should see improvement in FY27 and FY28. And here, as I said, valuations are clearly in your favor. So this is one segment where we are positive on. Of course, we'll wait and see how some of the risks factors that you mentioned play out in terms of overall impact. But I think from a risk reward perspective, the sector does appear to be fairly well placed.
All right. So, of course, attractive, but Shivani, I would say that it can get more attractive if crude behaves the same manner. All right. Thank you so much, Shivani, for joining in with your expert take. Always a pleasure chatting with you. Thank you.
Thank you so much. Thank you.
All right, let's shift focus also on the currency market, because that is also one of the critical factors to watch out for when economic decisions are taken for our country investments. And second, crude has been playing truant when we talk about our currency market. So today, flattish in trade at the moment, but 96.5 rupees versus dollar is not a very comfortable figure. Remember, our historic low is close to 97 rupees against the dollar. So not too far away from that. So that's what we are talking about when we look at our own Indian currency. Let's get chatting with Dheeraj Nim, who's the economist or forex strategist at ANZ Research. Dheeraj, always a pleasure chatting with you. Looking at the rupee dynamics and probably almost a 2% fall in 1 month after seeing some bit of recovery that we had seen because of FCNR and various RBI measures, as well as the crude cooling off in the middle. Now, what is the in-house view in terms of the rupee trajectory?
Look, I think the rupee is sort of back to where it was in terms of the impact of global risks. We have maintained that, despite all the measures that the Reserve Bank of India announced, I think the real fault lines for the rupee and the balance of payment lie externally, not domestically. So it remains vulnerable to crude prices and also the double whammy coming from, the dollar strength, which is fueling inflation and Fed rate hike bets. So I think those two factors will continue to guide where the spot exchange rate goes. As it is, while the FCNR and other flows are somewhat off to a decent start, much remains to be seen if the estimates, eventually will be as optimistic as when we started it out.
What are the chances, Dheeraj, of, if crude oil remains elevated above $100 per barrel as the war is really escalating between US and Iran and things are not settling down there? What are the chances of rupee really testing its historic lows once again?
Well, we are not very far from there, already at 96.5, with significant intervention from the Reserve Bank of India over the last couple of weeks. I think the underlying momentum is, of course, for the rupee to weaken much more than where it currently stands. So if the oil prices remain above 100, mind you, that would be higher than the Reserve Bank of India's assumption for FY27. It will be a key risk, and markets will test 97, 97.5 kind of levels for the rupee, even in the near term. And, I think the additional risk, like I mentioned earlier, is from the broad dollar strength. The dollar is already above 101 on the broad dollar index, and I think any up move from there will also be an important factor, apart from the Reserve Bank of India's intervention in understanding where the rupee goes. But of course, the bias remains to weaken.
All right, the bias is towards weakness, and all the external factors that you mentioned are going to be, supportive of that trajectory as well. But Dheeraj, before I let you go, just one more word on, of course, the steps that have been taken by RBI. First, are there more steps required at this current moment, given the scenario? And second, the full impact of the steps taken, is that to come, or have we really estimated that and baked it into the rupee movement?
I think an important distinction has to be made here. Look, all the inflows that are going to come through the swap windows will actually be directly swapped with the central bank. So they will not be addressing the underlying dollar demand in the FX market. These steps actually work better through confidence channel. That is when, people start seeing such inflows coming in, the confidence about the currency improves, the confidence about the Reserve Bank of India's ability to intervene improves, and so on and so forth. And therefore, the rupee stabilizes or even appreciates. But this time, the problem is, like I said, not domestic, but external. These steps do nothing to address the fault line that lies in oil prices and broad dollar strength. And that's where the problem lies. So if those two factors continue to remain on the adverse side, they will continue to overpower whatever inflows we are seeing on account of these measures. And like you've seen in the recent data, the the cumulative increase in the FX reserves on the back of these $21 billion odd inflows has actually been very, very small, close to about $3 billion. So I think the confidence channel is getting impeded this time, and that's the important nuance to bear in mind.
All right, some important points and takeaways, but external factors are causing fault lines in rupee, and the trajectory is and the bias is towards more weakness. Thank you so much, Dheeraj Neem, for all your expert take on the currency movement. All right, moving on to the most important factor, which is giving jitters all across the world, not just the Indian markets. So Middle East tensions have really ratcheted up over the last 24 hours. In fact, it is getting even more graver or problem at the current moment. Now, the US has really launched the strikes for a 13th straight night, hitting multiple Iranian cities, even as the House of Representatives has really voted for a second time to really pull American forces out in the Gulf. The Iran-backed Houthis have really opened a dangerous new front, threatening the Bab al-Mandeb Strait and also drawing in the regional powers like Saudi Arabia as well as Israel. Now, President Donald Trump, meanwhile, says that Iran hasn't really felt enough pain and is weighing a massive new strike. And now the price tag this war has already cost the US nearly $110 billion, with the Trump administration asking Congress for $67 billion more. So this is the situation at the current moment. The war of words and the strikes really continue. Zaki Zaidi, who's the foreign affairs expert and former researcher at IDSA, joins in now. Zaki, always a pleasure to welcome you on NDTV Profit. Lots happening. When we talk about the West Asia crisis, how are you seeing the US posturing, which is now getting much more aggressive than what we had seen the stance to be from Donald Trump in the middle?
Hi, thank you for having me on your show. See, the Middle East, if we see that recently the MOU signed between America and Iran has completely fallen apart, like primarily because as per Iran, America has not honored the terms and conditions of the Memorandum of Understanding. And this renewed war America is primarily targeting because they are literally out of target list, the missile launchers, and like they are primarily focusing on the civilian sites, like the desalination plants, electricity plants, and the bridges, roads, as we have seen recently. Iranian foreign minister very clearly, flatly put it that they are going for eye for an eye. So as the conflict progresses, we are likely to see like more attacks on the tit for tat attacks on the civilian infrastructure, like which directly impact the civilian population because the Gulf countries and the Iranian populations who are living in the coastal areas, they are largely dependent on the desalination plants. They don't have the source of the fresh water. Electricity grids, then you have major bridges and roads. So, of course, like in the previous two rounds of war, when the conflict was going on, the oil price and the insurance price like skyrocketed. And this time, not only it just happening in Iran, they are targeting the civilian, the oil infrastructure, refineries, but a new front has been opened, Bab el-Mandab. The Yemenis, the Houthis, they already have a decade-old conflict with Saudi Arabia because Saudi Arabia has put up a blockade on Yemen. Now they are trying to break up that blockade, by joining the alliance with Iran. And we see that already the traffic, the shipping traffic that was very low because of the blockage of the Strait of Hormuz. The another front in the Bab el-Mandab, which is a gateway to the Suez Canal in Africa and Europe, it has also drastically come down. As per my knowledge and the recent reports, only two Chinese ships were able to choose Saudi Chinese ships, ship being like coming toward China, were able to cross that. So, of course, in the coming days, we are yet to see because this is in my understanding, is a mindless war just going on because Trump does not have any strategy because they are primarily focusing on the civilian infrastructure and civilian targets.
But it's also use of force as well as the deep pockets that the US has managed to demonstrate without a strategy and still cause the chaos. But Zaki, how do you see this really panning out? And you said it's an eye for an eye, and that will make the whole world blind. And that is the situation that we are seeing currently. But where is the break point that we see, and how much longer before that some sort of a negotiation, if at all, really starts to begin?
So, at the start of war, the America and its allies, like especially Israel and the Gulf countries, that thought that Iran is likely to surrender, in within the 1 week of the very massive level of attack. However, the situation is completely different down the couple of months. And Iran, despite not having a conventional nuclear bomb, they have discovered their own version of nuclear bomb, that is the Strait of Hormuz. They can bring the whole world economy to a standstill, to halt, because of their control of the Strait of Hormuz. And this conflict will not settle down until unless there is a resolution. There is a from the Iranian perspective, that there is a control, there is a regulation of the Strait of Hormuz, because that's the biggest card Iranians hold. Otherwise, they open the gates that anytime they would be attacked by Iran and Israel, until unless, because if we just see that Iraqi president visited the US, and now to 1 day before he visited Iran, he carried a message from Trump for a provisional conditional ceasefire, for a 10 days ceasefire, but the Iran rejected it, citing that until unless the basic issues are met, especially their frozen funds and the Strait of Hormuz, because Iran now claims sovereignty over the Strait of Hormuz, which
Right.
was free before the war. So they are not going to back down, and this skirmish, large scale or mid-level scale, this is going to
Yeah.
continue.
So Zaki, a quick question. So looks like the war is going to escalate even more, and do you think it will be for a prolonged period of time?
Yes, I think so, because see, neither US nor Iran has appetite for war, because it puts severe pressure on the civilian population. If the Iran is able to attack, because Iran is being attacked all over the country, all the major cities have been hit. Water desalination plants, power fuel stations, many civilian sites. It's putting pressure. At the same time, Iran is hitting all the launch pads across the Gulf states. It's hitting Jordan, Bahrain, Kuwait, and maybe UAE will be added into that list too, and Saudi Arabia too in the coming days, because all the attacks are happening, all the flight takeoff, missile launching, everything is happening from those surrounding Gulf bases.
Yeah,
So-
it's very clear that this time around, this second round is getting even more wider in terms of its impact and participation globally as well, and the impact on the supply chain constraints also. So thank you so much. It's always a pleasure to take your expert view, and guess we'll keep talking about the geopolitical crisis that is really emerging in West Asia and is getting more pronounced. Thank you so much, Zaki, for joining in.
Thank you.
Thank you. Now to a programming note, and after a pause of 13 years, one of the most prestigious honors in Indian business is back. On 26th of July, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. And the nominees are: transforming a legacy conglomerate with sharper focus, stronger returns and disciplined growth, Dr. Anish Shah of Mahindra Group. Driving innovation, global expansion and EV leadership, K.N. Radhakrishnan has accelerated TVS Motors' growth journey. the architect behind India's retail success story, scaling brands and delivering exceptional growth at Trent, P. Venkatesalu, is another candidate for this particular coveted award. From cables to electrical leadership, Inder Jaisinghani has powered Polycab's rise into an industry powerhouse. Advancing global healthcare through innovation and execution, Vinitha Gupta continues to strengthen Lupin's international footprint. A visionary who transformed a homegrown manufacturer into a global mobility powerhouse is Rajiv Bajaj of Bajaj Auto, steering India's largest car maker through a new era of growth, innovation and mobility transformation is Hisashi Takeuchi of Maruti Suzuki. Leading India's engineering giant with scale, ambition and execution excellence is S.N. Subramanian of Larsen & Toubro. All right, don't miss the awards, the Business Leadership Awards at NDTV Profit on 26th of July. We have a date on that night with the top corporate leaders. With that, it's a wrap on markets at 12, but keep it with NDTV Profit. Thank you so much.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान.
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद. तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई. आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े. vandebharatam.org पर रजिस्टर करें.
Heart disease remains one of the world's biggest killers.
Earlier, heart care began only after symptoms or an emergency.
This week on NDTV Lifeline, discover how advanced heart scans, early screening and simple lifestyle changes are helping prevent heart disease without surgery. Because when it comes to your heart, early action can save lives. Only on NDTV.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
Hello and welcome to NDTV Profit. You're watching trending stocks from NDTV Profit Suzdot Studio with me, Heedal Tadia. Now, interesting day of trade today, and just viewers, it's a slightly different show. We do not have Sharad Dubey today, so I'm going to take over with regards to markets as well. What is interesting? The recovery that we are seeing from the day's lowest levels. Let's quickly pull up Nifty 50 as well. We are nearly trying to inch towards the highs of the day, but still in the negative with cuts of around 0.3% coming in there. Let's pull up Bank Nifty as well, because in terms of Bank Nifty, it's almost a 700 points recovery that is coming in from the day's lowest levels. You're seeing Bank Nifty, which is at the day's highs. Let's quickly first look at the factors and then we look at the individual aspects. You're seeing Nifty, which is finding support at 23,600 so far. So that is the interesting point. However, the recovery is interesting. Apart from that, if you talk about top gainers, you have names like Cipla and ITC, which have been buzzing in trade. Cipla, yes, after earnings, it's the brokerage notes which have kept the stock upbeat. In terms of top losers, you have names like Eternal, Bajaj Finance and M&M. They are the ones which are under pressure. Infosys, for obvious reasons, has disappointed, and this is on the back of the guidance cut. You have the IT index, which is down nearly 0.6%, whereas the mid-cap and the small-cap index is seeing a recovery from the lows as well. In terms of today's session, you're going to eye a Bank of Baroda, SBI Life, Tata Consumer, Shriram Finance. These are the companies that will be reporting earnings today, so watch out for all these counters in trade today. But let's quickly look at the sectoral heat map, and then we'll look at the Nifty 50 heat map as well as we speak, because in terms of individual sectors, the kind of recovery that's coming in terms of banks is what is ruling. Media is the top gainer, followed by the PSU Bank Index, FMCG, and the private banking space. What is losing out is auto. That is down nearly 1% as we speak. Healthcare is also slightly under pressure. Let's look at the heat map in terms of Nifty 50 to see which are the stocks which are actually leading to the kind of recovery that we are seeing in terms of in terms of Nifty 50. Cipla, Trent, HCL Tech, Wipro, HDFC Life as well as ITC. But whereas if you have to look at the losing end, you have Infosys, which is under pressure, M&M is under pressure, Eternal is another one which is down in trade, and Dr. Reddy's. So pretty interesting mix that we're watching out for in terms of markets, and your broader markets have also seen a good amount of recovery from the day's lowest levels. But let's move on. Let's look at the watch list as we speak. Emphasis, a mixed Q1, the margins have declined. You have Cyient, where the core business has reported a soft quarter, and that stock is also in the positive, though. Fractal is down 6%, and that's again on the back of a weak number that has been posted on a sequential basis. Infosys, the upper end of the guidance has been cut, and that's the reason why you're seeing pressure. Cipla, the brokerages have turned bullish post the first quarter numbers. Go Digit, the gross written premium has dipped 8% on a year-on-year basis, and hence that stock is down nearly 8%. Nuvama has hit an all-time high in trade today. Lupin, the competitor, has launched drug tolvaptan, and that's the reason why that stock is under pressure. Thyrocare, a good set of numbers. In fact, it's cooled off slightly from the day's highest levels. Shadowfax as well has seen a block deal today, and it's almost close to 1900 odd crores. Swiggy will be deleted from MSCI and FTSE, and that's the reason why that stock has been under pressure as well. Misho, 2.5% downtick. However, Macquarie has maintained an underperform. Gujarat Alkalis has posted a strong set of numbers. That stock is doing pretty okay in trade. Sona BLW, margins have been hit. However, they're targeting a 10 times revenue growth in the next 10 years. IGI is reacting to numbers along with the Motilal Oswal, which is down 10%. Very interesting in terms of Motilal Oswal, because they've turned profitable. However, it's the capital markets and the wealth business where the profits have declined, and I think that's the reason why the street is not really happy with Motilal Oswal. So that's with regards to where our watch list goes. But one of the companies that we mentioned in the watch list is the Gujarat Alkalis. A strong set of numbers that have been posted, and this has mainly been led by better realizations. The export growth has been very strong as well, and the company has returned to profits from a loss last year. To discuss more on the quarter gone by, Avantika Singh, IAS and MD at Gujarat Alkalis, joins in. Avantika, welcome to the show. Always a pleasure to speak to you, and congratulations on the numbers that have been posted for the first quarter of FY27. Does this really set the trend for FY27 as a year as a whole? Or do you think there is going to be a seasonality factor that will be coming in?
Thank you, Hiral. Thank you for having us. We are extremely happy to share that GACL has delivered a strong start to this financial year. And despite a very challenging global scenario and market uncertainties, the team has been able to give this best ever quarterly revenue performance because of our product diversification, our very disciplined market strategy, and focus on operational excellence. And I don't think this would be a seasonal performance, Hiral. I think it is something that we've set the stage for how the financial year, the remaining of it, is going to unfold. As you see, our EBITDA has grown as compared to the previous year's similar quarter. It is a good 83% growth. And the profit before tax has improved from 10 crores to 110 crores. That's a growth of 100 crores. And we believe that this is going to be consistent and we'll be able to navigate the market challenges which lay in store for us in the coming quarters as well as a team, with focus on improving our operational efficiencies, improving on our product realizations, and focusing on market diversification as well as exports.
Okay. That's an interesting point that you make, Avantika. So tell me one thing. How have the caustic soda prices performed? Because is that the reason why you've seen this kind of an improvement, or are you seeing structural cost improvements as well within the business?
See, as far as the caustic soda group is concerned, the previous quarter has shown an upswing of about 21% in the caustic soda group. But as we've diversified our product mix, you would have seen that it's not just the CS group, it is also the price realizations that we had in our phosphoric acid segment, the caustic potash segment, aluminum chloride, and the entire product mix. You would see we have diversified beyond caustic as well, which is also a risk mitigation strategy. And as far as the future is concerned, we believe that despite the soft overall international outlook of caustic, the domestic demand continues to be very sturdy. And we have ensured that we diversify into various other markets within, except for Middle East, and ensure that we explore the US market, Europe, Southeast Asia, etc., which has helped us ensure that we get better recoveries from our export as well.
Avantika, you mentioned about other products as well, but if you talk about the chlor-alkali industry, last 2 years, I think the industry itself has suffered with weak profitability, right? Do you think that the cycle is now actually bottomed out, and or is it too early to call for a sustained recovery from here on?
I believe it might just be too early to call this a sustained recovery because right now we face a lot of geopolitical challenges. It's a very dynamic situation. It will be very difficult for us to predict. In fact, we have a day-to-day strategy evolution to position ourselves in the market in such a way that we are not over-reliant on the caustic itself, the CS group itself. And the idea is to diversify our product base, also diversify our markets, and strengthen our export basket while retaining our dominance in the domestic segment.
Okay. So, if you have to look at the demand outlook from here on, alumina, textile, paper, chemicals, water treatment, which industry in terms of the end user industry is showing you a strong demand recovery, which will then aid your business as well?
I think the alumina segment has definitely shown signs of, expansion. A lot of expansion projects have been announced. We see strong growth in that segment. The domestic demand segment, I believe, is quite sturdy. We see that as far as the export market is concerned, there is oversupply, and you have the entire Chinese, overcapacity, which is softening our prices in the export market. But we've branched out into new markets like West Africa, Mauritania, Guinea, as well as Brazil. So we are looking at expanding and diversifying into these markets to strengthen our earnings from export segment. And as well as domestic segment is concerned, like I said, alumina, textiles, both seem to be quite on the positive footing for us.
Interestingly that you mentioned about Chinese competition as well. I know it's somewhere come down slightly. So are you seeing any signs of Chinese supplies returning aggressively to the markets, and that in turn could, actually impact realizations, and there is a risk on that front going forward?
There is definitely a business risk there, but like I said, we've kind of tried to mitigate that risk by expanding beyond our product mix, beyond just over reliance on the CS group. We've planning to add capacities in phosphoric acid, in the caustic potash group. Like just recently, the board has approved in principle this the HCl synthesis unit, which is going to support not just our improving our capacity utilization in caustic at the Dahej, but as well as feed into our phosphoric acid plant. So our conscious strategy in the long term is to reduce our costs, improve our operational efficiency. We are also focusing on reducing our energy costs by long term SPV tie-ups with for hybrid RE with CleanMax and ABRN. And in the long term, we find that by positioning ourselves by reduced energy costs, a diverse product mix, and a diverse export market, we would be able to mitigate these risks.
Avantika, let's talk about FY27 as a whole then, because we're still not calling this a sustainable recovery yet. It's a turnaround in the first quarter. The question is going to be, how do the remainder quarters pan out? Are you comfortable giving a guidance in terms of FY27 that it will materially be better, at least in terms of a comparison to a FY26? And what are the biggest things that could actually derail the story from here on? Will it be caustic soda prices? Will it be energy costs? Or is it going to be global demand?
So as far as our FY27 projections are concerned, we are pretty optimistic about it, Hiral. We have two big RE power projects that are going to be commissioned this year. It would the expected commissioning for the ABRN unit is around October 26th, and the CleanMax project should be commissioned around March 27th. So this financial year would see a substantial reduction in our overall energy cost, while we focus on sourcing of short-term RE power as well to maintain operational efficiency and reduced energy costs. As far as global demand and the caustic pricing is concerned, it is dynamic. There are challenges in the market, there are uncertainties, but I think our team is capable enough of steering through these challenges like they have done in the Q1, and which was a very difficult time. And you understand the geopolitical situation in which we were operating. We believe as a team, we are geared up to face all challenges, and we are looking at a very optimistic financial year 27.
Understood. So lots to watch out for. But thank you, Avantika, so much for joining in. It's always a pleasure to speak to you as well. And this turnaround absolutely is being rewarded as well, because if you see the stock price, 7 to 8% is the kind of up move that we're seeing in terms of today's session. But moving on, Mahindra Lifespace, let's pull up that one on the screens. This has also reported numbers. The stock is trying to see a recovery and find a space, but right now seeing cuts of around 0.2%. It's a strong start to FY27 because your sales have risen nearly 70%. Your residential pre-sales are more than doubled. And that number you're looking at is what, 925 odd crores. The company has added projects worth almost 5,600 crores in terms of gross development value, and have said that launches remain on track for the year. Amit Kumar Sinha, MD and CEO at Mahindra Lifespace, joins in. Amit, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My question to you is, it's a strong start, at least at the face of it, in terms of the first quarter of FY27. Anything that you think could have been better versus what has been reported?
Yeah, so I think some part of our business is very lumpy. So the IC business that has done really well for us in the past few years has had a slower Q1, but we have a very healthy pipeline. Q2 will close some of those pipeline transactions and should be back up. And then collections, I think collections will also improve. I think, in this business, collection matter a lot because I heard your previous interview. I think a few months of this quarter were adversely affected by the sentiment. So we didn't have much footfall in April and part of May. So when we sold those pre-sales, the collection of those have not really started to happen in Q1. They'll happen in Q2. So these two factors are affecting the collections, like the IC delay as well as the sales related collection that will happen in Q2. These two things would have, if they had happened, they would have been a perfect quarter. But I think we'll make up in the rest of the year. This is the nature of the business.
Okay, that's interesting. Okay, so the 925 number that we're picking up in terms of your residential pre-sales, How much of it is coming from existing projects versus new launches? And what's the kind of pace that you're looking to maintain between the two over the next 3 quarters?
Yeah, so it's this quarter, it'll be roughly, I would say, the way we define new sales or launch sales is anything that has been launched in 90 days. Of that will be called the new, and then it becomes sustenance. So I would say it was 55-60% from new sale, which is Mahindra Rainforest. It's a really large, amazing project that we have in Bhandup. We call it Mahindra Rainforest Kanjura Next. 12,000 crore project phase 1 has been launched, and it has done well for us in the 30 odd days of this quarter when we opened the sale. So roughly 55-60% came from the new launch. Remaining 40 odd percent came from sustenance sale.
Okay.
That will continue to be the case. I think we have 8 launches planned this year. You're seeing the benefit of only 1 launch in quarter 1. You'll see the benefit of 2 launches in quarter 2, and the remaining rest of the 5 launches will happen in second half of the year. So the ratio of sustenance versus new launch will be similar, 55-60% coming from launches, the remaining coming from sustenance. But in subsequent year, in our aspiration to achieve 10,000 crore, we expect the sustenance sales to be around 60-70%, maybe 75%, and new launches to be a smaller part of it, so that our portfolio is wider, giving us multi-year visibility.
Got it. Amit, you mentioned about the industrial cluster and the integrated cities as well, where you are expecting a cover-up to happen in the remainder part of the year. Now, do you think this is the segment that could actually become a long-term value creator for a Mahindra Lifespace and for the investors? And the contribution to earnings over the next 2 to 3 years could be way substantial versus the real estate business alone.
Yeah. And see, I'll see people. We are one of the few developers that has industrial business. So I think it merits a little bit of explanation. This is, and I'll keep it very simple. Most of our peers do a lot of residential plotting, which gives them a short-term benefit. For us, this is equivalent to residential plotting. It's industrial plotting, where industrial clients take much bigger parcel in our Mahindra World Cities or in our Mahindra industrial cluster. So it's very similar business. It's you acquire the land, you are able to develop the infrastructure, and you're able to bring some of the global as well as domestic clients to set up their factories there. So very, very good business. In the past, we had a few assets which had done really well, but right now all our assets are firing. In fact, we are putting renewed efforts in bringing Origins Ahmedabad and Origins Pune to market at the earliest. Origins Ahmedabad is ready. We're looking for first anchor client. Origins Pune, we are finishing the land acquisition, land aggregation. So hopefully these two will also start firing, in addition to 2 parks in Chennai, Mahindra World City Chennai, Mahindra Origins in Chennai with Sumitomo, and Mahindra World City Jaipur. So we'll have a much stronger portfolio. And given the revenue and return profile of this business, we feel that this is something we want to invest more. We are top 2, top 3 players in this industry, private player. And we've had amazing success story in terms of creating amazing destination for industrial clients. So we'll continue to invest in that business.
Understood. How are you seeing the demand overall? Because, a lot of chatter says that probably there could be rise in prices as well, because your input costs are going up. So there is a potential, you could see developers passing that on. That probably will create affordability issues, and in turn, there could be some bit of moderation as well coming in when you talk about the ticket sizes. So
Correct.
If you have to look at this entire chain, where do you stand right now, and how are you seeing, where are you seeing the demand stable in terms of ticket sizes?
Yeah, I think it's a very valid question. We always struggle with that because, costs have their own escalation, inflation, and some part is commodity, some part is labor. So if you break our cost, 1/3 is large commodities like steel, cement, and aluminum. 1/3 is the 10 other commodities or derivatives, which are like glass and let's say PVC, windows, doors, etc., paints. And then 1/3 is the labor cost. So that's typically how our cost structure is. The inflation on labor cost is roughly 6%. On the commodity cost, we have seen 2 to 3%, the major commodities, and rest of the commodities, you do some value engineering, you're able to bring it to 3%. So overall, 4% is what we plan in our in our financial models. Now, given the war-related discontinuity that has happened, it has affected, let's say, aluminium, which is high energy. It's imported a big part, or tiles, which requires a lot of gas. Gas prices have gone up. So some of those have affected, but it is only affects a small part of the cost structure. We have modeled that out, and you don't award all the cost structure for a project on day one. Since the project is 5 years, so you award roughly 20 to 30% of the contract in year one, year two, year three, year four, year five onwards. So that's how it's split. So if you take into account the overall impact on our cost structure is somewhere around 1%, around plus minus a little bit. And that's okay. That's across all commodities, across all beyond what we had already planned for. And that's something that we should be able to either absorb, or for the right value proposition, we should be able to pass to the customers. And I just want to give you from a customer side, the salary growth in this country is around 8, 9, 10%, right? And our price increase on the apartments has to be lower than that, so that the affordability continues to increase. That's why we plan somewhere around 1.5% per quarter. That's 6%. But these market where sentiments are a little bit weaker, we are able to keep it low because we have planned our growth, assuming that the sentiments will be somewhat softened. And you make up in the second or third or fourth year. That's how we plan our projects.
Understood. So I think it is going to be interesting to watch out for. But thank you, Amit, so much for joining in. Always a pleasure to speak to you as well. In fact, the stock itself is seeing some bit of a recovery from the day's lowest levels, trying to find its footing in the side of the green, but still cuts of 0.1% coming in there. But this is the time where we can't really skip the rapid fire on trending stocks, and hence we have Rahul Sharma, Director Head Equity Research at Equity 99 Investment Advisors, joining in. Rahul, welcome to the show. Always a pleasure to speak to you. This will be quick answers. Earnings impact, 3 stocks: Emphasis, Cyient, Infosys, all of them reacting to the set of numbers that have been reported. Anything that you like on the charts?
Good afternoon, Hiral. Thank you for having me on the show. Firstly, speaking about Emphasis, which is trading around 2250, this stock has been in a range. On the upside, it is coming near to 2400, and on the downside, we can see support near 2120 levels. So for now, the stock is in between of this range, and I think this consolidation may continue going further. And till the time we do not cross 2400 on the upside, I think Emphasis will continue this consolidation. Now coming to Cyient, the chart structure is weak. We can see a downward sloping channel on the technical charts. It is lower right now, trading lower from its 100 EMA, 200 EMA, and even 89 days of waiting moving average. So the chart structure is low. The next support for Cyient is coming near to 775.
Okay, got it. How about a go digit? The stock is under pressure. Your gross written premiums have dipped. Stock down 7.5%. Is there an opportunity to buy at these levels, or are you seeing the momentum downwards?
No, I guess, Hiral, this stock has been quite a beaten down stock right now. The earlier support, which was near 270, has been breached today. These levels we have seen last year near the April month. And now when the stock is trading around 260, I think this stock is very much weak. The chart structure doesn't show any kind of bullish pattern where we can invest in. So I think this should be avoided.
Okay. How about a Nuvama Wealth? That stock is trading at an all-time high today. 1.5% up move. Are you seeing further momentum?
Yes, Hiral, it is quite visible. We are seeing the breakout on the upside. Right now also at 1977 or maybe 2000 levels, the stock structure is quite positive. Today it made a high of 2066. I think this shall continue. There is no weakness and the volumes are also good. So I think Nuvama will see next upward direction, which can lead the stock towards 2150.
Interesting. So thank you so much, Rahul, for joining in. Always a pleasure to get your views as well. We had lots more to discuss, but running absolutely short of time. But as we wrap the show, that's Trending Stocks with me, Hiral Daria, and the team that put the show together. Here's an exciting announcement, I think, that all of you all have been listening about. Just 2 days left as one of the most prestigious honors in Indian business is back. On July 26th, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. And here are the nominees for Business Leader of the Year for Public Sector. From strengthening India's maritime capabilities to building a globally respected shipbuilding enterprise, this nominee has steered a strategic national champion to new heights. That's Captain Jagmohan, Chairman and Managing Director of Mazagon Shipbuilders. Leading one of India's energy giants through a period of transformation, growth and evolving consumer demands, this nominee has balanced scale with strategic vision. Manoj Jain, Chairman and Managing Director at BEL. Revitalizing a cornerstone of India's industrial ecosystem, this nominee has championed execution, engineering excellence and renewed growth. K. Sadasivan Murthy, Chairman and Managing Director at BHEL. And driving the transition from power generation leader to energy transition champion. This nominee is helping shape India's energy future. Gurdeep Singh, Chairman and Managing Director at NTPC. And at the helm of India's Energy Explorer, this nominee has led with resilience, scale and strategic foresight in a rapidly changing global landscape. Arun Kumar Singh, Chairman and CEO at ONGC. Please stay tuned to NDTV Profit today, tomorrow and Sunday to know the winners.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। P-Mark सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
Heart disease remains one of the world's biggest killers.
Earlier, heart care began.
Benchmark staged a sharp recovery from days low as Nifty defends the 23,600 level on the downside. Mid-cap index and Sensex recover over 600 points from the low as FMCG and PSU banks also stage a rally. And Infosys names company veteran Ashish Kumar Dash as its next CEO, trims its fiscal 2027 revenue growth forecast, citing cautious client spending amid AI-driven disruption. Meanwhile, Cipla shares climb after reporting an in-line set of numbers in the June quarter with sequential improvement in revenue, margins and profitability despite year-on-year pressure. Investors welcome signs of an operational recovery. Brent crude climbs above $101 a barrel as Red Sea tanker attacks and escalating US-Iran tensions deepen supply fears. Markets are now bracing for the risk of an even bigger energy shock. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that's going to get you a roundup in terms of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour as well, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And whether you talk about Nifty or Sensex for that matter, you've seen some strength also come in terms of Nifty 50 with that 71 point uptick thereabout. When you talk about Sensex as well, somewhere close to 250 point downtick is something that you're seeing coming in. So somewhere close to 600 odd points, 650 odd point recovery coming in for the Sensex. When you talk about the entire sectoral picture as well, you do have auto consumption on the back foot still, rural, pharma, some of those sectors, metal, realty, oil and gas as well on the back foot. What's doing quite well for itself and holding up quite resilient now as a sharp surprise also coming in is PSU Bank, FMCG, IT as well. So some of those sectors just about holding on to some bit of resilience. Now let's also quickly talk about the entire list of stocks that are buzzing in terms of the Nifty 50 top gainers. But before we do that, let's also take a very quick look at the losers as well from within the Nifty 50 pack as well. So something like a Bajaj Finance, Eternal, M&M, Bharti Airtel, Infosys, Shriram Finance, all of those counters really make it to that list as well. So downtick of somewhere between 1.5 to 2.5 odd percent. When you talk about the list of gainers, it's actually Cipla that makes it to that list despite a rather tepid quarter also coming in for this particular counter. Wipro, HCL Tech, Trent, some of those counters as well. So some of your IT stocks actually quite resilient. And it's actually heavyweight Reliance Industries as well that's up about 0.7% as well against a rather tepid backdrop coming in for the market still despite that recovery that we saw coming in. When you talk about the Adani Enterprises as well, that stock is up about half a percent as well. So that's where you're seeing some of the gains also come in from within the Nifty 50 pack as well. But let's also focus in right where the spotlight actually is. When you talk about Brent crude, that's where the key talking point really is in terms of $101 a barrel that you're seeing coming in up about 14% this week as the Middle East conflict widens and Trump threatens tougher strikes on Iran. Now, as you can see on your screens as well, Brent very close to $98 a barrel right now and WTI close to $90 a barrel. So some bit of strength that prices have given up since this morning as well, which is when they breached $101 a barrel as well. But that same surge is actually hurting gold. Bullion has slipped to somewhere close to $4,000 an ounce as rising energy prices stoke inflation fears and boost the odds of a Fed rate hike. So in short, oil's rally is now working against gold's rally, and you do have our experts for the day joining us on the show to talk to us about this in greater detail. In fact, Anuj Gupta, commodity expert, as well as Kainat Chainwala, AVP Commodity Research, Kotak Securities, joins us on the show right now. Thank you so much for taking time out and joining us this afternoon. First things first, Mr. Gupta, I wanted to come to you in terms of the kind of move that you've seen, the kind of surge that you've seen coming in for oil prices, and it's been quite the milestone that we've managed to hit yet again, and that's after a gap of almost 2 months as well when you talk about that $100 mark and subsequently the $101 mark as well. So what are you then expecting by the way of prices, and what kind of trajectory are you then mapping out?
Good afternoon. See, the geopolitical tension are the major concern for the crude oil, and in last 3 to 4 days, we saw that crude price increased by almost 15%, and even the Strait of Hormuz was the major cause that crude oil prices increased sharply. And even we have noticed that there is no comment to resolve this matter, and that will increase the support. They will provide support to the crude oil prices. And even we have seen the fear of inflation is increasing. However, the prices of crude is increased and tested $100 per barrel, but yet still we are expecting that crude price may increase as geopolitical tension increase on a daily basis.
No, absolutely. And Kainat, care to weigh in? Just wanted to get your take as well in terms of oil prices. And this is one level that we've been talking about for quite some time. You're seeing it finally emerging on the charts after quite a gap also amid the escalation. How are you looking at this sort of surge that you've seen? And do you also sense that it is a little bit sustainable right now?
Yeah, like we discussed last week, that we are looking at two key points, two choke points in risk right now, and which has driven the rally. Okay, last week we have seen 15%. This week again we are seeing 12 to 14% gains. So I believe that unless and until now there is a sharp escalation, okay, because prices are already, crude oil markets are already pricing in the risk that is there, which is of the two key choke points, Bab el-Mandeb and Strait of Hormuz. But for prices to actually sustain above 100 or breach those levels and again move towards the highs we have seen in April towards 120 levels, it will need again another level of escalation, which could be in form of we've seen attack on desalination plants. We've seen attack on Saudi's facilities. And if, like Trump has already said that if Iran is not coming to negotiation table, or if there is, more escalation on the Red Sea front, Trump would, again, continue with strikes, which is already continuing for the 13th day. They might escalate their strike. So if, any kind of escalation happens, then we are actually looking at, sharply higher levels of around 115 to 120 levels. But, apart from that, I feel that all the risk that is there, it's priced in the market right now. And I do feel that, markets or crude oil markets might take, get into consolidation phase for some time. Probably, between 95 to 102 levels is what we are looking at, which could give, relief to gold and silver, which has already, corrected after, oil's rally. So yeah, we are looking at a consolidation phase as of now, unless and until there's a stark escalation from US or Iran.
No, absolutely. And Kainat, one more thing that I wanted to ask you about is the new front that has really opened up, right? In terms of the Red Sea disruption, that's also something that you have coming in, some of the commentary coming in from the Houthis as well. And for now, not just commentary, right? Some of those attacks as well on a couple of those ships is something that we're definitely watching out for as a new front of worry that is really opening up right now. How are you looking at those new avenues as well, where you're seeing those pockets of, new information come in, which are actually worrying the markets and really reflecting very sharply in terms of prices as well?
Yeah, like, the Bab el-Mandeb Strait and the recent attack by Houthi, on the tankers. So I do believe that, that is a new front that is open, because till now, in the 5 months of the attacks since the US-Iran war escalated, we have seen the focus on Hormuz, which is around 20% of global supply, exports, supply flows that pass through. Adding this strait, Bab el-Mandeb Strait or the Red Sea to it, adds another 5 to 6% of the global supply at risk. Saudi was using it as a bypass. So with both of these choke points, if they keep blocking it, if there is a major escalation and if it is completely blocked, that means we are talking about 20 to 25 million barrels per day at risk, right? And that's a major risk that markets are pricing in. But, having seen this market for the last couple of months, what we've seen is that it's majorly primary, focusing on the risk. Okay. And, what we've seen is that the risk unwinding happens quite quickly. So even if there is a news of, again, some negotiation coming in, we might see prices again, moving back towards $70 to $80 a barrel. Only in case of, the sustained escalation on this front, because we are also seeing Black Sea front also, we are seeing a lot of, escalations happening. So Red Sea, Black Sea, Hormuz, all this, if it sustains, then it actually opens the path for Brent towards 115, 120 levels. But if we see again the same thing happening where there's an escalation, then there's a de-escalation window where they come again and have some negotiations and then say they are going to have some discussions on it, for which US is already building pressure. So then we again see, it again moving back to the range which it was before this escalation happened. And that happens quite quickly, that unwinding of risk.
No, absolutely. And we've seen that really play out as well, Kainat. And in terms of some of the brokerage commentary as well, it's actually very close to what you're saying in terms of if the escalation really persists. Now, that's the caveat that we're looking at right now. But let's also talk about gold as well, Mr. Gupta. Just very quickly wanted to get in a word in terms of what you're expecting for the trajectory. For much of this week, it's been a little bit of a choppy week by the way of not, it's a little bit range bound and still a little bit volatile in terms of the kind of price direction that you're picking up for gold. So how are you looking at the kind of trajectory for the week gone by and what are you then penciling in next week?
See, definitely, gold price trading on a sideways trend or in the range, but the trend of gold is bearish. And yesterday we noticed that gold and silver prices corrected from its higher level as the US unemployment rate came on a positive note, and we noticed that dollar index increased sharply yesterday. And after that, we noticed a sharp correction in gold and silver prices, or you can say a profit booking from last 4 days increment. So I think the trend of gold is little bit on a downside, and currently it's trading around $4050 per ounce, and I'm expecting it may test 4,000 to 3970 dollar per ounce in the coming time. As the trend of gold is down, the geopolitical concerns is there, higher crude oil prices, and the outflow in the gold ETF. These are the main concerns that I'm expecting that gold may trade on a negative mode.
Absolutely, and thank you so much for taking time out and joining us this afternoon. So that's the word coming in when it comes to both oil as well as gold prices. But let's also move on and talk about how consumers are increasingly focusing on clean labels, better nutrition and minimally processed foods. You do have retail veteran Arvind Mediratta, who's making a fresh bet on India's grocery market. In fact, my colleague Sessa caught up with the management about this evolving opportunity and what it looks like. Let's go across and listen into a slice of that conversation.
India's grocery market is at an inflection point. As urban incomes rise and consumers become more health conscious, a new wave of fresh and premium stores are emerging, and one such store is Fresh Terra. Today we are here at the store with the founder himself, Arvind Mediratta. Thank you so much, sir, for taking the time. You have been in this business for decades now. What convinced you to launch Fresh Terra now in India?
So as you know, the air that we breathe in India is highly polluted. The AQI levels in Delhi never are below 200. The water is not good. You cannot drink tap water. So we put RO filters in our homes. So our inspiration has been that at least the food that people eat should be healthy, should be nourishing, should be wholesome. So we want to be the most trusted destination for fresh, wholesome and gourmet food, and we want to make all this available at affordable prices for the mass majority of Indian customers. So given that in mind, what we have done is we have three very unique things in our store. So we have an atta chakki. So we are sourcing wheat from different parts of the country and getting it milled directly in front of the customer's eyes. Same thing we're doing with spices. The most common spice is haldi. It's an essential part of every customer's kitchen in India. So we're getting the best quality haldi from Maharashtra, Tamil Nadu and Meghalaya and getting it milled or grounded in front of, again, customers' eyes. Same thing we're doing with chili powder, red chili powder. We're doing it with garam masala. We're doing it with coriander powder, etc. And third thing is cooking oil. Again, an essential staple in every Indian kitchen. So we are getting the mustard seeds, both yellow and black mustard seed, and doing cold press milling in our store. So this is something that customers have talked about, that they have been lacking this. They miss the smell of high quality mustard. And when we do this, people are getting the finest quality products with no impurities, absolutely pure. And this has been a key differentiator.
Right. Sir, you have also raised $9 million in seed funding from your parent. How do you plan to deploy that fund, and how do you plan to reach a profitable and a scalable business, and how soon?
So I will say that essentially we are making investments in 4 or 5 areas. First is to set up these stores, or we call it an omni-channel model. So we have this wonderful store, which the first store has come up in Gurugram, and it's next to Hilton Hotel, Sector 63. We plan to open several such stores in Delhi NCR to start with over the next, I will say, 12-18 months, and then go all over the country.
All right, then there you go. So that's the word coming in terms of a different kind of inflection point coming in when you talk about the FMCG market as well. But let's also move on and talk about Capital, small finance bank that's in focus on the back of its numbers. When you talk about the net profit figure, that's actually risen. NIMs also, you've seen quite the expansion coming despite given the improvement in yields and the cost of funds as well, AUMs have grown about 22% on a year-on-year basis. Disbursements as well grew about 16.5%. So that's the entire set of financials that you're looking at in terms of the numbers for the first quarter when you talk about something like a Capital Small Finance Bank. In fact, joining us on the show right now is Sarbjeet Samra, MD and CEO of the company. Thank you so much for taking time out and joining us right now. First things first, just wanted to try and understand what are the levers for the NIM expansion that you've seen coming in this quarter, and do you also see that as sustainable in the second quarter also?
The main lever for NIM expansion in this quarter was deposit repricing. And of course, a slight expansion in CD ratio as well. So there's some more repricing which is due in the next quarter. Of course, we are there's a leg room available for the CD ratio further to increase, which continuously we are doing. And so we are very hopeful that with all other pressures around, we'll be able to sustain this NIM levels or slightly improve them in the current fiscal.
And Mr. Samra, the next question is going to be in terms of your asset quality as well. You've seen that also improve on a sequential basis. What are you then expecting going into the second quarter against the slightly complicated background that you have right now in terms of macroeconomics and everything that has been happening in terms of geopolitical tensions as well? It's a little bit of a complex background on all fronts as well. Against that backdrop, asset quality improvement sequential basis, do you see that being sustainable?
I think that is also sustainable because actually the geopolitical scene, we have now viewing it for some time. And if you see in the current quarter also, we have shown improvement both in gross NPAs and net NPAs. And I look forward for they are moving forward during the current financial year towards a favorable trajectory. There are no concerns, major concerns which we see around. Yeah.
No, absolutely. And going forward, is there anything else that you're really watching out for? And in terms of geopolitical impact, just to check with you again, there's nothing that you're seeing coming in right now in terms of that impact. No worries on that front.
No, actually, say the MSME segment to the business loan from where the maximum growth has come, and we envisage that to come also. So we are, say, in a ticket size of starting from for MSME starting from say 15 lakhs to about 50 lakhs, where major of our business focus is on that segment. And these all are indigenous. Both from with regard to the products that they are into or the products that they make and the market they are into. So this segment, we have not seen much impact on this segment earlier also, and in the present situation also, just keeping our fingers crossed. I think so. This segment into which we are into secured lending and into middle income group and the ticket size into which we are. I don't see much impact on this. Of course, keeping again fingers crossed. Say if anything alarming happens, affects the economy, affects the inflation, then that we are not living in an isolated situation. That impact will come, of course. But just keeping fingers crossed, we are quite hopeful that our portfolio will keep on performing in the same way. Yeah.
No, absolutely, and thank you so much for taking time out and joining us on the show right now. So there you go. That's the entire update also coming in terms of growth picture as well for Capital Small Finance Bank. That stock is down about 1.5%, almost 2% in fact. Let's also move on and get you an exclusive conversation that Ridhima had with DP Singh, Deputy Managing Director and Joint CEO of SBI Mutual Fund, where he's shared his outlook on the markets and his views on the current Indian equity valuations. Let's go across and listen in.
We are here at SIF 360 Bharat Summit 2026, and joining me is DP Singh, Deputy MD and Joint CEO of SBI Mutual Fund. Thank you for joining us on NDTV Profit. Sir, I want to start by asking you that markets have been super volatile this year, and the oil prices have again shot up after seeing a low just few days ago. Now, what's your advice to the investors at this point of time?
Volatility is a friend of the market, and it will remain, and especially in a time when there are geopolitical situations which are around us. This will remain there, but I think this is not the first time it is happening. If you look at the history, there have been positions when markets are more volatile or less volatile, but volatility is going to stay there, and investors are aware about it. Investors have evolved; they understand. But when I take a look at the trend of inflows, etc., I don't think investors are really too much worried about it. It's not in a bull run, of course. But the normal flows are continuing. People are still putting money in the market, and they know if they put money at the lower price, they will get the benefit of higher returns in the times to come. So nothing to be worried about.
So what will hold the markets this year, and what sort of a return expectation can investors keep this year?
See, on the fundamentals basis, the returns are always a function of the revenues being generated by the companies. And India is in a very right position. The fastest growing economy, the revenues of the companies are growing. So we can jolly well expect good double-digit return over the period of 3 to 5 years. So that remains intact. And what is holding the market is FIIs. The hot money has already gone out. Whatever is left now, we have robust internal flows. The SIP book of around 32,000 crore is continuing, it's not coming down. So 32,000 crore means almost $3.2 billion, $3.4 billion every month, and plus some more flows coming into the market through institutional investors will keep the markets very solid.
What's your outlook on the current valuations?
Valuations have, after the correction and after the recent correction in last 3-4 days also, valuations seem to be not very costly, it's fair. Because within emerging markets will always be when your country is growing at the fastest rate, the valuation will always be at a premium. So it's not, we are at a little premium, but this is justifiable premium.
Now the company's just gotten listed as well, and what sort of product line or focus of the company can we expect? I mean, SIF is definitely one of the places where the company was looking to see growth in, and also ETFs and passives. What's your view on that?
First thing, that listing has nothing to do with the product launch, etc. Because we were responsible to the investors, we are responsible to the investors, and we will continue to remain responsible to the investors, whether listed or unlisted, that's immaterial. But listing was a stage, this is the phase when once you reach a level you need to get listed, because there's a need of good companies to be listed, and we have just tried to bridge the gap and bringing in confidence into the market that there's a money for the good issues, because market was absolutely dry before we came in. And the moment our issue became so successful, people have got courage to come to the market. So that's a big takeaway from our issue. That's what I'm saying. That is our role into bringing in the sanity in this kind of situation. But as far as product innovation is concerned, what was there on the drawing table? Yes, SIFs are there. Yesterday, new consultation paper has come on MF-PMS. That's a huge step. This is the first step towards the and broadening the base of this intermediaries base. It could be RIAs, it could be MFDs, it could be a new set of manufacturers who are doing with the MF-PMS. I think this is going to be a revolutionary thing, and the country will see a number of wealth managers. Today, PMS 500. I will not be surprised if this number becomes from 500 to 5,000 in very near future as well.
Other than that's commentary coming in from SBI MF as well, but that's all that we have on the show for now. Thank you so much for tuning in.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing the committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
Heart disease remains one of the world's biggest killers.
Earlier, heart care began only after symptoms.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार।
All right, it's the largest IPO by the issue size that's coming up, and we are talking about Manipal Hospital, and we have the management here with us to take us through what is it that the investors will bet on in subscribing to this particular issuance. Dilip Jose, always a pleasure to welcome you on NDTV Profit, and all the very best for such a large IPO really hitting the market soon. And you've just revealed the valuation picture. So 78,000 odd crore rupees at the upper end of the price band that you have suggested. When we compare it to the peers, your company is richly valued in terms of the numbers. While you are the largest when it comes to the beds, second largest in terms of the hospitals in the country and a quality name. What is it that the investors will get pulled into for investment into Manipal Hospital vis-a-vis the other peers who are already trading in the market?
So thank you, Nisha, for having me on your show. We are, like you said, the largest hospital group in the country in terms of bed capacity, present across the country, and have a consistent track record of performance, both in financial and non-financial matrices. So this is what the investors would buy into, and we think we are very well placed to tap into the opportunities that the healthcare sector offers today for hospitals of scale. You asked about the valuation. Our thinking is that this is a valuation that considers incoming investors, a valuation that considers the fact that there is very little OFS in our offer, and there is no intent to maximize the return for anybody. I think our whole intent is to attract the right kind of investors who are keen about the properties of healthcare, who understand healthcare, and who would want to bet on a platform which has a track record which we are demonstrated, and data is there in the DRHP in the public domain.
That's right. But Dilip, I will counter you on one bit that even if there is no sell down by way of OFS, but of course, and Temasek yesterday told us that they are going to be a long-term investor, but it's also the MTM gains and losses by way of the value unlocking that the private equity really looks at. And my second question is exactly about this. Of course, a lot of PE money, because of the richness of the hospitals and a huge benefit that this particular sector really presents, has attracted many investors. And you have some very marquee names. Temasek is the promoter there and a controlling stakeholder. TPG also has been there for a long time. When we talk about these investors being there, always the question of an overhang of supply of paper really comes in, because as soon as the stock goes up, there can be block deals to maximize on that benefit. How will you allay fears for somebody who has invested and will not be looking at a stock which has an overhang and therefore the prices are suppressed?
So Nisha, if you look at our prospectus, our dilution is only about 10%. So therefore, the overhang, while your concern is appropriate, that there might be possibilities of some of the investors selling. Like you said, Temasek have announced yesterday or conveyed yesterday that they look at this as a long-term platform. The Manipal Group, Dr. Pai and others are founding members of this enterprise. Then the others put together, all the other investors put together hold something like 15 or 16%. And even if there are transactions over a period of time, I don't think it would create disruption in terms of supply. And and it is reflected in the fact that if there was keenness to exit, and you said it is a rich valuation, this would have been the right time for people to exit. I think the fact that people are staying back and the OFS is minimum is possibly an indication that there is intent to stay longer with the platform. And therefore, I would not personally worry about a significant overhang being
All right. So you've given a good argument that they want to stay longer. And that's the narrative really coming in. But for them to stay, that means they have some value creation that they're seeing in an upside from here that they can later really monetize on. So Dilip, looking at this, your margins are at almost peak levels. Your occupancy is above 60%, 65%. Generally, the industry has these kind of peak levels. Occupancy can really be boosted to 70, 72%, but what more than that? So where are the growth levers? Where is the kicker going to really come in for?
Absolutely. The first thing is occupancy, since you touched upon that. You said we are at 65%. We are at that. And that, like you said, also, it gives headroom for another 10 or 12% to grow occupancy. So that means that with additional volume of patients coming in, we have already fully invested capacity available to treat them. That is one lever. You would have known that we acquired Sahyadri hospitals about 7 or 8 months ago. And one of the reasons for that acquisition is the opportunity that we see to unlock the potential of that asset. That would be an asset which would grow faster than the ex-Sahyadri network of Manipal. The third is also, like the DRHP notes, that we have close to 3,000 beds coming on stream over the next 3 years, both greenfields and expansions of existing facilities, including, by the way, hospital in Mumbai. I think these three levers certainly, gives us upside potential, and that's the way we would look at the next 3 years or so.
All right. We are looking forward to see Manipal Hospital in the city of Mumbai. But you did mention some of these levers, and of course, the expansion is a part of it. it. In terms of Sahyadri also, that particular bit of acquisition is left and the proceeds are going into that. What about the debt levels and the plan for deleveraging? Can you give us a sense on that?
Yeah, currently, Anisha, we have gross debt of approximately 10,000 crores, cash in hand of about 2,500 crores. That would mean a net debt of about 7,500 crores. And our primary proceed is about 8,000 crores, like you know. So we could be practically net debt zero at the end of this IPO. And then we have the ability to decide how much do we want to be really net debt zero, or do we want to keep some cash in hand. And that would give us an opportunity and, so to speak, or dry powder, so to speak, to look at anything potential that might arise in the future in geographies that are of interest to us. That's the way we would look at it.
So you are acquisitive in nature. What is the expansion plan, and what are the regions and areas that you could be really looking at?
We would have one more hospital coming up in Bangalore. We just signed up a greenfield facility in the city. That would be our 15th in that city. We have a greenfield hospital ready for commissioning by end of this year at Raipur. The 600-bed Mumbai facility is about 18 months away. The work is well underway. We have several of our existing hospitals undergoing brownfield expansions. So this is how we are looking at. We have a greenfield under construction in Pune. So multiple new geographies, moving away from, many years ago we were a predominantly Southern India operator.
Yes.
Moving away from that to a pan-India role and a pan-India footprint is what we are trying to do.
Well, this was Manipal Health, outlining the growth prospects for their upcoming IPO. But moving on, NIIT Learning System, let's pull that chart up because the stock is in focus on the back of their Q1 FY27 numbers, wherein if you see the stock is up almost 2.4%. Revenue is up though 25%, but we've seen only 5 to 8% of organic growth in this company. Margin has compressed. But to speak more about how was Q1 and what lies ahead, we are here joined by Mr. Sapnesh Lara, who's CEO and Executive Director at NIIT. Sir, welcome at NDTV Profit. Pleasure to have you. Just wanted to understand, how was Q1 for you? Because we've seen organic growth is only 5%, while reported growth is 25%. This is, of course, because of the acquisition that you did. But just wanted to understand, how was Q1 and how is FY27 looking like?
First of all, I would say thank you for inviting me on your show. Second thing I would say that the chart you pulled up was for a different company. I'm representing NIIT Learning, whereas the chart that you pulled up was for NIIT Limited. I think what you have now is the accurate data. That said, to answer your question, I think we had a good quarter. We grew 25% year on year in INR terms. We grew more than 11% in constant currency terms. We also grew 3% quarter on quarter approximately. So overall, I think we did well. What was really significant in terms of achievement was how we are able to AI enable our offerings. We recently launched a suite of offerings that will enable an organization to transform their L&D using AI with our assistance. And I think we see great potential in that offer. We are already at about 13% AI-enabled revenue out of our total revenues, and we see that expanding significantly over time. With AI, what we are able to do is very rapidly converge on strategic initiatives that an organization might have and use AI-enabled learning and development programs to help organizations push forward with their strategic initiatives using L&D as a lever. So using skilled employees as a lever to pursue strategic transformation and do that at scale and at the pace at which the business wants to move at this time.
Understood. So first of all, really sorry about that mistake. Sir, on my second question would be, you just spoke about AI, which is already 13% of your sales. Just wanted to understand, where do you see this number reaching, maybe, say over the next 2 to 3 years?
See, over the long term, I would think the majority of our revenue would be AI enabled. We are ahead of our peers in AI enabling L&D, and I think we will stay ahead of our peers. I think we will create distance, and I foresee over the next 3 years it will be the majority of our business.
Understood. And sir, the organic growth is 5% ex RECO. I wanted to understand about the underlying growth trajectory that you are expecting from the core business once the acquisition benefit annualize.
So we think you're right. We delivered approximately 5% constant currency growth year on year on our organic business ex the North American real estate contract. We expect that our growth will accelerate as we start seeing impact of some of the new opportunities we are winning, as well as we start seeing the impact of AI-enabled opportunities in our numbers. Right now, like I mentioned, we are at 13%, which is ahead of our peers. But I think over the next few quarters, we'll start seeing acceleration in our organic growth as some of our existing clients start to benefit from the solutions that we are bringing to them and start mainstreaming these solutions.
And so, two of your consulting clients have sharply cut their spending and the segment actually declined 16%. What visibility do you have when it comes to recovery, and when can, these clients return to your maybe FY26 run rate?
That's a great question. So our overall visibility on the back of the new client additions grew 19% year on year, and it's at $462 million. Like we had reported, we saw softness in two of our large clients in Q4. Those clients have since recovered, though not to the pre-Q4 levels, but they have shown smart recovery between Q4 and Q1. We think that there is potential for them to recover further as we move forward.
Also, I wanted to understand about the margins, sir. In June 2026, excluding other income, your margins were around 16%, while in FY26, it was around 18%. What about FY27, where these margins can go to?
We are expecting our margins to be in the 18 to 20% range in FY27.
Okay, and sir, what about revenue growth in FY27 and maybe FY28, if you could give us the target in percentage that you have maybe for next 2 years?
We think that our revenue growth for the full year will be in the 9 to 11% range. And I think we'll start accelerating as we get into FY28.
Understood.
Our long-term expectation is that we will be in the 20% growth trajectory in the long term.
And sir, technology and telecom, your largest vertical, are at 23% of revenue, grew only 8%. One is, what is causing this slower growth, and can this become a double-digit growth maybe in 27 or 28?
We think so. We think technology and telecom have always led. They are the largest segment we have, and they have grown very well over the last several years. As you might imagine, technology is the key purveyor of change in transformation. And I think while, like I pointed out earlier, one of our key clients had shown softness or pullback, a temporary pullback in their spend in our Q4. They have pulled back some or gone back some, but not to the peak. And we think that over time, as we start delivering solutions that impact their bottom line, they'll spend more, and we will see technology and telecom grow faster.
Well, thank you so much, sir, for joining in and having a conversation with us. Pleasure to have you at NDTV Profit.
Thank you.
Well, Somit, something exclusive coming in for Paytm. What's that? If you could, help us with that.
Well, yes, what I'm picking up from my sources is that there is expected to be a big block deal when it comes to Paytm, and this will be done via SAFE partners. And most likely, what sources are indicating is that this block deal will happen on the exchanges next week. Now, SAFE partners might look to sell close to 5% stake in Paytm next week, is what we are gathering from our sources. And stake in Paytm next week is what we are gathering from our sources. And given the fact that it's a big chunk, there could be a discount of close to 5 to 8% is what I'm picking up from my sources based on the current market price. Now, do remember that SAFE partners own close to around 12% stake in Paytm. So even after this 5% block deal, they will be left with around 7% stake in Paytm, which is also expected to come as a block going forward. But at this point of time, SAFE partners is looking to sell close to 5%. Block deal might happen next week is what our sources are indicating, and it could happen at a discount of around 5 to 8%. So keep an eye out for Paytm. The stock might be under pressure next week if there's a block deal that comes in from SAFE partners, because this won't be the only block deal. There could be more block deals coming in from SAFE partners even going forward.
Understood. Well, moving on, Sejal Glass is actually in focus. This is on the back of order win. So they have received new orders, UAE order of around 71 crore and India order of around 50 crore. But how this is going to impact top line for the company? What are the execution timelines of this order? To tell us more about that, we are here joined by Mr. Amrut Gara, who's founder and promoter at Sejal Glass. So welcome at NDTV Profit. Pleasure to have you. Just wanted to understand about this order. If you could, give us details. What are the execution timelines and how this is going to have an impact on your financials, and by which year?
See, I will tell you first thing that previously our order book positions for UAE was at a 50 million always, and in this quarter it has increased to 72 to 73 million. So means there is a 22 millions to around 27 million incremental order book positions, and the execution of this order has started from the June and the July first week, and it will remain to, I think, 2 quarters. So the first quarter is Q2 and Q3, and maybe a little bit of portion will go to the Q4 also. And for India operation, always we will have a normal visibility of the order book positions. But this quarter we have booked a certain large project which is valued above 50 crore, and that is from the prestigious A-rated developers like Godrej, L&T, Prestige and the Raheja, and that execution will be over by the next 6 months. And because of this order, our targeted FY27's target of 25% growth maybe exceed to 40%. That is what we see with this order.
Understood. So 40% of revenue growth is certain for FY27. So
25 to 40%, 25. So with this visibility of order, we are sure that we are now crossing 25%. And also the the running order is also coming, so we are confident that will touch 40% growth. That's the visibility is now clear.
Okay.
Right before you go to Sejal Glass again, Shriram Finance has come out with its numbers. The profit has come in ahead of the street estimates. Now, estimates were close to 3,135, and the company has reported a profit of close to 3,445 crore rupees. We are still awaiting the other numbers, other key numbers. The total income is flashing on your screen. It's up 16% at around 13,400 crore. But it's the NII number that we need to watch out for when it comes to Shriram Finance, but that will come out with the presentation. But we'll get the calculated NII number. But at this moment, we know that the profit is much ahead of what the street was anticipating, but we still need to watch out for the net interest margin, the net interest income, and the gross stage 3 and the net stage 3 numbers. That would be important to track. But the most important to see would be the NIM, whether net interest margin has declined more than 16 basis points or or not, because Street was going with this net interest margin number of close to 8.45%. So we are still awaiting that number. Net interest margin would be important to track. So far, what we gross NPA has increased slightly on a sequential basis from 4.58. It has increased to 4.64. So a bit of disappointment on the NPA front. But profit is a beat. Total income looks steady. NIM a number is still awaited.
Right. So please keep a watch on Shriram Finance. Moving on, let's bring Sejal Glass in focus again. Sir, talking about the order, I just wanted to understand the projects, the order win that you had. Do these projects carry high margins than company's normal order book?
No, it's not about the high margin, but it's about the high volume. But yes, of course, the EBITDA will have an impact of 1 to 1.5% due to the capacity utilizations. As you are aware that last year we have about 2 acquisitions in India and we were not on the full capacity utilization. So this kind of order will fulfill our capacity. So our fixed cost has an impact on more EBITDA margin.
The other numbers of Shriram Finance have come out. The net interest margin is standing at close to 8,056 crore. Now do remember, this is the calculated number and this is much ahead of what the street was anticipating. NI estimate of analysts was close to 7,300. The number that the company has reported is close to 8,000. Net interest margin again way ahead of what the street was anticipating at around 9.04%. Street was expecting a decline to 8.45, but it has actually expanded on a Q on Q and YY basis. Operating profit has come in 45% higher compared to what it was last year at close to 6,085. PAT I just spoke about earlier. When it comes to net stage 3, it has come in at close to 2.33 as against largely stable compared to last quarter. It's just the gross stage 3 has increased by around 6 basis points on a Q-on-Q basis to 4.64. But on the all other fronts, the number has stood out compared to what the street was anticipating. And you can clearly see that on the share prices. The stock is up nearly 2% in trade. So stellar beat coming in on the net interest income and the net interest margin for Shriram Finance at the moment.
Right, understood. Well, moving on to Sejal Glass also. Sir, just wanted to understand, does the company has enough capacity to execute these orders without fresh capex?
We have in India sufficient capacity, and rather we need more order, so capacity is more. And in UAE, we are investing something, the already fire product and the tempering capacity we are enhancing. The already machinery has been in installation process. So in Q3, we start operating on this additional capacity. And there will be around 15 million additional capex, which is funded with our internal accruals and little bit of around 6 million or 6.5 million through the term loan from the bank.
And sir, also wanted to understand, the order involves IGU, solar control, glazing and laminated safety glass. What share of revenue now comes from value-added products?
See, all the products are the value-added products, and as I told that our fire product will give more value addition, which will start in Q3, and other bulletproof and all will add on to the value. But as I told you earlier also that this current year, there will be a 1 to 1.5% improvement on the EBITDA, and also that will affect our PAT also on the profitability side.
And sir, lastly also wanted to understand, you just gave us a hint when it comes to revenue growth for FY27, but wanted to understand, last time we had a conversation, you were expecting almost 10% of PAT margin FY27, still on track?
We have targeted in that, and we are working on all parameter of improving the efficiency, production efficiency, people cost, power cost, logistic, supply chain cost. So we are confident that there will be an improvement, and maybe we will reach in between 9 to 10%. So whole efforts are going in these directions to improve on the things, and further it will one of the things that increasing the order book position will also contribute to incremental EBITDA and the PAT.
Thank you so much, sir, for joining in and having a conversation with us. Pleasure to have you at NDTV Profit. Thank you so much.
Pleasure meeting you. Thank you.
Thank you. Well, moving on, Shriram Finance, let's, head across to Shivam to give us more details on that, on how were the numbers.
Yes, so Shriram Finance has posted its Q1 FY27 profits, and overall the results are strong for Q1. Starting with the first metric, which is their net interest income, that has seen a growth of around 33.7%. Also, in terms of margins, that has seen a growth of around 43 basis point on quarter basis, and currently it stands at 9.04%. In terms of operating profit to the company has gone up by around 14%, and asset quality, if we take a look at the asset quality, that has remained modest. And in terms of net stage NPA ratio, the company has seen a flat ratio, and gross stage has improved slight a bit, around 6 basis point on quarter basis. In terms of AUM, that has seen a growth of around 15.2%, which is potentially driven by the growth in the CV segment, gold loan segment, and also the mortgage segment. In terms of core operating profit, that has also increased to 5,974 crores. That has also on a good base. And in terms of return on asset too, the company has performed better, and the return on asset currently stands at 3.93% versus the 2.76% on YoY basis. So overall, the numbers for Shriram Finance Q1 FY27 is pretty good.
Much Shivam for all the details, but viewers, this is all the time that we have in this edition of Small Cap Buzzers. Stay tuned. Ask Profit Afternoon edition coming up next.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है, तो वो मधुर और लालन पोषण करने वाली बन जाती है. पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है, शुद्धता और गुणवत्ता के साथ.
The mustard specialist since 1933. बरसों से सरसों.
कुछ तो बात है इस दिल में.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
You come from rural households, have gone out and had great opportunities, great education, and then decided to form this company.
I come from villages in Haryana. I used to play taekwondo. I got India a bronze and a silver.
Wow.
Our ecosystem was such कि अब इसका खेलना कूदना बंद करा दो. जब 9वीं क्लास में गए तो और प्रेशर आने लगा कि यार अब तो लड़की की शादी करा देनी चाहिए. I went to my father. अगर आपने मेरी शादी कराई तो मैं घर से भाग जाऊंगी.
Where did the idea of Rosanna start?
We were working with several state governments, and for that we used to travel a lot to the villages. When I went there, I really stood at that counter. Almost anything I wanted was not available on that counter.
The village that we are talking about is similar to what you see in Panchayat.
Fuleraga.
Absolutely.
So basically, you want to get choice to the equivalent of Fuleraga. What is the most hit product that people really wanted and you didn't expect.
People kept on ordering Maggie, and then we had to start saying no. So we tried to offering them कि पास्ता खाओगे, फोन करके बोला. हमने उनको YouTube वीडियोस भेजे पास्ता कैसे बनाते हैं. In few months, macaroni and penne became one of the highest selling products in the category.
You met, clearly vibed as co-founder.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already done so, do start sending them in on the numbers that are flashing on the top of your screen. Also call us for your stock-related queries. The landline number is again at the same top of the screen space as well. But as we do, we've seen some recovery of the markets in the middle of the day. So pull up the Nifty 50 heat map as well as, of course, the index too, because we touched that 23,600 mark. It's an important support level, and then a 200-point recovery from those lows. Now, we have seen some deceleration in terms of the names like Mahindra and Mahindra, Bajaj Finance, as well as Eternal. All were down roughly between 3 to 4%, have recovered a little bit at least from those lows. While in terms of the gainers, Cipla continues to be one of the biggest gainers for the Nifty 50, but also the breadth of the Nifty 50 has started to increase from roughly just about, I think, 8 to 10 stocks in the green, now closing in on that 20. So you have two bars now, two rows essentially in the green, and we continue to monitor what happens in the crucial last 90 minutes of the trading session, because also pull up the sectoral heat map and you'll know what I'm talking about, because last Friday we had that big move on the index that was led and essentially helped us start at a good note in this week. Today as well, we're seeing a similar trajectory. So the Nifty Media up 1.7%, while the Nifty Auto is right now down 0.9%, seen some buying from the lows but not too much. While apart from that, PSU Banking Index also up 0.6%, so is the Nifty Bank. The advanced decline ratio is the other very, very important factor. Now, you've had almost a 4:1 kind of a day favoring the declines. Right now, though, that you see those convergence now very close, very neck and neck, 1:1 going in for the advances as well as the decline. So essentially they did have that point where they touched, and then yet again you've seen some declines come through. The mid cap, small cap also reflect that kind of day where you've seen some buying from the lows, a very healthy one. Mid cap 150 almost in the green, small cap 2 getting there at this time. But in terms of the individual names, and we've been speaking about a day where it's been about the benchmarks, also highlighting a few names, because Gujarat Ambuja, KPIT Tech, after a really long time seeing some buying from the lows. Gujarat Alkalis has been buzzing through the day, so has been PVR Inox, Apar Industries and United Spirits are some of the other ones. But that continues to be the breadth of the market, seeing of course some decline on Motilal Oswal, Westlife World, Food Worlds, as well as on Balaji Amines. But that is the total market for now. Let's also welcome in those guests who will start answering all your stock related queries. Radharaman Agarwal, Managing Director and CEO of Swom Advisors, and Ruchit Jain, Vice President Technical Research at Motilal Oswal Financial Services. Gentlemen, both of you, thank you for joining in on a very, very important Friday, most certainly for the markets. And let me start taking the first stock related query. It's coming in on RR Kabel. It's a stock that has done well for investors. A viewer wants to know, he's been holding at 2300, so very close to the current market price. But Ruchit, good afternoon. Do you see that this move can continue in the near term? You're seeing some good build up over the last few weeks. What would you recommend?
Hi, very good afternoon. Well, the stock has shown a good relative outperformance within the sector also, and also last 3-4 days when the broader markets have corrected, you have not seen any kind of selling pressure coming in the stock, which is again a good sign. So the 50-day EMA is around 2200, which remains a very strong support. Still that is intact. I think that overall trend remains positive, and we should see an up move towards 2700 soon. So I would advise to continue to hold the position with stop loss below 2200.
Below 2400. Got it. So that's a key one that you're watching out for. Of course, there's a lot of moves coming in on the cables and wire space. Most certainly RR Kabel, one of those beneficiaries of that. Next question. It's on a slightly more smaller name on AGI Greenpack. Pull up the counter, pull up what's the stock done in this year, And Jake, who's from Kochi, wants to actually take a big position, enter for the long term. Radharaman, very good afternoon to you. What would you recommend, on this counter AGI Green Pack? Is it a good long-term bet?
I think you should hold on. You should not enter at the current price. You should wait for some correction to come in. So it's not a good entry point right now.
And what would be a price that you would watch out for in terms of looking at this counter more favorably for the long term?
Around 500, 550 is a good price to enter in this counter.
Okay, got it. 550 odd, got it. The next one also, Radharaman, let me stick with Siemens Energy. This one's again a long-term bet that Dilip from Kolkata wants to know. Entered at 3,200 odd. Should he continue to hold?
I think you should continue to hold on. There are enough tailwinds in the sector. It's better to hold on to the stock.
Got it. The next one, and this one's on ESAF Small Finance Bank. Our viewer Shiju is looking for a short-term view on this counter. Has he's looked at the fundamentals also. The good Q1 loan growth is what he's mentioning. Also seeing some bullish momentum according to him. Ruchir, do you agree? Is it a good bet to enter now for the next 3 to 6 months?
I would avoid the stock because the overall trend has not been positive. Recently, in the month of May, we witnessed a sharp correction followed by consolidation. The pullback moves are not being supported by good volumes as well. So the trend is not positive. So I would advise to avoid.
Also, Ruchir, if you can give a view quickly on the others as well. So Equitas as well as Ujjivan, both of them have seen good Q1 updates. Some moves also visible. I think on Ujjivan, I think a multi-year breakout is what we had seen, I think, comparing to the 2019 level. But is that visible to you as well on both those counters?
Yes, Ujjivan's small finance seems much better placed within the small finance banking space. Also, Jana Small Finance, which recently came out with the numbers, have seen good price volume breakout on the weekly charts. So if one has to choose within the small finance bank, then Ujjivan Small Finance, if we have next 2 to 3 quarters view, then that could really give good returns for me.
Got it. Well, let's go across to Mysuru now, and Mohan, who's a regular viewer of the show, now joining in for a stock query. Mohan, welcome back. Good afternoon. What's your query?
I just bought 5 Sirma SGS Technologies, 5 shares at 1,200. I just want to know, can I add these shares for long-term perspective?
Okay, got it. From the long-term perspective, understood. Radharaman, this counter, Sirma SGS, done very well for investors in the EMS space. Should Mohan continue to hold at 1,200?
I think you can hold and maybe further add to the position. So in medium to long run, the stock should do well. So effectively, it's better to add at the current levels as well.
The valuations currently not too slightly on the higher side compared to historical average. So where is that confidence coming from, Radharaman?
The confidence is more in terms of the tailwind and then the prospects which are moving forward. So I think that is the place where we would like to maybe push in terms of additions at this, even at the current levels as well.
Got that view. So good indications there is what Radharaman is saying. But the next one, and this one's on Fractal, a stock which came out with earnings slightly weaker set of numbers for the company in this quarter. But Mr. Raghavan wants to know wants to make a fresh investment in this. So below that IPO mark also now. Actually, Ruchir, he's mentioned that he wants a technical view, but it's a very, very recent listing. So I don't know if you have a very good view of this, but what would you recommend Mr. Raghavan to do?
Well, as of now, post-listing, the stock had seen a good up move in the start of May. But then it has been forming that low top, low bottom structure, which is not a good sign. So limited data, but whatever data is there, the near-term structure is not that positive. So I would recommend to take an exit if it's a short-term trade.
Got it. The next one, and viewers, you can also call us for a stock-related query, just like Mohan did. But the next one's on the power space. A few smaller names actually. By a viewer, he's mentioning about KP Energy, Oriana Power, as well as the other listed renewable EPC space. Now, they've seen some correction. Radharaman wants to know if these are, a good time to add. I think, we've also seen plays like Vari, and I think the recent news flow that the ALM has been deferred to December. Anything that you like in this space and something that you'll want to put your bet on?
So I would like to maybe speak to the larger ones like a Tata Power rather than maybe speaking to smaller ones. So the piece should be more in terms of getting to the larger space in the power side. So Tata Power looks quite interesting at the current valuations.
Anything that you like in the panel space, the solar space, the likes of Vari, the likes of Premier Energies, anything on those lines too?
So I think I'll hold on in terms of rather than who buying them. So I'll hold on not to buy right now.
Not to buy right now. Okay, got that view. The next question, and this one we've not discussed for a while. It's on Vodafone Idea. We've seen a lot of technical queries on Cupid, MTAR, Techs of the world. Ram Iyer still holding on to 5,000 shares of Vodafone Idea at 10.87. Wants to know if it's a good time to still hold on to this bet, or maybe look at something else, book profits right now. Ruchit, after a while I'm asking you this question, but what's your opinion on Vodafone Idea now?
Technically, if we see on the weekly charts, the major support is around 12.60, 12.70. So I would advise to take a chance and hold on at current levels, but keep a stop loss, not much, but just below 12.50 levels. If that gets breached, then take it as a revised stop loss and exit a position. So 12.50 should be the stop loss on existing long positions.
12.50, got it. Next one that's coming in, and it's from Jay Krishnan, and we're going through queries, spick and span, fast as always. So just, do send in before we start the rapid fire round as well for a more detailed view. This one's from Jay Krishnan, who's from Kerala, a regular viewer again, on Vari Energies. I think we just spoke about it, but he wants a short-term view now. Ruchit, he's bought at 3260, wants to know if he should still continue to hold this. Is it a good time to average? Or second part of the question being, if he can sell out and buy VA Tech Wabag, should he do either of those trades?
I think exiting this and entering VA Tech Wabag seems a good idea for now technically, because overall if you look at the trend and Vari Energy, at least it has been forming low top low bottom structure, so the trend is negative. Whereas on the other side, VA Tech Wabag has recently seen a breakout with good volume, so relatively that can do well. So it makes sense to exit from there and invest in VA Tech.
Very interesting. And Jay Krishnan, there's something that you've spotted there, because Ruchit doesn't give his approval just like that. So that's a good trade and something that you can do according to Ruchit as well. The next one, and we spoke a little bit about the power space. CG Power is the other one, an ancillary winner in that sense. Mr. Rao has actually bought these shares at 750 odd. So still currently in decent profits, holding on to 1,000 odd shares. What would you recommend here, Radharaman? Just given the buying price as well, should he continue to hold, as well as how did you see the new move of these Chinese players being allowed in the space within who are manufacturing in India? I think that was one of the kickers for these all of these names, Hitachi Energies of the world. Should he continue to hold at the current price?
I think he should continue holding it. He should not add further the current levels, but the current position he should be holding on for a medium-term perspective.
Got that view. Next one's from Rakshit, who's holding on to Apar Industries, and this one's at 14,000 rupees. He wants to know if he should still continue to hold his 50 odd shares. So it's a very recent buy that he's got. A good rebound today, I think, from the middle of the day. Ruchit, should he continue to hold?
Yes, should continue to hold. Overall, we have seen a correction, but no volume-wise selling was there over there. And 13,000 is a good support for the stock. So downside seems to be limited from here.
Okay, got that view, Ruchit. But the next one, and this one continues to be on HDFC Bank, and I think we've been getting a lot more queries on this one. He wants, our viewers holding 800 shares at roughly around 900 rupees, and this is Siva, sitting on a loss of almost 1 lakh rupees. Radharaman, would you recommend he should still continue to hold on to this one? How are you seeing the broader story on HDFC Bank? Because we're still awaiting a CEO appointment that could come through, but numbers were largely weaker in this quarter.
So I think one can switch to an ICICI Bank because if you look at, they have been very consistent in terms of the numbers and the governance piece as well. So my thing will be that we maybe look from a switch from an HDFC to an ICICI.
But so would you recommend booking losses of almost 1.2 lakh rupees on this counter now, Radharaman? Is that the recommendation?
So he can maybe wait for some time, maybe when the stock improves a bit, then he can do a switch. But eventually, that switch might help him in terms of medium to long run.
Okay, got that view. But it's been a pain point for a lot of investors at this point of time. But something to watch out for. Raja, who's from Chennai, wants to enter JSW Energy or Varun Beverages, one of those two. Ruchit, either of those that's good for entering right now?
Comparatively, JSW Energy seems better. Varun Beverages have recently breached all its important moving average supports in the recent correction, whereas JSW Energy is still holding its important supports of 500 to 530. So, although the near-term trend for JSW Energy still remains sideways, but if you are looking more from a mid-term perspective, then you can go long on JSW Energy.
Okay, got it. Let's take another caller now. This one's from Bengaluru. Satish has a stock query for us. Satish, very good afternoon. What's your query?
Sir, I want to purchase Shriram Finance. Current market price it is for short-term purpose.
Okay, so you want to purchase it for the short term?
Yeah.
Okay, got it. Ruchit, I think I think you've spoken to us about playing those names which comes on results, and it's something that you don't like. I think is that policy still intact? Results actually just came out 15 minutes back. What's your opinion?
Yes, post-result reactions are always important to see whether the results are good or bad. Many times we see that even on good numbers, the stock takes a hit from high levels if the pre-positioning is very high. So overall, Shriram Finance technically seems to be locked within the range for the short term. 1080 is the immediate resistance for the stock. So until we see a breakout above 1070, 1080, do not expect any significant trended phase to come in. So I think if you're looking just from a short-term perspective, I would tend to avoid taking positions right now. Wait for Monday's follow-up move. If there is a good buying and the resistance is broken, then you can look to enter longs.
And that's exactly, as Ruchit mentioned, you've seen the numbers come through. There was a reaction on the upside. Now seeing some deceleration. So that volatility is something that Ruchit is talking about. But let's start the rapid fire round now. Radharaman and Ruchit, you know the drill. First questions on JSW Infra. Vicky is holding shares at 262. Wants to know how, what could be a potential target for the long term here, Radharaman. What are you looking at?
You can add from the current levels also.
Add from the current levels. And what's the target that maybe for the next 12 to 18 months that we can expect?
It should cross 400 rupees. So I'm more looking at more from a medium-term perspective.
Medium-term perspective. Got it. Radha Krishnan is the other person who's asked a query on Swiggy. He wants to actually buy it for the short term for the next 6 months. Again, very volatile counter here. Ruchit, how are you looking at it?
Volatility and a relative underperformance. So I would advise to avoid.
Avoid. Got it. Next one's from Bharat from Hyderabad. Wants to know short-term strategy on Epigral. Ruchit, anything that you can recommend on the charts?
Wait for a breakout about 1250. Above that, you can create fresh ones.
Got it. Between PNB, Canara Bank and Bank of Maharashtra, what's a better pick, Radharaman, for the next 5 years is the question from Suman.
Within the three, Bank of Maharashtra plays quite good.
Next one on Skipper, Sunita has bought these shares at 375, Ruchit. Wants to know about 150 shares if she should still continue to hold.
Can continue to hold at current levels. The review on pullback moves towards 580.
580, got it. Next one's on Railtel as well. Afreen is holding shares at 347, Ruchit. Asking actually if she should still add anything average down, or should she just wait for the trend to become better is a question.
Wait for the trend to become better. It's an underperformer, so don't average.
Don't average, got it. On Reddington, Tajuddin is holding shares at 279, holding 100 shares. What is the target that he can, and asking if he should still continue to hold essentially, Radharaman, what's your view?
I think an exit can maybe look for other better opportunities.
Okay, other better opportunities, got it. Next one's on NLC. Our viewer Murli Ram is holding shares at 320. Asking if he should still continue to hold an average down. Radharaman, he's sitting on some losses right now. What would you recommend?
I would say not to average, but to hold on the current positions.
Okay. Also on Vedanta Oil and Gas, our viewer Bindu is holding shares at 45, holding almost 1,000 shares. Continue to hold, Radharaman, this one as well?
I think we can hold, but don't average it out. So don't add on the current levels.
Okay. On PNG Health and Hygiene as well, Kumar, who's from Kerala, wants to know if it's a good buy right now. Let's look at the longer term chart because he's mentioning that stock has fallen considerably out of favor. So let's look at the 1 year chart as well very quickly if we can. Wants to know if it's a good bet right now to enter. It's seen a correction, then some buying. Radharaman, anything that you like in this particular counter?
Look at additions at the current levels.
Okay. That was the last question on the rapid fire as well as this edition of the show. If you can get the number of queries as well, because we solved quite a bit in this show. But Radharaman as well as Ruchir, thank you so much for helping us solve so many queries in the last half an hour. Appreciate your time as well as your inputs today.
Thank you.
Well, with that, wrap on this edition of the show. Thank you so much for watching. India Market Close comes up next, and have a happy weekend.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
At NDTV Profit, every day is a new day, buzzing with news, information, analysis. A lot of it. That is why we separate the news that is urgent and important for you from what is not. News that influences outcomes across markets, policy, and the corridors of power. At 6 p.m., we turn our attention to the critical conversations that matter. I'm Vikram Oza, bringing you the big question, Monday to Thursday at 6 p.m.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
You come from rural households, have gone out and had great opportunities, great education, and then decided to form this company.
I come from villages in Haryana. I used to play taekwondo. I got India a bronze and a silver.
Wow.
Our ecosystem was such कि अब इसका खेलना कूदना बंद करा दो। जब 9वीं क्लास में गए तो और प्रेशर आने लगा कि यार अब तो लड़की की शादी करा देनी चाहिए। I went to my father, अगर आपने मेरी शादी कराई तो मैं घर से भाग जाऊंगी।
Where did the idea of Rosanna start?
We were working with the several state governments, and for that we used to travel a lot to the villages. When I went there, I really stood at that counter. Almost anything I wanted was not available on that counter.
The village that we are talking about is similar to what you see in Panchayat. Fuleraga. Absolutely.
So basically, you want to get choice to the equivalent of Fuleraga. What is the most hit product that people really wanted and you didn't expect?
People kept on ordering Maggie, and then we had to start saying no. So we tried to offering them कि पास्ता खाओगे? फोन करके बोला। हमने उनको YouTube वीडियोस भेजे पास्ता कैसे बनाते हैं। In few months, macaroni and penne became one of the highest selling products in the category.
You met, clearly vibed as co-founders, and then I think a year ago have gotten married as well.
We spent so much time together. It would have been very tough for anyone else to survive with us.
I thought there was very little scope in terms of us looking outside for marriage. Business was the romance.
Hi, thanks so much for joining in. We're coming to you live from the NDTV Profit Suzlon studio. My name is Alex Matthew. With me is Mahima Vachajani, and this is India Market Close. We've come off the low point of the day, but we're still trading with cuts. Actually come off significantly from the low point of the day. In fact, it's not just the benchmark Nifty 50, it is also the broader market. So before we delve into the Nifty 50 and the heat map therein, let's take a look at the broader markets as well, because the mid cap and the small cap index have actually come off even more, and this is actually surprising, because if you think about it, the macro situation hasn't improved between yesterday and today. If anything, the signs are worse. Pull up crude oil and you will see what I'm talking about. Brent crude, Mahima, is above $100 to the barrel.
Absolutely, and I think, but you know, we've seen this earlier as well, right? That Indian markets have shown that resilience.
No, it's cooled off just a tad.
It's cooled off, but we've seen resilience earlier as well, and today I think also we're making a comeback at least. Probably traders don't want weekend to go in a bad mood, and probably we're seeing that bounce back coming in all indices. So Nifty 50 will also be a good one to watch out for the heat map, because stock specific reactions are also there, right? Morning we saw more red on the screen. Now we have of course more green there, with IT pack leading. You have HCL Tech, Wipro topping that chart. Cipla has recovered from yesterday. ITC is also up by about 1%, and on the flip side you have something like a Bajaj Finance, of course, which continues to be under pressure. Autopack, which was up yesterday, is seeing profit booking coming in. Tata Consumer has reversed in trade today itself. We're expecting the numbers today mostly post market hours, but it's down by about 2%. Eternal on the back of that Flipkart announcement entering into the food delivery space, probably that's the pressure we're seeing on Eternal coming in. But Indigo continues to be under pressure on the back of numbers, and you have Bharti Airtel, which is also
in terms of weightage, I would think that Bharti Airtel is causing quite a bit of damage,
yes,
right?
Correct.
With cuts of about 2%, because the other heavyweights are not really losing too much. Shriram Finance, not the heaviest weight, right? HDFC Bank has come off the low point of the day, and so therefore points contribution is going to be interesting to see. I won't be surprised if Bharti Airtel is right on top. There you go. So it's 25 points and the biggest contributor on the downside. You don't see HDFC Bank in this list, whereas through the week you've actually seen HDFC Bank feature very prominently in either the top or the second position in terms of the drags for the benchmark Nifty 50. Reliance Industries for once this week also contributing to the upside. By the way, pull up the chart for Reliance Industries and HDFC Bank, because it was pointed out by the technical analyst this morning that there is significant support. So this is Reliance Industries. There is significant support that is coming through, because it's moving to the long period averages, or rather whatever the levels that you would look at. This is where a significant support is being seen, as a result of which you're seeing a bounce. Similar with HDFC Bank, both of those heavyweights reaching levels where they were expected to bounce back from, and that indeed has taken place.
Yeah, but that 745 for HDFC is definitely a crucial one. We'll have to see whether it bounces back from here or not, and whether it's found its bottom or not. I think the sector heat map is also an interesting one to watch out for, because things have changed. Realty has come back into action. Of course, IT, we talked about this as to how it's up by about 0.4%. Realty now again back in the red. Just a while ago, it was one of the top, not just the gainers, but significantly recovered from the low point. You also have banks, of course, led by private banks. FMCG slightly in the green, but not making much of a mark. But on the flip side, you have auto, which is seeing profit taking coming in. You have Nifty Energy, Nifty Pharma, which continues to be under pressure, and Realty is back in the red. So still in the red, but I think the recovery has been significant one for the Nifty Realty. The BSE 500 also, because yet another day where we're seeing earnings specific action coming in, and of course news flow specific one coming in. Westlife, this I think because of Sapphire announcing their earnings, it's down by about 5.8%, but yesterday also it was down. There's profit booking in HFCL as well, a significant momentum it's seen. You also have Route Mobile down 4% on the back of numbers again. But on the flip side, you have PVR Inox, which is picked up today. Yesterday it did not react much to the earnings, but it's picked up today. Gujarat Alkalis has done very well this quarter, up 5.6%. You also have something like a Jindal, which is also doing very well.
Yeah, so quite a few of them. Let's talk about what's panning out in the markets right now. In fact, let's bring on Lancelot Dicuna just to talk about some of these aspects. Lancelot, good afternoon to you, and thanks so much for joining us on India Market Close. Question is, you're seeing buying at lower levels, and this is a little surprising in a sense, because the macro situation, the external situation is looking bleak, particularly for a country like India. When you're talking about crude at very close to $100 to the barrel, what do you think is leading to the buying? Because particularly at the broader level, at the broader end of the market, while you've seen a little bit of a cool off from the tops, we're still elevated, aren't we?
Yes, Alex, I think if you look at the valuations, we are still a little bit elevated. However, if you've noticed over the past 3 months, despite the fact that we got into a very difficult situation when this war commenced, the SIP flows and the flows into equity markets from the domestic investor has remained fairly strong. We're also seeing that in terms of the flows to IPOs, we've seen a couple of large IPOs come in, and there are a few more slated for the rest of this year or the next couple of months. So from a fund flows perspective into the market, there is a lot of money that's coming in, and that is probably attracting a lot of these stocks at lower levels, and hence the valuation seems to be a little bit on the higher side, and it's mainly because of the flows that are coming in.
Let's pull up CG Power, because chances are that it's reacting negatively to numbers. I believe that on several metrics it has missed estimates, at least from what I can see in the first check on what things are looking like. Pull up the chart if we can. CG Power is the stock that I'm talking about there. It's come off quite substantially. From what I can see, and we'll verify these numbers in just a bit for you and bring that up. In fact, we should pull up the net profit if we possibly can, because the EBITDA certainly seems to have missed estimates. I believe it was expected to come through at about 472 crore rupees, but it has in fact come in at 397 crore rupees. The PAT number was just flashing on your screen. The revenue uptick of as much as 14% at 3,281 crore rupees. So it is an improvement versus the year ago. So there you go. The EBITDA coming in at 397. I believe the expectation was closer to 470 crore rupees. The EBITDA margin coming at 12.1% compared with consensus estimates that it pegged it close to 13.5%. So it seems like there is a miss on multiple fronts. Let's go across to Parth, because I believe that he's looked at the numbers across the board. Parth, there seems to be a miss. What, in your opinion, based on the first analysis that you've done on this stock and the earnings, has resulted in this?
You're absolutely right, Alex. EBITDA has seen, the reported EBITDA has seen was below 15% of versus the estimates. And before we move on deeply into the numbers, let's look at the segment-wise numbers as well. If we talk about the power systems revenue, it saw a growth of 30% year-on-year versus an estimated of 51% year-on-year. The industrial segment also saw a slowdown, seeing a growth of just 5.7% versus estimates of 8% year-on-year. About their OSAT commissioning, about their OSAT facility, it has commenced, and their greenfield facility has also commissioned 1 year advance of their timeline. But moving on to the numbers as well, revenue was at 3,280 crores versus expectations of around 3,500 crores. EBITDA, as we saw that it has come out below 15% below the expectations. EBITDA margins also were at just 12% versus estimates of 13%, and also profit was below expectations at 310 crores. Now moving on to the factors that have impacted, the main reason was that of copper prices, because they have increased 42% versus the same quarter in the last year, and that is what has pressured margins for the company. Also the short cycle LT business has remained competitive for them, and that has impacted both the margins and profits as well, and this has been particularly visible in the industrial segment. So the key things to watch going forward will be number one, management commentary on the order inflows, and also the margin outlook that will be given by the company amidst the elevated copper prices.
Got it.
Okay, got it. Parth, thank you so much for getting us that first cut. I think important one is the industrial segment that he talked about. Because of copper prices, the profits have significantly gone down for the industrial segment on year-on-year basis, and that's why we've seen that margin impact coming in, because versus the estimates, the margins and the EBITDA number is significantly down. So Lancelot, I'll quickly come to you. If you've had the chance to take a look at CG Power, any view on this one? Because the expectation of the street was that the numbers are going to be good this time, but the stock is taking a hit right now.
Yeah, I think the the drop in the EBITDA was an issue because it means that margins are getting a little bit stretched. And so if you look at valuations, it is a little bit stretched. It trades at almost 119 times earnings. So that is an expensive valuation. And so, given that, if there's any negative quarter, you may see some serious re-rating on the downside. It doesn't really justify on a risk-reward basis.
Okay, Kunal Shah of Mira Asset Sher Khan joining us right now. Kunal, thanks so much for taking the time as always, and good afternoon to you. First, your view on the index and specifically on the heavyweights. HDFC Bank, Reliance Industries, they seem to have caught significant support and they've bounced back from those low levels, providing a little bit of support and recovery for the benchmark.
Good afternoon, Alex. Good afternoon to everyone. See, I think overall what we have seen because of the crude prices, market saw a gap down. Now, if you look at Nifty index, the low that we had made around the mark of 22,200, there is on the technical charts, there has been a rising trend line, and the support exactly comes at today's low, which is around the zone of 23,600. So this is a very critical level. If we are able to hold this level next week, we'll see that the uptrend is still intact on a larger term perspective, and eventually once we break above back again about 24,200, you will see the momentum continuing on the higher end. So I think too early to call this as a bottom. We need further confirmation for this around the mark of 24,200, but first signs we have halted here. Now it all depends on the crude price, how it moves, and probably then you can see some momentum coming back. Now the weakness has been for the Bank Nifty index. So Bank Nifty index has seen a drag down. 57,000 was the support that was also breached in today's trading session. We have again come back, recovered smartly. Now on the lower end, the next support is placed at 55,600, 700 zone, which is a gap area on the downside. So today is going to be the weekly close even for the Bank Nifty index as well. And we are hovering somewhere around the 20 weekly and the 40 weekly moving average. So I think these are very critical support zone for both the Nifty and the Bank Nifty index. If we are able to hold this level next week, then we will see the momentum coming back, or else the slide down continues. And if Nifty breaches 23,600 on the downside, the next level is 23,300 for the Nifty index.
Okay, and therefore in this context, are you suggesting that there are individual names that you can get into for trades, Kunal, or would you much rather be cautious? Because quite a bit can happen over a weekend and change the tone and tenor on the positive or on the negative side.
Yeah, I think definitely. But we'll look at the relative strength counter, where even if the market has corrected in the last 3 to 4 trading sessions, where we are seeing relative strength and where is the risk to reward ratio favorable. So here the first counter which I'm liking here is on the technical charts is Wipro. So I think after a long time, IT looks to be seeing selling exhaustion at the lower levels, specifically Wipro. It has seen a good consolidation around these mark, and today we have again seen a breakout above the 20 and the 40 averages, which is the positive sign. And again, we can expect this momentum to continue in the coming week. So Wipro is a buy for me at the current levels with a stop loss of 173, looking for targets of 183 to 185 on the upside. So Wipro is my first pick on the buy side. Second pick, where I think again the buying momentum could resume, where we have seen defense as a space has been consolidating, or from the higher levels we have seen some corrective moves. But HAL has already given us a breakout a couple of days back, and now again it is starting to show some momentum as well. So I think here we could see further upside in the coming week. So HAL is a buy for me. 45.83 is where it is currently trading. One can go long at the current levels with a stop loss of 44.80, looking for targets of 4700 to 4750 on the upside.
Okay, all right. So HAL and Wipro. Wipro is an interesting one to watch out for because. Okay, all right. So HAL and Wipro. Wipro is an interesting one to watch out for because a lot of people have said and have gone ahead and said that IT could be the next dark horse, and that's what we are picking up now from the trends that both our technical and fundamental analysts have been giving. And HAL is the other one which has seen a long consolidation, and now probably some up move could be expected. But let's talk about our stock of the day. Motilal Oswal is the one that we've chosen. The stock, of course, is under pressure despite of reporting a good Q1 performance, and Shivam joins us now to decode as to what's the reason behind this downfall of Motilal Oswal.
Yeah, so Motilal Oswal Financial Services has seen a 29% growth in total income, and also in terms of profitability, it has seen a turnaround. But still, the stock is under significant pressure. And looking at the key reasons, so why is that? So first one is the performance in asset management and wealth business segments. So that has remained below the street estimates. In terms of inflows to the asset management, inflows has declined around 31% on quarter-on-quarter basis, and this is due to the customers' redemption of invested amount in the alternative investment segment, and also a slower private equity and real estate fundraising. In terms of wealth management inflows, that has also declined by 46%, which reflects a slowdown in this business segments. And in terms of revenue from the private wealth management, that too has declined around 2% on YOY basis, and this was due to the weaker transaction income. In terms of mutual fund inflows, yields too, that has moderated to 45 basis point comparison to 46 basis point in last quarter. So these were the main reasons why the stock is under pressure. Looking at the key highlights from the con call, the management has said that they are expecting a increased share of asset and private wealth management business. In terms of housing finance business, that has recorded a significant growth of around 40% on YY basis, but still the growth was below the street estimates in terms of housing finance too. The borrowing cost has targeted at around 15 to 20 basis points. So the growth was below the street estimates in terms of housing finance too. The borrowing cost has targeted at around 15 to 20 basis points over the next 12 to 18 months. And in terms of capital market segment, that is also expected to see a overall growth for FY27. In terms of valuations, the company's 1 year forward valuation stands at around 3.04 times of the book, but on the 5 year average, it is at 5.7 times %. So overall, the valuations look reasonably, and this was the main reasons why the stock has under pressure.
Okay, all right, Shivam. Thank you so much for getting us those details on MOSL. Let's I'll quickly come to you. If not this particular one, anything in the space that you're liking in particular?
So I think the technology space is a difficult space to pick up, stocks. So, and the financial services, I think one has to look at, some things that are more sustainable and valuations are a little bit on the lower side. So I think maybe, Angel one at the moment looks a little more attractive in terms of valuation. And that can be something that can be looked at. But otherwise, Motilal also has come out with good numbers. And if one has a little longer term horizon, the valuations will, over a period of time, justify the growth.
What do you think of, while we're on the subject of wealth brokers and wealth managers by extension, what do you think of the AMCs that reported numbers earlier in the week? Something like a Nippon, a Life AMC, a UTI AMC. They both had, I think they had mark-to-market gains, which essentially bolstered their numbers in the quarter because you saw bond yields fall quite dramatically in the first quarter, didn't you? Once some of that initial pressure dissipated a little bit. So they benefited from that. What do you think of both of those two?
So I think, from a shorter term perspective, they did benefit, and we did see a pop in the price, after the results were announced. But I think one has to look at this business more as a 3 to 5 year, over a 3 to 5 year business. And with the kind of participation that is being seen increasingly in the capital markets or in capital market linked products, I think you are going to see future growth also be positive. On the flip side, we have seen that in the results that came out, the costs have also risen. While incomes have gone up, costs have also risen, and therefore, there's not a significant increase in the margins per se. And over a period of time, I think the focus will switch from the growing revenues to actually focusing on reducing costs, because at some point in time, revenues will begin to plateau, and then the cost emphasis will become more attractive. And those companies which have a lower cost base will be benefited more than those which have a higher cost base.
Okay, all right. That's the view coming in, of course, on Angel One. But let's try to look at Greenply now, because it, of course, came out with its earnings. It was a good set of number. Overall revenue saw an uptick of 20% odd. Even PAT saw a growth of 32% odd. But remember, this was the quarter which was also impacted by supply chain disruption for raw material that Greenply uses. Now, to understand as to how the quarter has gone by, how things are going to shape up going forward in FY27, we are now joined by Sanidhya Mittal, who's the joint MD of Greenply Industries, joining us now. Mr. Mittal, thank you so much for taking out the time. Mahima this side. My first question is with regards to the plywood margins, because overall the margin uptake that you've seen in this one could be on account of one, the improvement in mix, and two, also on account of maybe the price hikes that you've taken. Just want to get a sense in terms of how structural this margin change is, and going forward for FY27, how do you peg the blended margins to be at?
I think this change that is here to stay, and yes, we have passed on the price increase that happened due to the West Asia war in Q1. And I think going forward also the margin profile should improve from here, because the guidance that we've given to the stock market is that we are going to operate at about 10% EBITDA on the plywood business. That's the goal for this year, and anything between 16 and 17% for the MDF industry. So I think we've met our numbers in almost all segments. We've somehow not met the numbers in the plywood segment, because in terms of margin, I think we're going to meet that once the overall revenue, we start getting economies of scale in the overall revenue. We'll start hitting the plywood, the guide numbers as well.
Okay. Sanidhya, afternoon, Alex here. So I'm just wondering about the plywood volumes, right? Apparently your volumes are growing faster than industry. Why do you think that is, one? And two, what are the implications for the mix in the remainder of the financial year if that continues?
I think the mix will be pretty much the same. And our growth definitely is better than the industry at this moment, because also if you see Q1 last year, I think the base was very low. So on that base, I think this percentage was easily achievable. But when you look at Q4, I don't think we've done the equivalent number. And that was a lot of reasons. We could not source enough material. Our overall utilizations in the plant were low because, plywood is an industry which is very labor intensive. And because of elections in Q1, I think April and May, there were quite a few disruptions across our facilities.
Understood. I'm just trying to understand the landscape as well, Sanidhya, and how much pricing ability you currently have. If you can describe the market share in the areas that you operate.
In the plywood business, I think we operate pretty much pan-India, and I think the market share for any organized player, even though we call ourselves the number one player in the country, I think is very, very low. The unorganized segment is huge. And I think there's finally, we can sense some shift. And we are very gung-ho about this category. And we are seriously going to build a lot of capacity. We already have one capacity under construction in the plywood business. We are planning a couple of more capacities, which we're going to announce in the corresponding quarters.
Can you spell that out a little bit, and what is the kind of spend that you've lined up for these additional properties, and they'll come through? So first of all, the current capacity that you're building, when does that come on stream? And two, when do you anticipate that you will add the additional capacity?
So I think almost every year going forward, we'll be adding one capacity to the plywood business. So this year, already by the end of the financial year, we'll have the Odisha facility up and running. And next year, we'll be doubling the capacity at Lucknow, Sandila. So we already have a facility there. We are going to double the capacity next financial year over there. And the year post that also, it looks like, we'll have to do it. The reason for this is that we see a great runway ahead for growth. Also, we are kind of shifting our revenue mix from more self-manufactured than outsourced, because in times of crisis, the outsourced partners are not being able to cope up. For example, Q1, we could have done a much better number if the outsource gave us the entire capacity which we got in Q4, for instance.
Okay, Mr. Mittal, all of this that you're talking about in terms of capacity addition, right? What is the kind of capex that you're planning throughout the next phase of expansion, and how will that expansion be funded? Is it going to be via debt, equity, anything of that sort in the plan?
Yeah, so I think typically it will be a mix of internal accruals and debt. So 30-35% is what we typically target to invest on our own, which is from internal accruals, and the balance is debt funded. And the plywood business overall, I think the capex numbers are not very crazy. I think it's 125 crores. We keep adding a 60,000 NA capacity, and this 60,000 NA is a per day kind of a number that we produce. So I think anything between 125 crores, typically we'll keep adding, a new factory in plywood almost every year going forward for the next 2 to 3 years.
And with regards to the volume expansion that you've mentioned about in this quarter, can you give us the bifurcation in terms of your top line as to how much of that was driven by volumes and how much of that was driven by pricing? Because from what my understanding is that because of the West Asia crisis, a lot of it would have been driven by price hikes that you've transferred to your consumer.
No, so if I talk about the India plywood business, I think the volume growth that we saw in India plywood business was 13.8% year on year.
Okay.
And the realization growth was about 3.8%.
Okay. What is the kind of split right now at this moment, Sanidhya, with MDF and plywood?
So the total revenue amongst the consolidated for MDF and plywood. So I think the total revenue was 724.9 crores, out of which about 196 crores came from MDF, and the balance 528 odd crores came from plywood.
And you're saying that this rough split is going to continue through this year at the very least, right?
So I think both businesses, we have a clear growth strategy. In MDF, I think we'll max out the current installed capacity this financial year. And we are already building a new facility which should get completed somewhere in the middle of next financial year. So, once that is ready, then we can almost look at a 70-80% growth from here in MDF as well.
Okay.
Once the second facility for MDF is up and running.
Okay, and just a last point, Sanidhya, trying to understand, you're aiming margins of what, 10% you said for plywood, and so do you anticipate you will achieve that in the second quarter, and if so, what are the kind of blended margins that you anticipate?
I think the guidance we've given, annualized guidance to the investors, is that we would operate at about 10% EBITDA in the plywood business and anything between 16 and 17% in the MDF business. So I think blended should further go up, maybe 11.25, 11.5%. Something like that should be the blended EBITDA going forward.
Got it. Absolute pleasure speaking with you, Sanidhya, and look forward to the next chat as well. Wish you all the best in FY27.
Thank you so much. Thank you for calling me on the show. Thank you.
Our pleasure. All right, well, numbers on the screen. It's fast-paced this afternoon, isn't it? Numbers left, right and center. At the bottom of your screen is where the news breaks first. You're seeing Laurus Labs, the net profit coming in at 368 crore rupees compared with 163 crore rupees. A pretty substantial jump. We'll have to look at the consensus estimates to see where it was pegged, but it seems like the stock is reacting positively. Revenue uptick of 29% or thereabouts, 2,026 crore rupees. There you go. The stock is rising as things stand right now, and let's in fact talk about some of those numbers in some more detail. In fact, let's pull up the latest on Laurus Labs. Let's bring those numbers back just to talk about it. I wonder where the EBITDA number stands. The EBITDA is up as much as 67%, 638 crore rupees versus 380 crore rupees as well. So it seems like a very good set of numbers for Laurus.
Yeah. I mean, if you take a look at the estimates versus the estimates also, I think it's beaten.
Oh, it's a significant beat.
Significant beat. And of course, there's a one-off tax expense that's being flashed around 119 odd crores versus that of 63 odd crores. But that's not, impacted the bottom line performance overall. So it's
I don't know the number
that
you're looking at. 370 crore rupees has come through for the PAT number, if I'm not mistaken. No. 370 crore rupees, and that compares with an estimate of 270 crore rupees.
Correct.
Right, or thereabouts, very close to that. So it's a 100 crore beat on the bottom line. Lancelot, if you've tracked this stock, Laurus Lab, a very good set of numbers coming through, reflected in the stock price at the high point of the day and climbing. What do you make of it?
So I think Laurus's business model is very good because they are one of the leading players in the active pharmaceutical ingredients, which is the API especially in oncology and which goes into cardiovascular as well as others. So if you look at the the results, they're really good. You've seen good growth both on the sales side, profit margin side, and I think they've been able to maintain their margins, it looks like, and also improve it over the years. So maybe it'll be interesting to see the commentary as to what the management says on the situation going forward, especially in the light of the tariffs that are being put in on the US markets. So that would be something to watch out on the from the call. But I think yes, it is an interesting story.
Certainly, and look at the margin performance, right? And look at the absolute expansion in the margins. 31.8% compared to 24.35%. I'm actually quite surprised. Very good set of numbers coming.
Yeah, and it is largely driven by the top line expansion because costs eventually have gone up. It's not like there's operating leverage playing its part, but it's purely top line that's being translated into your EBITDA margins as well as, of course, the bottom line. So that's an interesting aspect to watch out for. But of course, barring that tax expense, all other expenses have for example, cost of raw material has gone up, but that's in tandem with how the top line has moved. It's not impacted much in terms of where the margins go. But overall, we're seeing that spike coming in the counter. Kunal, any view on the charts for Laurus Labs? Do you think it could be a good bet to kind of enter into right now, continue to hold over the weekend?
I think overall, what we have seen, market has discounted a lot of things. The stock definitely has been trading in a strong uptrend. So if anybody is holding, continue to hold with trailing stop losses. Fresh entry if somebody is making, I think the 20 weekly moving average or the 20 daily moving average is placed at 1530. So one can buy with that as a stop loss and look for targets of 1630, 1650 on the upside.
Let's go across to Varsha because I'm very curious, Varsha. What has led to the beat on the bottom line? The margins have expanded very substantially on a year-on-year basis, and even on a sequential basis, I believe the comparable was 28%. It's coming at above 31%, 31.5%, and a beat of close to 110 crore rupees on the PAT versus estimates.
Yes, absolutely, and a very good set of numbers, I would say. Have beat the expectations, and though the press release is not out yet, but the margins which were expected at around 27% came out to at around 31%, 31.5%. Now in last con call the management said that they'll maintain the Q4 margins, but they have outsized it, which is a very good thing. Now the one major thing is that the 3 billion tablet contract was expected to contribute meaningfully in Q1. I think that's also one of the reasons why we are seeing a good set of numbers, and that ARV business was actually running at the full utilization, and management was expecting to continue that the Q4 run rate that they did. That is also one of the things where the numbers might be good. We are actually waiting for the press release, and also the CDMO. You also might want to consider the CDMO business because they do have a target to take the contribution to 50% by FY30. So that's a huge growth that they are expecting. Also, the commercial molecules continue to ramp up for the company. There's no customer destocking, at least in the Q4 that they've seen, and the new programs are actually moving faster when it comes to Laurus Lab. The CDMO growth could actually surprise the investors, I would say. And one more thing is the inventory gain, which is a notable item in Q1. There was a changes in inventory of around 64 crore versus 0.6 crore in Q1 FY26. This means large inventory was released, sold, and created a favorable profit and loss impact. So overall, a great set of numbers, ARV business, CDMO business, and the 3 billion revenue in Q1, which was expected to contribute meaningfully. These might be some of the reasons why we are seeing a good set of numbers.
Okay, so that's the first cut. Varsha, thanks so much for joining us and getting us that view. Of course, you're going to get through the numbers in more detail, I'm sure, and you'll get more clarity once the call happens and we get more data from the press release as well. In the meanwhile, let me go across to my colleague Somit Sarkar, who's joining in to tell you about the chatter in the dealing rooms. Somit, good afternoon to you. And what's the interesting buzz that you're hearing this afternoon?
Good afternoon, Alex. The first one is on Diamond Power. Now, the company opened their QIP yesterday. What I'm hearing is that the demand is quite strong. for this fundraise. Nearly 5x demand is what the company has received so far, and names like ICICI Pru, SBI, Motilal, White Oak are among the prominent buyers in this QIP. When it comes to Zydus Life, there is sell through that we are seeing for the on the DI desk. The stock has been falling for the last third consecutive session, so some selling pressure coming in here. When it comes to Arvind, Piramal Finance and Apar Industries, dealers indicate that a QIP is expected to open soon in all the three names. So keep an eye out for all the three companies. Apar Industries did come out with their numbers as well today, a strong set of numbers. For Suven Life, a large prominent HNI has been buying in trade is what dealers have indicated, and they're also expecting a positive news flow related to one of its key drug. And lastly, when it comes to M&M, there are buy flows on the large HNI and PMS desks. Dealers are expecting a strong set of numbers in the first quarter. The stock is down in trade today, but there are some buy flows coming in at lower level is what dealing rooms are indicating.
Interesting. All right. Thanks so much, Somit, for that. By the way, SBI Life results coming through at the bottom of the screen. Pay one close, keep one eye on that. In the meanwhile, we have to actually slip into a break, but before we do, let's do a rapid fire if Kunal is amenable to doing it. Kunal, you should probably be used to this by now, but I'm going to throw three stocks at you. My co-anchor Mahima is going to do the same. Let's go quick as you possibly can. Give us levels maybe, and tell us what the call is. I'll start with Action Construction. Is doing well today, up as much as 6%, probably on significant volumes as well. Would you buy into it right now or hold?
Buy into it right now. The stock has already bottomed out. 950 is the support on the downside, and one can look for targets of at least 1200, 1250 on the upside.
Okay, the next one is on Spandana Spooty. The stock is down almost 11% and almost trading at the day's low point. What would you recommend seeing the charts right now, Kunal, for this one?
See again, sell on rise. There has been strong resistance on the upside. Can go lower and test the support of 220 on the downside.
Okay. The next one is I've got KPIT Tech. It's gaining as much as 5.5% or so. 581 is where the tick is. Would you buy into it right now?
See, overall the larger term setup is bearish, but since we have seen a good correction, this could be a pullback which can extend the stock towards 650, 630 on the upside.
Okay, Sirma SGS is the other one which is down by about 5.7%. What do you think on the charts? It's found its bottom. What should an investor do?
I think further downside is left around 1200. It should find a good support zone. So if it comes around 1200, that is a buy area.
Okay, PVR Inox is buzzing on account of the numbers, but certainly also exciting trends with regard to Odyssey. At 1061, is it still a buy?
Yes, sir. Today it has given us a fresh breakout, can extend this rally towards 1100 on the upside.
Okay, Triveni Engineering is the other one which is, yet another day of pressure on this one, down 5%. But there are other sugar stocks which are showing relative strength, right? Like Balrampur Chini. What would you recommend on Triveni Engineering?
I think Triveni Engineering, I would say avoid from the sugar pack. One stock that is still looking strong from the sugar pack is Balrampur Chini. Focus on that. I think dips to be utilized as a buying opportunity. Upside it can go towards 650, 660 zone.
Got it. All right. On that note, Kunal, Lancelot, thanks so much for taking the time and speaking to us today. Pleasure speaking to both of you. Some updates for you, and this is significant development, in fact, national news for you to pay attention to. In the entire paper leak controversy, the government has stepped up and responded. It has, in fact, proposed to bring an anti-paper link amendment bill. What are the proposals? There is to be stringent provisions against paper leak mafia, a special fast-track courts which will receive legal backing. Provisions will be made for a 10-year prison sentence in case of any infringement, a fine of 10 crore rupees in the case of paper leaks, and a fast-track court or courts to conduct hearings and deliver verdicts within 3 months. An attempt by the government to respond to the protests that have taken place in various parts of the country, particularly in New Delhi. It's time now to it's time now to slip into a very quick break. We'll get you more details on the other side. Stay tuned.
Superstar Stocks of the Day, presented by Tata Azura. Har Raaste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933 बरसों से सरसों।
कुछ तो बात है इस दिल में।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
You come from rural households, have gone out and had great opportunities, great education, and then decided to form this company.
I come from villages in Haryana. I used to play taekwondo. I got India a bronze and a silver.
Wow.
पर ecosystem was such कि अब इसका खेलना कूदना बंद करा दो। जब 9वीं क्लास में गए तो और प्रेशर आने लगा कि यार अब तो लड़की की शादी करा देनी चाहिए। I went to my father, अगर आपने मेरी शादी कराई तो मैं घर से भाग जाऊंगी।
Welcome back. You're watching India Market Close here at NDTV Profit. Just a quick take on how the markets are doing. Not much has moved since we last spoke, but still, the Nifty 50 is now trading around the 23,700 odd levels, slightly off from the day's high point, but it will be crucial to see as to how Nifty 50 ends today. But broader markets have seen a significant recovery. Both the mid cap 150 and the small cap 250 are now trading just about 0.1% down, and both almost at the day's high point. So broader markets is where we're seeing faster recovery as compared to where benchmarks go. But let's also talk about an important development and a story coming in. Sources are telling us that India's state-run oil marketers have activated contingency plans amid the escalating Red Sea crisis. Sessa joins us with more details on this development coming in. Sessa?
State-run oil marketing companies are activating contingency plans as the closure of Bab el-Mandab Strait threatens crude supplies, especially from Saudi Arabia and some supplies from Russia. Refiners are evaluating alternative shipping routes, including via the Suez Canal through Europe, while also assessing higher freight costs and the transit times being taken before fresh purchases. Now, cargoes from Venezuela and Angola are also gaining traction as refiners have been diversifying their supply mix ever since the onset of the Middle East crisis and the closure of the Strait of Hormuz. BPCL in its recent earnings call had said that it has secured crude supplies through August and is in the process of sourcing cargoes for September. It has also warned that any prolonged disruptions could impact supplies. Further, BPCL has also mentioned that discounts on Russian crude have largely disappeared amid the fresh crisis, with more clarity on September pricing expected in the coming weeks.
All right, thanks so much, Sesha, for getting us those details. Now, clearly, crude oil is something that you should watch very closely. We saw it briefly cross that $100 per barrel mark on the upside, and it's subsequent to that fallen to about 98.2, which is why maybe you have a little bit of comfort with regard to how the markets are behaving right now. We've got Rudra Murthy, BV, who's founder, director of Vachna Investments, as well as Mr. G. Chokalingam, as the founder and managing director, Economics Research, joining us towards the end of trade today. And good afternoon to the both of you. I'll come to you first, Rudra. What do you make of the market right now? You've come off the low point of the day. There seems to be some buying interest coming through. What is leading to this?
Alex, good afternoon. Thanks for having me in the show. See, 23,750 to 23,800 on Nifty was a very crucial support. Even though we went below those levels on a gap down open today, the recovery from lower levels has been definitely strong. Yes, even Brent crude from those levels of $100 per barrel has now come down to closer to that $97, $96 per barrel. So it is better to wait out for a day or two and then see how this Brent crude and the market reactions will be. Until then, one can be definitely sector specific and stock specific. But however, if we close below today's low, that clearly indicates that yes, bulls have to be cautious in this market, and whatever Trump is doing and the geopolitical tensions around, tariff around, all these are not good sign. But I will just give another day's time before I conclude that yes, bulls have to give up for short term, or else Brent crude coming down now and recovery from lower levels, whatever has happened today, that still gives me another ray of hope.
Okay, all right. So that's the view coming in on the indices, of course. But Mr. Oaklingam, a very good morning, good afternoon to you. I think my question to you would be that it's been 2 weeks since we're seeing a slew of earnings coming in, right? It's just the beginning of FY27. Anything specific that you've marked and you've liked and probably added to your watch list that you'll be tracking from here on?
Yeah, certainly. There are some new stocks we added in our recommendation. One is Vesuvius. It's a MNC refractory company, beaten down a lot. And what is interesting about this Vesuvius is that they recently expanded the capacity at Visakhapatnam. And steel industry long-term outlook also looks very good. The capacity is expected to go by 50% in like 3 to 4 years. That is very big positive. And second idea is Canara Robeco Asset Management Company. And in terms of relative valuation, it is cheaply valued. Many AMC companies trade at EV to AUM at the rate of 8 to 10%, and this is around 4% EV to AUM. So that is a parameter I give importance, and I find this stock very, very attractive for medium to long term.
Okay, all right. So those are the picks that have been recently added by Mr. Oaklingam. But now let's try to take a closer look at Cipla, because post the earnings, of course, the stock saw pressure, but today it's recovered quite a bit, now trading about 1.2% higher, but off from the day's high point as well. So it's the right time to take a look at the bull versus bear case for something like a Cipla, and Varsha, who tracks this very closely, joins us now to give us both the bull and the bear side.
Well, yesterday, we saw Cipla tanking in trade because, of course, on the back of weak Q1 numbers. But today, brokerage is being bullish on the stock. So Q1 EBITDA, if you see, missed estimates on higher costs. But India growth stays in double digit, and that was the highlighting factor, at least in the numbers. Moving on, management, if you see, is expecting almost 18. Rather, they have retained 18.5 to 20% of margin guidance, which is a good thing. But FY27 may see a second consecutive earnings decline. That's what most analysts are expecting. So you might see some kind of pressure in FY27. Moving on, if I were to talk about the US sales, we all know that US sales run rate still remains subdued, but management is actually confident of achieving $1 billion US exit run rate. So you might see some kind of recovery maybe in H2. Also, the respiratory launches can drive H2 recovery, and hence everybody is expecting a stronger H2 than H1. But the new launches so far are ramping up slowly than expected. So you might want to keep a watch on the new launches that the company has been doing. Potential FY28 earnings revival story is intact as per the brokerages, but current valuations, if you see, are already pricing the FY28 recovery. So every investor is concerned about the valuation, though FY28 will be a good earnings year for the Cipla, but you might also want to check on the current valuations, which is already baking up the FY28 recovery. So overall, if I were to talk about Cipla as a whole company, yes, we saw Q1 as a weaker number or weaker quarter, but H2 is one which you should keep a watch on, because everybody is expecting a recovery in H2, and that's why most of the brokerages are bullish when it comes to Cipla, and hence we are seeing the stock is up almost 1.5%.
Varsha, thank you so much for getting us those details on Cipla. Rudra, I'll come to you on the charts for this one. If you were to trade this, how would you do it? And if not Cipla, anything in the space, the pharma space that you're liking?
Mahima, definitely Cipla looks good. After yesterday's result, it made a low of around 1360 and from there it has again recovered. So pharma as a sector looks good to me, and specifically on Cipla, definitely dips can be used as a buying opportunity. Keep a strict stop loss of 1350 on a closing basis and hold on to Cipla if you have, or even buy at current market price, looking at targets of around 1500 on Cipla with a stop loss of 1350.
Rudra, considering that we've seen so much of geopolitical development this week, if you were to go into this weekend with a trade, what would your BTST or vice versa be? Or would you stay away from trading at all and taking positions over the weekend?
No, Mahima, I'll be very stock specific, and yes, if I have to take a weekend trade and carry my position, I will look at Manappuram. Look at the stock chart pattern, and at around 333.35 it gave a clear breakout, and even on weekdays this stock is definitely relatively showing lot of strength. So available in futures, one can definitely build long positions, and keeping a stop loss of around 335, I will look at targets of 380 to 400 to come on Manappuram. But this is a positional trade one can take up, or even for a BTST kind of a trade, Manappuram looks very, very good to me. Another stock which I like is Hero Motor Corp. Again, this stock has given a clear breakout above 4,900 zone and now trading clearly above 5,000. So for me, Hero Motor Corp also on a long-term basis, one can definitely have in one's portfolio. This stock can even move towards 5,300, 5,400 levels initially, and even further move can be seen on Hero Motor Corp. So with a stop loss of around 4,900, I will take a long trade here in Hero Motor Corp, looking at targets of 5,300, 400 to come very soon.
Interesting. It was a significant outperformer in trade yesterday, gaining about 3.7, 3.8%, and it's cooled off quite a bit in trade, hovering around that 5,000 mark as things stand right now. Let's head into check on Shriram Finance as well. It posted its numbers not too long back, and healthy Q1 broadly with asset quality improving. It saw a bit of a spike, but it's cooled off since that point. Let's bring in Piyush to give you a sense of what the numbers look like, particularly when stacked up against estimates. Piyush?
That's right. Above estimate results for Shriram Finance in Q1. The AUM has grown handsomely. Primarily, the PAT growth was led by a decent 27% or more than 30% growth in NII, 34% to 8,056 crore. The passenger vehicle and commercial vehicle segment growth was quite high in the higher 20s. And the construction equipment, however, these loans fell. Also because, the NPA numbers in this construction equipment loans are quite high. So overall the gross NPA, like you referred, it has come down to 4.64 from it has risen slightly to 4.64 from 4.58 last quarter. But on the margin front, the NBFC has done well. Its margin have improved to 9.04% from 8.61%, and the ROA has also improved to 3.93 versus 3.63% last quarter. Shriram Finance's capital adequacy ratio is quite high because of the MUFG money that has come in, and that has been NIM accretive as well. So broadly, the numbers are good for Shriram Finance in Q1.
All right, okay. Thank you so much for that, Piyush. But the stock, of course, not reflecting the numbers that have come in, down by about 2%. But also, Mr. Oaklingham, we've seen a significant amount of run-up on this counter, right? How do you view the numbers? And if somebody is invested in this one, continue to remain invested, be a patient investor?
Certainly, one should continue to hold. You are right. The price is not reflecting the performance in the quarter because it already ran up a lot and trades around 3 times book value. But still, one can hold it because all successful high-quality NBFCs trade anywhere from 3 to even 4 times price to book value. This is marginally less than 3 times. So therefore, one can hold. In case it slips below 1,000, then it becomes a good buy also on the fundamental basis.
Swiggy is the other one, both, of course, Swiggy and Eternal have taken a hit today, and this is on account of course, board. We've talked about this before also. The board has gone ahead and for the second time approved reducing foreign ownership to around 49.5%, which was up, could be above 100% earlier. So that limit has been brought down and subject to, of course, shareholder approval in this AGM. But because of this, what will happen is that the impact of this is it will get deleted from MSCI as well as the FTSE. Has been brought down and subject to, of course, shareholder approval in this AGM. But because of this, what will happen is that the impact of this is it will get deleted from MSCI as well as the FTSE index, and because of that, outflow of around $450 million could be expected in this one, and that's why we're seeing that as well. And of course, there was news flow with regards to Flipkart entering into the food delivery space in the next 1 month in Bengaluru is something that they've gone ahead and announced. So on the back of that, both these counters are seeing pressure in trade today. Rudra, any of these, Swiggy or Eternal, that you're liking on the charts if you were to make an entry?
My very clear view, if I have Swiggy, I will definitely switch to Eternal. And if you want to hold on to Swiggy, then yes, 235, the recent low, will be my stop loss. Or you can just keep another 5 rupee down. 230 will be the last level with which one can hold on to Swiggy if you have it already. But if you want to make a fresh entry, I will definitely look into Eternal, which looks far, far better on charts compared to that of Swiggy, and at current market price and on dips to 265, I will be a buyer in Eternal. And yes, one can look at targets of 330, 350 to come on Eternal. So keep a stop loss of around 260 and buy at current market price and on every dips to 265, looking at 330, 350 target. And from this new age and platform sector, if you have to make any other choice, yes, for me, Nykaa looks the best among the pack. So Nykaa looks good. Paytm after the recent correction also looks good. So those two will be my top picks. But between Swiggy and Eternal, definitely Eternal wins over Swiggy on chart.
So far on the fundamentals as well and on the earnings, is that not right?
Yeah, absolutely. I mean, we were just talking about this, right? That as to how the fashion business has significantly picked up in the last 2 quarters for Nykaa, and that's the reason as to why the stock has also seen a significant amount of up move. Higher highs is what we're seeing on the chart.
Higher highs, all right. Nykaa and Paytm both look good beyond Eternal. In case you were looking at modern day or new age platform companies, what are the other stocks that are buzzing in trade and possibly those that have significant volumes? Let's bring in Parth to highlight a few to you. Parth, what's standing out to you?
Yeah, so there are 3 very interesting names. The first one is Tech and Vision Ventures. The stock is on a 4-day gaining streak and has gained almost 10% today as well. In fact, in the last 4 sessions, the stock has gained almost 50%. That's pretty big. Volumes today are 11 times the 20-day average volume as well. The second one is Gujarat Alkalis and Chemicals. The company reported its Q1 numbers recently, and the product mix that they achieved was the reason behind higher realizations during the quarter. The stock has gained almost 5% today, hitting the highest level since May 2026. Volumes today are 9 times the 20-day average as well. And the last one is Dilip Buildcon, which has snapped its 2-day losing streak and has gained over 6% today. This is the biggest intraday gain the stock has seen since November 2025. And also volumes, a huge volume action in the stock as well, with volumes at 15 times the 20-day average volume. So these are the 3 stocks that you should definitely have in your watch list today.
Okay, all right. I think Phenotech's Chemicals is also one of those stocks that has done very well in the chemical space. We've talked about this as to how chemical stocks are back in action now. Mr. Oklingam, his list also had Gujarat Alkalis, SRF, of course, because of the con call guidance. Probably the stock was seeing pressure, but overall the numbers were not bad, right? The chemical space, if you look at right now, anything that's looking cheap to you could be, this could be a good entry point to make an entry into any of the chemical counters.
Oh, SRF is a safe bet. Maybe even Gujarat Alkalis followed by that. Good results. And caustic soda last 20 years, there is no any new green field project. So with the rupee depreciation, the landed cost of caustic soda should improve. So that will be margin accretive for the domestic players. So these are the 2 stocks worth considering, SRF and Gujarat Alkalis.
Okay, and Rudra, what about you on the charts? Any of the chemical names look attractive right now? Sorry, I think you're on mute.
Yeah, sorry, Maima, after today's correction in Gujarat Alkali, the stock really looks good for a fresh entry. Might be at current market price and on dips to those 650, 660 zone. I will be a definite buyer in Gujarat Alkali. Chart patterns are very strong. You are making that cup and handle formation, which is a very, very strong pattern. So I am looking at targets of 750 to 800 to come on Gujarat Alkalis. And this will be my top pick, followed by SRF. And keeping a stop loss of 650, I will buy Gujarat Alkalis and look at targets of 750 to 800.
Got it. Okay. Some of those graphics at the bottom of the screen are quite interesting, right? The big gainers and losers for the week as a whole. Gandhar oil, take a look at that. The bottom left of the screen, right there. Okay. In any case, it's up as much as 32-33%. It's done particularly well for its. What stands out though is Reliance Industries for the week, and it just goes to show that a heavyweight can have quite a bit of a bearing. It's up today about 0.5%. If you pull up the week though, it's down about 1.5% or thereabouts, and having a bit of a bearing on the benchmark Nifty 50, isn't it? Even HDFC Bank to that extent will have its own bearing. Rudra, Mr. Choklingam, I do want to ask you about PVR Inox though, and we were having a debate earlier about the fact that Dhurandhar 2 came in on, I believe, the 19th of March. So to a certain extent, there was demand that came through in the first quarter as well. But you have Odyssey, where the first 6 days or 7 days have gotten upwards of 80-85 crore rupees, and of which you can assume that about 60% will go to PVR Inox. And so it's going to be a pretty strong Q2 as well. Would you buy into the stock right now?
Maybe for short-term investor traders one can, but for holding for medium to long term, I may be wrong, but I'm still not yet convinced about this impact of the structural change which we are seeing. That is OTT platform having impact. As you rightly said, only the blockbusters are helping the cinema owners, theater owners, to make profit. So that is where my concern is. But certainly yes. In the short term, it can give even 15-20% return because a lot of good films are lined up now.
So that's the view coming on PVR Inox. With that, Mr. Choklingam and Rudra, thank you so much for taking out the time and helping us with all your insights on the stocks that we talked about in trade today. But let's take a quick look as to how the markets end today, and of course the weekly performance also we'll see as to how broader markets versus the benchmarks have done. The Nifty 50 now closing around the 23,780 levels, down by about 0.4%, but we've seen recovery from the day's lower point, so that's a little reassuring. You also have the Bank Nifty, which is closing up by about 0.3%, but the broader end of spectrum, the mid cap 150 almost flat, so we've seen a significant recovery at the day's high point probably, and the small cap 250 however has slid a tad bit because it's down now by about 0.2%, so not probably closing at the day's high point. But the Nifty 50 chart will also be an interesting one to watch out for to see as to what are the counters. There you go. This is of course today's day chart, but the heat map, if you can try to pull that up and then also see the weekly performance, you have two IT names topping that chart, HCL Tech and Wipro, and also Cipla now recovering after what it saw yesterday, after the performance it saw yesterday. But you also have some names like Adani Enterprises, which has recovered significantly from the day's low point. You have Jio Finance, HDFC Life, Reliance, Trent, all of those counters at least keeping the Nifty in check. But on the flip side, you have Eternal, which has taken quite a knock today, down by about 2.5%. In fact, post the earnings, the stock has not been doing very well. But you have Bajaj Finance, which is also down by about 2.2%. M&M down 2% as well. So auto stocks as a whole, the pack as a whole has seen profit booking coming in today. But Shriram Finance, good set of numbers, but stock not reflecting that, down by about 1.9%. And of course heavyweights like Bharti Airtel, you have Tata Consumer also down by about 1% just ahead of earnings. The advanced decline ratio is also an interesting one because it's almost even Stevens on that chart, and it's it diverged for some point in the day, but has now around 1345 odd advances versus that of now 1276 odd declines, but slightly in the favors of the bulls, and that's because of the recovery that we've seen in the mid cap 150. Nifty. Quickly, the BSE 500 before we close for the market today. You have very stock-specific action here. You have Motilal Oswal down 7%, Westlife Food down 6%, Bajaj Mines, Route Mobile, V-Mart are some of the other names. All of this action on the back of earnings is what we are seeing. But on the flip side, you have names like Jindal, Gujarat, Ambuja Exports, Atul. PVR on Inox did not react well to the earnings yesterday, but today is up almost 5%. So that's with regards to where the BSE 500 stands, but also the weekly chart, if you can try to pull that up for Nifty 50 as well as the broader end of spectrum and see as to how the week has gone by. Nifty 50, we are closing down by about 1.3 odd % for the Nifty 50. The broader markets, the mid cap 150 and the small cap 250 as well. For the mid cap 150, it's also a downtick of around 1.5%. The small cap 250 is also this is the weaker one because that's where we're ending by about 2.7% of a downtick overall for the week. So that's with regards to where the markets go for the week. But with that, we are completely out of time in this edition of India Market Close. But do stay tuned in because we have editor's cut coming up next.
केसरिया
Good evening, you're watching Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Shreyanshi Singh. First up, let's take a look at the top headlines. Bitcoin below 65,000 on macro-driven sell-off. Senate Republicans unveil 616-page Clarity Act. Maharashtra proposes Delta Act. Tesla holds 11,509 BTC after 4 years. And those were the top crypto headlines at this hour. But with the deadline to file crypto taxes just around the corner, let's also get you some more expert opinion. Let's also hear out the word coming in from Mayappan Nagappam tax partner, Trilegal as well, who talks about the process of filing crypto transactions and gains or losses and how it really differs essentially from equity or for that matter mutual funds.
So equity or mutual funds, the system is fairly established and streamlined to a great extent because the details are auto-collected and populated in the filings. Whereas for crypto, there is still that sort of disconnect because, we have the exchanges conducting the withholding tax and making filings on that basis. But the need to reconcile and do the filings and the positions we discussed about still rests with the user or the filer, right? The taxpayer in this case. One of the other things to keep in mind is that, because information exchange on this point has been particularly challenging in the past, governments have now agreed to implement the CARF framework, the crypto asset reporting framework, starting from April next year, where then even if the user is trading on outside of India, the exchange will report outside of India to the relevant country, and that government will sort of share the data with the Indian government. So this is something to be sort of careful around. Going forward, this may get more streamlined, but today there is a significant difference in the process when it comes to equity or mutual fund regime system.
And before we wrap, let's also listen into what he had to say in terms of the explanation on whether crypto losses, long-term or short-term, can be set off against gains from other asset classes.
That's a great question, and that's the first thing on everybody's mind, especially if they're new to the space. Unfortunately, that's not possible today. The provisions are very clear that no losses can be allowed or set off or carried forward in any manner whatsoever. So you cannot set it off between, like I said in the example earlier, between a Bitcoin loss with an Ethereum gain or carried forward in any manner whatsoever. So you cannot set it off between, like I said in the example earlier, between a Bitcoin loss with an Ethereum gain. You cannot set it off ideally between even within the same category of assets. Like Bitcoin losses cannot be set off against Bitcoin gains, although some may be claiming that today it's not allowed. This is an extremely punitive regime that is there with respect to crypto currently, and till that changes, it's not going to be possible to claim any sort of losses on these transactions.
All right, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with our in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry as a whole as well. The team is available to provide guidance and help users make informed decisions. And that's all the time that we have on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
You come from rural households, have gone out and had great opportunities, great education, and then decided to form this company.
I come from villages in Haryana. I used to play taekwondo. I got India a bronze and a silver.
Wow.
पर ecosystem was such कि अब इसका खेलना कूदना बंद करा दो। जब 9वीं क्लास में गए तो और प्रेशर आने लगा कि यार अब तो लड़की की शादी करा देनी चाहिए। I went to my father. अगर आपने मेरी शादी कराई तो मैं घर से भाग जाऊंगी।
Where did the idea of Rosanna start?
We were working with several state governments, and for that we used to travel a lot to the villages. When I went there, I really stood at that counter. Almost anything I wanted was not available on that counter.
The village that we are talking about is similar to what you see in Panchayat.
Fuleraga.
Absolutely.
Basically, you want to get choice to the equivalent of Fuleraga. What is the most hit product that people really wanted and you didn't expect?
People kept on ordering Maggie, and then we had to start saying no. So we tried to offering them कि पास्ता खाओगे? फोन करके बोला। हमने उनको YouTube वीडियोस भेजे पास्ता कैसे बनाते हैं। In few months, macaroni and penne became one of the highest selling products in the category.
You met, clearly vibed as co-founders, and then I think a year ago have gotten married as well.
We spent so much time together. It would have been very tough for anyone else to survive with us.
I thought there was very little scope in terms of us looking outside for marriage. Business was the romance.
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up. Different KPIs were adopted for different categories. These are of course discussed, internally. We challenged ourselves, etc., and we made sure that the data sources were all very robust.
Hello and welcome to the show, and you have joined us on Editor's Cut, and here's the Editors Guild of NDTV Profit sitting down before the weekend to really comprise what really transpired, break it down, and make sense of 3 important questions for the week ahead. I'm Nisha, and with me are Alex as well as Hiral. Hi guys, and let me also welcome on the show our guest today, Manish Sonthalia, Director and CIO at MK for the week ahead. I'm Nisha, and with me are Alex as well as Hiral. Hi guys, and let me also welcome on the show our guest today, Manish Sonthalia, the Investment Managers. Manish, always a pleasure to welcome you on NDTV Profit. Looking at the market trajectory as well as the oil prices and the war, my one question would be, are we testing 23,000 once again, which we did at the peak of the war last time?
Look, everything said and done, FIS selling has abated quite a bit. So that was not the case when we last tested 22,000. We didn't test 23,000, we tested 22,000. Secondly, we were in the middle of a AI play where India was not a part. Today we are in the middle of an anti-AI play where India is a beneficiary. So the aggression in terms of selling by FIs is not there. Earnings has so far held good, right? And hopefully this re-emergence of the war settles before the second term or mid-term election out there in the US, which is around October, November. And we have a lifeline of 30th of September in terms of FCNRB flows. And we have already reported $21 billion worth of flows that has already come in. Hopefully we'll get $50-60 billion. Given this backdrop, plus 38,000 crores worth of SIP flows,
38,000?
I mean lump sum, including lump sum. Including lump sum plus SIPs, 38,000 crores in spite of so many uncertainty. Currency is a worrisome fact because pre-war we were 96, today we are at 97. So keeping all these things into perspective, I mean we are still 600-700 points away from Nifty. I mean it can fall because every incremental news flows regarding currency is detrimental because 97 is really ugly, you know, and the biggest apprehension is the currency, 97. I mean, it can fall to 23,000 if this thing doesn't resolve very soon and looks very ugly. It's so, you know, prior to this, or let's say just after the signing of the deal, it was very optimistic for India. You know, we were so positive.
Yes.
That positivity has tempered down.
So it's just been like what? In 10 days, everything, tables have just turned. So the question I have, Alex, for you, Nisha and Manish is anyone really able to make a bet from here on? That's the question.
Actually, I'll couch it differently. With crude at close to 100 or very, and it breached $100 to the barrel for a bit after cooling off, are all bets off? Is the question.
I don't think so.
Why?
Okay, so think about it. You're talking about crude which is at 100 or say even 120. Let's take 120. It's for a brief period. It's again coming off. Unless and until crude was at these elevated levels for a very long period of time, then I would say probably bets are off. Here we're talking about only the level of crude. We're not talking about the time horizon for how much time is crude staying elevated at those levels. In my opinion, if crude stays elevated for a very long time at 100, 110, 120, let's take a quarter, then you're guaranteed, you know that, yeah, probably all bets are off. But here for a couple of days it's there, but it averages out lower for the month.
So you're challenging the first half of the argument in the first place. You're saying that it's unlikely that crude will stay at 100.
100%.
But so my problem with that...
So out here there are 2 or 3 points. The world is oversupplied with oil. It's the supply chain bottleneck, right? Saudi Arabia said we are going to give you a discount of $11 on crude when the price was at whatever, $75 or $70. So it's not a question about whether the supply is there or not there. It's there.
It's being choked.
The supply chain bottlenecks in terms of transportation, which is the major issue. Once that clears, we shall see the oil price coming off for sure. Because everybody wants an increase in output because of their Middle Eastern economies, so on and so forth. But the point is whether this whole thing gets resolved quickly.
Yes.
So that's the point, right?
How long does it
Unpredictable
last?
as of now. Because if the second time around this thing has got breached, the ceasefire,
yes.
What do you say? What do you predict?
So in case people are unaware of what has happened this week, right? Just to spell it out, you had the Strait of Hormuz, which was the choke point all this time, And then in the interim, the Red Sea was being used as a route by Saudi Arabia to pull a certain amount of oil out and supply to the south and to the north. Now the south route has gotten shut off, where apparently 3 million barrels per day was getting pushed through. And that was coming to countries like India. A few tankers still making their way out, apparently going to China, but not to India. So the question that I think arises is, at this moment, seemingly based on what crude experts have pointed to us, is that countries like India have used that little bit of a lull to bolster their stocks. So you're okay till August. But then if the situation persists beyond that, it's a major macroeconomic
100%,
problem.
because second half, if this doesn't get resolved, it's an inflationary shock once again.
All right, so Manish, how long can we really sustain with these kind of elevated, this thing, that the patience has to run out at some point? Everybody thought that it will be 2 to 3 months, then it spilled over, then we quickly saw the crude fall, and then again we are back to square one. I would like to also claim that last week in this particular show, I had stated that $80 per barrel average, the moment that gets disturbed, the markets will start reacting to crude oil prices, and that's exactly what played out in this particular week. How long can we hold the patience, because our real macroeconomic material impact on the ground is visible because of oil prices?
So we have seen $120 of crude, right? We are currently at 100. We have seen 96 on the currency. Today we are at 97. Only missing point was FCNRB announcement. I think markets will give the benefit of doubt to India and even the FIs. Post, let's say oil was below 80, aggressively positive on India. Beyond 90, less positive on India, though not yet pressing the sell button massively, but still very less positive. I don't think they will go aggressive on India more than $90 per barrel. Lifeline for India is 30th of September, FCNRB cutoff date. If this thing doesn't get resolved, second half is going to be a washout.
So there's a buffer. So that very neatly leads us to the second part of this conversation, which is the consumption story. And you talk about there being resilience in certain pockets. You obviously do not look at India as a big cohort, and there are so many micro stories that play out. So if you look at Nestle results, that shows you, and even Eternal to a certain extent because of the velocity of the demand there, both of those show you that the demand is very strong in urban India, possibly at the premium end of the spectrum. But if inflation comes through in the second half for various reasons, including the southwest monsoon delay, there is going to be a rural impact, and that's going to reflect for FMCG companies, which have been robust so far. What do you guys think?
I'll let Manish go first on this one.
You know, my 2 cents on this is basically rural economy gets impacted if you have 2 bad monsoons consecutively.
Right. Okay.
So last year was a good monsoon. This time around, patchy. Of course, now things have recovered even in the western part of the country. Southern part was okay. You had the green belt, which was a bit iffy in terms of the monsoon rainfall. And overall, I think there's still a deficiency, but you don't have 2 consecutive deficiencies.
Right.
So consumption is not that bad as is being made out to be. That is one, rural consumption. Secondly, I think in consumption, challenger brands will challenge the incumbents. So incumbents will, I mean, how's the mindset of the consumer today? They don't really care about the brands. The millennials, the Gen Z, they want good product quality. So the incumbents, I mean, Nestle is an outlier for sure. 4 categories, they're still reporting the highest growth.
Yeah.
I mean, in terms of
24%.
Absolutely. I mean, it's an outlier, and this is only once we have seen in Nestle this sort of a hyper growth over a period 2013 to 18, if I'm not mistaken. But this is not the norm. I don't think, you know, you'll have across the table in FMCG report this sort of number. In fact, the incumbent brands will struggle on volume growth.
Right.
More than double digits for as long as you can see.
For argument's sake, can I make one important point that, okay, you are saying 2 consecutive monsoons will have an impact, but food inflation because of delayed monsoon, which could have impacted certain crops in different geographies for different reasons, climatic reasons. That is one aspect. And if we have crude also at elevated prices, double whammy of that adding to that inflationary bit, and let me add one more aspect and you can throw more light on that. Urban consumption is very strong, but in the long run, we are seeing a lot of job losses. After COVID, companies have also gone into too much cost efficiency. At some point, the ageism, AI impact on the jobs will impact the urban consumption also. I'm not saying this year, but in the long run. So putting this together, how do you see with double whammy of inflation and the latter part of this financial year?
So I'm not so negative on consumption per se at this given point in time, both urban and rural. Having said that, if oil was to persist beyond 100, there is going to be an inflation shock which will weigh on consumption 100%.
Okay, I will come in over here. Do you think it will weigh on consumption on the urban side or the rural side? Because the way I am looking at it, to be very honest, is it will weigh in more on the urban side of it, because the discretionary spend, where you talk about autos, you talk about travel, you talk about premium luxury, that's where you will start seeing cuts. And if those cuts happen, it's going to be more on the urban side and not on the rural side. One. And two, when you're talking on the rural side of it as well, that is going to still remain to your bare basics, that's your staples.
Not necessarily, because rural is also upgrading big time.
Yeah.
And as
Agreed.
No, just 1 second. The food grain production is ample.
Yeah.
Correct.
So if you, let's say, have a deficient monsoon, there will be certain crops, cotton, oil seeds, where we are importing, or let's say horticulture, fruits, vegetables, these will be inflationary.
Correct.
Imported inflation will be a trickle pass-through across the board. So logistics, raw materials, metals, commodities, all of that will feed into inflationary. More so in the second half if oil was to persist at these. There's no doing away. We are still importing a lot of oil. So that is one aspect. And second is basically the top 5% of the population don't care about inflation.
Yes.
It's
Exactly.
the middle class which will suffer, which has already been suffering because of high taxes, because of high inflation over the years, last 2-3. Look at any mass consumption category.
Yes.
Where is the growth?
And savings are getting impacted, not the consumption on the other hand.
But my point on this, and to your point on challenger brands, I would like to maybe provide a contrary view, because in times like this, when there is input cost inflation, there is a pressure on the margins, hasn't it proved to be that the leaders in the category consolidate and they have more pricing power, as a result of which they're able to, maybe to the extent that they can scrimp margins just a tad bit and control the market, grab more of the market, as a result of which
so the incumbent brands, more so in the staples, FMCG, they're all in penetrated categories.
Okay.
You can only deal with the volume growth to the extent of premiumization. I don't want to allude to names, but think of any large FMCG brand and think of any new brand which they have launched in the last 10 years. You will come to a negative answer.
Okay.
Everybody is sitting on their laurels. The challenger brands are challenging their, because the millennials and the Gen Z don't care about the brand name, they care about the quality of the product. And distribution, which was a major competitive advantage for all the incumbent brands, is dissipating. With 16 cents a gigawatt, 16 cents a GB of data cost, e-commerce, quick commerce has disrupted
the market. I wanted to come to exactly this, Manish. While we are talking about consumption, it will be unfair to not talk about this sector which is growing so fast, which is the delivery based quick commerce, and in my view it's overcrowded. How do you assess this particular market?
No, it's a very tough category.
Yes.
Unit economics, to get it right, is not just a function of the amount of cash that you can burn. Right, because there are many food delivery companies and which have come and gone.
Yes.
Right, and even the largest ones have not been able to crack the code. So today, for record purpose, I mean, you have just one player, Blinkit, who is earning positive EBITDA margins per order, and their quick commerce went from 2,500 crores of GMV to 15,000 crores per quarter GMV. And they are not yet penetrated throughout the length and breadth of the country, 2,400 stores. So I think the size of the market is immense. India has gotten to the habit of having everything in 10 minutes. You can't do away with that.
Yes.
That habit formation is permanent.
Yes.
Number of players may come and go, so, but it's not very easy. You know, because your burn is going to last your cash only till a finite period.
Even categories of quick commerce in the makeup and cosmetic
Beauty,
space have also started delivering on an SOS basis now, because the mindset of the consumer
You know,
has
the
changed.
consumption, the BPC, fashion, the problem is not the first time sale. It is basically the unit economics of the return.
Yeah.
See, an apparel you can order, you get it, or let's say footwear, you get it. But what about the unit economics when you decide to return it back?
Which most people, a lot of people do.
Discretionary, and that is the biggest loss factor.
So actually, it's very interesting because anecdotal evidence. I'm not sure whether other brands are doing it. I don't want to name the brand, but somebody was telling me about one particular clothing brand which has got an application which delivers, right? And they've actually, over the course of the life cycle of this customer, identified the type of product that they generally buy, the size of product that they normally convert and keep. And so when they are sending products, they're offering products of a particular size because they differ. Women will know this, right?
Yeah.
A 32 of this particular type of dress and a 30 of another particular type of dress. So the company is offering that to this particular customer. They've collected data over a period of time, and so they're reducing number of returns for something not fitting. Right?
I mean, that's the algo play, right?
It is the algo play, and that's, I think, going to become a much more nuanced play going forward.
No, so look, fashion, high fashion, it's all about assortments and your storing capacity. So mass products, you can categorize in terms of algos, SKUs, etc. But let's say high fashion, particularly when it comes to the women's segment, it's a plethora of assortment that you need to keep. To be successful, you need to have that sort of warehouse space. Those sort of assumptions. So inventory is the biggest play when it comes to fashion.
Actually, inventory is the biggest play when it comes to quick commerce also. All of these guys are moving to dark store models and they have to build out their stores.
So assortment is very important.
Yes.
Cities, the better purchasing power, you first need to be in those cities only.
Yeah.
So a few of these quick commerce guys made the mistake of venturing out into tier 2, 3 towns and cities where you don't have that pricing power, you don't have that average order value. And your unit economics in terms of loss per order only gets exaggerated. You say that I've seeded tier 2 towns, but the unit economics just doesn't make sense at this given point in time.
But assortment wise, good you mentioned that. Now everybody has replicated each other's assortment. What I get on Blinkit, I get on Swiggy also, and maybe on Zepto also. Now product offering has to expand. We recently saw Swiggy tie up for cylinder gas also distribution, and so now they will have to find innovative ways of increasing their product offering and cracking that code on unit economics.
See, what works in quick commerce, and this is what I have learned over the last many years, is what are the success factors for a quick commerce. One is that you should get that assortment. You should not be seeing an out of stock. That really repels the customer the second time. First time you'll agree and they say, "Isme to product hi nahi milta hai."
I totally agree with you.
And the second is 10 minutes.
10 minutes.
So you have to get your assortment right. And mind you, the customer is today spoiled for choice. You even want air conditioners in 10 minutes. I don't know how you're going to install it. But that is the norm.
But that's what it is. That's what you're moving to, right?
So houses. Okay. Before you want to move on to the next one.
Yeah, we were just talking about the next. I mean, we were thinking of 3 things that we wanted to discuss.
Yes.
We discussed oil. We discussed consumption. The other thing is pharma. Yes, quick commerce and pharma is also becoming a play right now, where you have pharmaceutical products, medicines, and everything that is available as well. But what about the threat that the pharmaceutical companies are facing from Donald Trump? I wouldn't say tariffs, because time and again, that gentleman has come out and said, I am going to tax or I'm going to put in tariffs when it comes to Indian generic products. Do you think it is really a threat from here on? Because the way I am looking at it, or in fact, yesterday when the comments came in as well, I was of the opinion that yes, probably the sector would react negatively, but it would be a sentimental reaction because they're talking about a horizon of 3 years. Your views?
No, so America is not a low-cost producer.
Exactly.
So, 2 major important factors in terms of low cost and high cost.
Yes.
One is manpower, second is power or energy cost. Both these things are far expensive in the US than what it is, let's say, in developing parts of the world, including India. So, and economies of scale. Batch processing is another ball game, bulk manufacturing is another ball game. China is a leader in bulk manufacturing, bulk drugs. India is a leader in batch processing formulation. And mind you, the customer in the US, in spite of paying a lot of intermediation charges, because from here we supply it to the main distributor, from there it gets distributed. So in that, the value chain, the biggest value capture is with the intermediary, who is a guy who is in the US and is a US entity. So I think at even today's prices, what we are sending to the US, the margins are abysmal.
Yeah.
We don't really make too much of margins. If this tariff was to come through 100 and 200, these guys will stop supplying to the US.
Of course.
Yes.
And then what happens to the supply chain? What happens to the patients?
They can't afford it.
That's the point.
Yes.
So that is what the markets are reading into. That obviously it has been prescribed, but whether it's going to get implemented.
I think it's bluster. I think it's bluster.
I think, it's more of a headline risk right now, the way I put it. Maybe an execution risk next year and a structural risk only if this entire policy sails through by 28.
So, good point.
So most of the companies are of the view that with lobbying, US trade deal is still on the horizon. This will also be one of the cards. All put together, it will not go through.
And I think the only reason why Trump is even doing this is to some extent trying to actually get that capex from India to the US.
That's it, basically reshoring.
That's the only reason
bring
that he's
manufacturing
doing that,
back to the US, lower the trade deficit. All those things are intentions, but I don't know how far it is practical.
I think it's saber rattling, but interesting that we're here talking about generics, right? And I think it's a distinction that we need to draw increasingly when you look at the pharmaceutical space in India. We're saying, are you looking at these guys and you're saying, okay, their time has been great and they have in the past been wealth creators, but you just said it, the margins are absolutely abysmal, product to product. Even the GLP-1 opportunity it's been talked about, eventually will become commoditized, and so they'll be scrimped on margins. And so, do you want to look at them, or do you want to look at certain other players that are in the more chronic spaces that are growing in India? Are those the companies to look at? Do you splice? Specialty.
Generic, commoditized.
Yeah.
You want to be in the building block chain, that is to say APIs and KSM, which goes into specialty, or you want to be a part of the research value chain, which is CRDMO and CDMO.
CDMO.
Because India gets that advantage on China Plus One when the Biopharma Act has got passed through in the US. Wuxi Pharma it's all blacklisted. India.
So biosimilar space also plays out.
Correct.
All right,
we are moving away from small molecules, large molecules and biologics. There is where the value is.
So is the House really united on this? That
I think it's
a
bluster.
little far-fetched.
I think it's bluster, but there's so like I said, you're going to have to distinguish. Generics are still on their way down.
Right. So, Manish, to sum it up, like which are the themes now developing you think are looking much more attractive? Of course, banks, a lot of people say that, a very attractive valuation, but the downside risk is also there. What, in your view, in terms of the valuation at present moment is looking quite attractive as a theme and as a sector?
So, you want to be in resilient sectors because politically, geopolitically, we are all over the place. There is zero predictability. The second time around when this thing has got breached, you don't know when the solution is going to be there. Oil is on its way up and so on and so forth. You want to be in resilient sectors. Of course, the headline sectors which is making all the news is basically your high-tech manufacturing, which is aerospace, defense, semiconductor, medical, or you have data centers, or you have energy transition, the value chain, a lot of value is going to be. The problem is to find actionable ideas because of valuation. It's a 5-year story, everybody knows that. Near term, what happens? You have to pick and choose. There is one. But I think the resilient sectors, which I have found out this result season so far, in the middle of this uncertainty, one is the financial sector.
Okay. Yeah.
12, 13, 14 P multiple on the banks, large banks, mid-cap banks, you take your pick. Capital markets, everything is so resilient. We don't tend to feel any pain in terms of volumes going down. Whether it is annuity businesses like AMCs or broking or wealth management, things are fine. And the third is basically your consumption, which I think is a dark horse. It has not done well. Select pockets are likely to do much better in this space.
And valuations also, a lot of places are reasonable as compared to what we've seen.
And the last but not the least, and think about this, I don't know, but this is just blue sky thinking. IT has fallen quite a bit.
Yeah.
Rupee is at 97, right? Anti-AI play, favoring
Yes.
Indian IT services.
Yes.
If not a structural bounce, there'll be a pullback.
There'll be a pullback.
So,
Okay, so certainly interesting ideas. Manish, thank you so much for taking the time, and always a pleasure having you. Certainly in person, in studio, so we hope to have you over much more
And the
often.
themes and the sectors that you said, and you so vehemently backed the consumption space, I think that was really commendable. So you
Thank you.
really have a solid commitment to the consumption story of India. But with that, it's a wrap on this edition of Editor's Cut. Thank you so much for joining in, and thank you so much, Manish,
Thank
for
you.
being here. Thanks.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
You come from rural households, have gone out and had great opportunities, great education, and then decided to form this company.
I come from villages in Haryana. I used to play taekwondo. I got India a bronze and a silver.
Wow.
पर ecosystem was such कि अब इसका खेलना कूदना बंद करा दो। जब 9वीं क्लास में गए तो और प्रेशर आने लगा कि यार अब तो लड़की की शादी करा देनी चाहिए। I went to my father. अगर आपने मेरी शादी कराई तो मैं घर से भाग जाऊंगी।
Where did the idea of Rosanna start?
We were working with the several state governments, and for that we used to travel a lot to the villages. When I went there, I really stood at that counter. Almost anything I wanted was not available on that counter.
The village that we are talking about is similar to what you see in Panchayat.
Fulera.
Absolutely.
So basically, you want to get choice to the equivalent of Fulera. What is the most hit product that people really wanted and you didn't expect?
People kept on ordering Maggie, and then we had to start saying no. So we tried to offering them कि पास्ता खाओगे? फोन करके बोला। हमने उनको YouTube वीडियोस भेजे पास्ता कैसे बनाते हैं। In few months, macaroni and penne became one of the highest selling products in the category.
You met, clearly vibed as co-founders, and then I think a year ago have gotten married as well.
We spent so much time together. It would have been very tough for anyone else to survive with us.
I thought there was very little scope in terms of us looking outside for marriage. Business was the romance.
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशन